Gambell, and we're getting the broadcast started here for Thursday, March 19th, 2015. Good morning, Mark. It's good to see you today. I was a little concerned there for a second. The screens had been shared for like 15 seconds, and I hadn't heard from you. I was like, surely we're not having issues today, but Mark is always there instantly pretty much every morning, and it's good to see you guys. I always appreciate the welcoming crew. Good morning, Jim, Eric. Good to see you guys. Good morning, Rob. Second Queen. So as we get today started, good morning to those of you that are joining us from the open house as well. I think this is a very interesting point in the markets. I think it's a very interesting day to be an options trader, and I will be doing my best to relay to you what I view on a day like today. So as we get today started, and as always, I'm going to try to keep up with the questions while still keeping a decent flow with the morning's action. I always like getting started with a review of the futures markets, and the main thing, if there's one thing that I could keep in the back of your mind for the S&Ps, is to remember that this weekly squeeze is a very big deal. When John was doing the videos last night, he was talking about how, we suddenly get this bar in the spiders, and now we're suddenly bullish. And I just feel like the argument to that would be we're not suddenly bullish. We have been extremely bullish for a long time. These pullbacks are welcome. They give us an area to start accumulating our next bullish positions, and I really think that you want to approach this market from the buy side. Now, with that being said, is this the most opportune time to buy it? I think it is very tricky. Now, I don't know, but I would rather believe the markets are going to be under wraps today. Now, I don't know if it's going to happen, and I'm going to try to use the market internals and everything else that we use each morning to evaluate that. But I look at it from 2 points of view, because from one perspective, everything that was said yesterday was very dovish. Technical signals I'm following on the weekly chart look to explode higher. But there is this way around, especially monthly expiration, that the markets can kind of have these head fakes in both directions. A lot of it has to do with the unwinding of larger positions. A lot of it also has to do with funds trying to kind of manipulate prices to work premium erosion, to take advantage of everyone that jumped in and bought calls yesterday. So it's the idea of wanting the markets to go higher while still thinking that they can have a little bit of a lid on them, and that's the way I'm approaching today's session. Looking right here at a 15-minute chart of the S&Ps, we can see that the high that we pushed up to during yesterday's cash session is still currently the high. I always like to take that level and then take yesterday's spike low, run this from it, and then compare that with the decline that preceded the rally, and then this gives us our most immediate level of support for the S&Ps today. So as we run these, notice how the symmetrical decline from yesterday's Globex session into yesterday's low, projected from that high, is exactly at the daily pivot, exactly at the snow line, and then also exact symmetry. So I see the S&Ps as having a very important zone there at about 2082. That's 4 points lower than where we're currently trading, and it's the area that I'll be focused on as we get started. That's one of those things where when you start the day, you say, okay, S&Ps are down 7. They could fall another 3. That would put us down to this key support, and then we look for something to happen to it from there. And I use the pivots off of a spreadsheet, Rob, but then as opposed to having code that calculates them, I just draw those on there, primarily just because I'm tracking them in the S&Ps and NASDAQ. If we get over and take a look at the NASDAQ very quickly. Not sure why I'm hearing myself. Looks like that was fixed pretty quick, but the NASDAQ essentially follows a very similar theory. Now on it, the daily pivot is a little bit further below the current price action. I'm going to go ahead and start off with it just on a 5-minute chart straight up. This one is also a little tricky for me right here, because from the daily time frame, you have a 786 retracement. This comes off the major daily swing. From one perspective, the 786 is very minor. Having cleared the 618, it bodes well for a move into the next extension. But like we were talking about yesterday, when the NASDAQ made the run into this area, I prefer to look at them as zones of resistance. You can see how we did get kind of below it before the market closed. Well, today we are poised to open above it, but it's just that decision where does this end up finding support and taking off from here, or does it instead turn to a little bit sideways and then try to extract that premium from Thursday into Friday? So That's what I'll be watching there for the NASDAQ. And then I'll check that up for you again here real quick, Jim. I've got that at 2081 half. We've got about 3 minutes here until the cash session opens, and I usually will go on through the rest of these futures markets, and I am still going to recap them. But kind of some more of those just thoughts that I have in the back of my mind. And if we're trying to determine this morning, does the NASDAQ find its footing and rally on into new highs, or do we instead kind of pull back here and trade down into the daily pivot and enter more kind of lackluster trading? Well, I'm going to keep an eye on Apple. It was poised to open a little bit higher this morning. I am a little bit cautious on it right here. I actually think it's an area where Apple could fail, but we all know that this chart is extremely bullish. So I'm focused on it from an intraday perspective. If you had to force a trade out of me right here, it would be selling the 129 call spread. But that is super aggressive, and I will feel better about that idea once I get a feel for how the market is going to open. Taking a look at Facebook, this stock is another where it's just a very dicey situation right here because, in one vein, you're looking for the pin at 80 to take advantage of that high open interest, and that is absolutely still there. But then in the other, you have to keep in mind that your all-time high in Facebook is only $1.20 from where we're currently trading. So I always like to have these levels even when I'm viewing intraday action. Go back in and edit this. Just label Facebook's all-time high. If we put the name and the price on the right while ending the left extension, that will show you exactly where that level came from. You'll notice that from the previous swing high to swing low, we did pause right at a 786 retracement, a fire line, and a broken trend line. So I do think these are all decent areas that Facebook could pause. The opposing part of that analysis is that if it really is able to get something going off this squeeze, it's going to take off. So Facebook is another one where I'm kind of approaching it like I just got done discussing the S&Ps. I would like to see if I can get off some March pinning trades. If instead it acts like it's just going to explode higher, then I will step out into April and work additional positions there. But at the very least, our call debit spreads have come through for us. So cash session is just now getting ready to open. That Facebook all-time high, Dever, is at 82.17. And I always write this stuff down because I start the day with an idea, and I think that Facebook is going to hold below that for the expiration. And then I always, come back and see what the resolution of it is. Notice that even while I think prices will remain capped, I have not put on anything to the sell side. And I think that's an important thing to note with that chart. So the cash session is now open. Start taking a look at how these markets are going to play out today. We talked about Facebook in several different veins yesterday. Come over and take a look at where the call debit spread is trading for. Spoke about this in a couple different times. And this is getting into the area where, essentially it's just time to take it off. I like looking at this for situations where you can get close to maxing out the spread. Since it is a call debit, if I just had directional calls or something, we could have been a little more aggressive. But in this case, there's really not a whole lot of reason to keep holding it. Given the fact that I gave it one more day, I was able to squeeze a little bit more profits out of each one. But at this point, there is no reason to keep holding this. It's trading for $1.92. The maximum theoretical profit on it is $2. You have to work with the spread a little bit, but I'm going to close out all 10 contracts here just in case Facebook decides to do something crazy into the afternoon, and more importantly, because taking this risk off my table will give me other places to focus. And people will always look at this too, and they'll say, well, can't you just continue holding the call debit spread because you have made the spread, and if Facebook keeps going higher, your short option is protected by the long. Absolutely true. But it goes back to, one, not wanting to have to pay the exercise fees, which your broker will charge you, and two, just having trades that are at max profit off the table. There's no reason to keep holding those. So this trade is to close. I was filled at $1.89. That is exactly right, Thomas. So we've got that trade done, and now we start looking at it to say, is there other opportunity here? Well, before I just jump off and start losing my mind piling into Facebook, I would like to see how the rest of the market is doing. So far, the vol spreads are not really doing much here. S&P is right there near zero. And remember, too, with this, obviously the markets have only been open a couple of minutes, so you have to give those a little bit of time to be established. What I would really like to see is that the indexes got down here, tested their pivots, and then found their footing from that. It's just a little better when it works from those levels. Obviously, if it just takes off, well, I've been on the bullish side, so that is all okay by me. I find this to be a very aggressive area to do something where if you wanted to look at something like an NDX put credit spread, these are kind of unique because they have a different expiration than your typical cash settle or your typical options markets. So these contracts only have one additional day to trade. The downside to them and why I typically don't make these suggestions are because they are terribly illiquid. For the trader that is, skilled in trading the NDX and looking for an opportunity this morning, you do have a snow line right there that we're holding very well. Apple has, for pretty much all intents and purposes, been ignoring that 618 retracement. I will remove the extended session now and see where that's trading. And this is just why I've been saying with Apple, the idea would be to sell the call credit spread against the 618 retracement. Since the chart is so bullish and since the NASDAQ is doing so well this morning, I'm holding off from that idea. So, but then you would also flip and say, okay, could you sell a put credit spread? If I sold a put credit spread in Apple, I would want to do it when it was well above 129.03, confirming the breakout from resistance, and I would step out into April to do it. I do not think that is an expiration play. Looking a little bit more here on the Facebook idea, the thing with Facebook, and notice here too, we have not stepped in with anything to the short exposure. We have covered our bullish exposure, that way that profit is locked up, and now the decisions you're trying to make, and this is extremely, extremely risky, and I cannot illustrate that enough, but it's also a big area of opportunity, because if Facebook is to break out, what options might we look at here? Well, you're able to find a delta 70 at the 80 half strike for $1.08. The thing about trading this close to expiration, it will scare a lot of people. It's not everyone's cup of tea, so to speak, but you're able to find a lot of unique opportunities if you're willing to accept the risk. Say for example here, the $80 calls, they're trading at $1.50. You're not really paying very much extrinsic value. And then if Facebook were to have a $2 move, well, suddenly, your $1 options trading for $3, and that's a huge amount of, potential wins. I look at this and say the same thing, where if you don't like chasing a market, you don't like, trying to participate in these things, do not feel forced to. But when I sit here and I see Facebook now just pennies away from that all-time high, I've got to work to try and get some of it. So if this rolls over, then I will have to work to either exit the position or continue to, work around it. But I see this, I see the tree line or the skyline at 83.10 and our extension at 83.28, and those look like very favorable targets. Now, another way you can look at this, and this is just another way to show you kind of how these options work and ways you can use Thinkorswim. It will also give me a second to kind of see how the market is going to act, but I like using this depth of market, putting the actual option contract that you are focused on trading in there, and now we can see the bid ask for those. This is a very important part of why I do not like chasing markets, because you'll notice here you've got 162 by $1.72. You can give up a full 10 cents in trying to chase an idea like this. So I'm going to keep the option chain on the side. If the market really starts to firm up, I think that will be a go-to. Right now we have the ticks that are still below zero, vol spreads that are very lethargic. The VIX is up 5%, to be clear. If the rest of the market was showing the same trends as Facebook, then I would be piling into Facebook. Since it's not, I'm trying to stay a little patient around it. So Apple pulling back a bit. Facebook approaching that all-time high. Tesla giving me a little bit of a pain here as it rallies up into 202. I will be looking for fresh resistance on that one as it continues to move. Right now we're looking at about 203. I might be able to get in another call spread against it, but I am not going to be buying anything there. If you really want to protect yourself, then you could sell the put credit spread. Right now I'm focused on Facebook because I think that's where there's opportunity. Yes, this is a very risky place to be trying to get it. But like I said, I think it's the area where we have a chance to move this morning. The ticks have rallied back up into 0. So the way I'm going to do this, just to show you guys, is I'm going to take a pilot position. That means taking one contract, just so I can have a little bit of skin in the game and see how Facebook is acting. This is not a core position. And this is not something where I'm getting in. Obviously, it's not my full size. It's just to kind of keep an eye on it as it's moving there. If it rolls back over, it is not going to hurt me, and it gives me a place to work from. If it rips through the new highs, then that's kind of the same idea. So working this in Thinkorswim. I love using these through the dome. It's a little tricky sometimes because it's technically designed for futures. I found that it does work well with options, but it's being a little quirky this morning. So let's just come back to the chain itself. So NASDAQ perking up, obviously that kind of helps. Looking here, you can do the exact same things. We've got 171 by 175 on the bid ask. The idea too that if I'm just going to take these, I can pay a little bit closer to the asking price. $175 by 179. S&P is still hovering just above their pivot. NASDAQ didn't even get remotely close to testing its. So let's start working this idea with a little more conviction. I never was filled on that first contract. It finally went through. That dome is just acting very odd today. So this is the pilot position that I'm working. They are the Facebook $80 calls that expire tomorrow. The idea with this is that it is a day trade. If it breaks out and has an awesome move, I could hold a piece, but it is a pilot position. Let's see what we can get going there. And then are you ever concerned that your size may be too small to offset the commissions? Then the big thing with that one is your commission structure. If you're paying a ticket charge along with each of your entries, then yes, doing it this way would be terrible. I am paying on a per contract basis, so it does not have that same effect. But that's a very good question and something you've got to be on top of if you have a different commission structure. So as we continue looking through a few more markets, I've taken that very tiny position in Facebook just to see what it can do today. I would be more aggressive and have more conviction in it if the ticks told me to. At this point, I'd still like to see the S&Ps test their pivot, and the internals have been very lackluster. This is also kind of shifting to that idea that I shared this morning, where instead of looking at this saying, all right, it's going to be a rip-roaring rally and a continuation of yesterday, it may actually turn to a little bit more sideways chop to take advantage of everyone that pulled in here buying calls yesterday. So that is still kind of the two things that we're weighing out as we go through the charts this morning. So things are relatively quiet as we get the day started. Like I said, I am keeping an eye on Tesla, and I will be adjusting that position. Looking at Netflix, it's typically one of my go-tos for expiration, but at this point, I do not see a really great trade in it. If the markets are going to firm up and rally, the idea of selling the 425 put credit spread might work out. There might even be a 430 butterfly, but I'm being very patient with those ideas. Still keeping an eye on Google as well. Costco acts great today. We were looking at those short calls earlier in the week. I did not tack on the additional ones, but obviously it would be nice to see it pull back a bit. If we wanted to sell the additional 2 there, we absolutely could. So what we've been doing with Costco is working the daily squeeze. We had some put credit spreads that we took off yesterday, and it's kind of helping out today a little. And then we're looking at the 150 calls, where we were able to create a diagonal on this based off the April 145s. I have 2 of those that I already sold. They're trading up $1.14, so we're about 34 cents higher than where I initially initiated the trade. Do I still like the idea? Absolutely. I think cost has a decent chance of pulling back to 150, especially given the nature of this market. It's just kind of a small position, so I'm not going to be sweating it too much, but if you wanted to tack on the other 2, I think that's a fine idea. A lot of times what I will do too, after I look at my immediate trades that I'm looking at for the day, I will adjust this swing workspace so we can keep an eye on the futures markets, but then also look at individual tickers. I love the way crude is acting today, by the way. We hadn't looked at too many of those futures markets, but I will. I do like what we're seeing from those today. So on Costco, just remember that this pullback, I think, will allow the 150 calls in March to expire worthless. That pullback will allow you to start getting April positions if you have not already. And I am still a really big fan of that one. Some of the others that I like to look to during monthly expiration, LinkedIn, a very mixed chart. Yesterday I said that if you had to force a trade out of me, it would have been the short 260 calls, but we held off on it because the chart is so mixed. I feel the same way this morning and really don't see a good place to execute on in LinkedIn. Going through a few others, Goldman Sachs sitting at 190. Okay, 190 is a decent kind of round number, but it's not really as good as something like 200 might be. If you start thinking about viable trades from this point, I'm not wild about the idea of the short 190 call spread, but the thing about this too, and the thing about understanding expiration trading, is to start thinking about your options from their intrinsic value standpoint. So when you look at the 190 call, and you might be asking, why are you going to sell that if it's in the money? Well, the 190 is trading for $1.74, but you're only 64 cents in the money. So you're talking about an entire dollar of premium just for one day, just holding that into tomorrow. If it got just the slightest little pullback there, that could suddenly become very profitable. The problem that I have with that is if I'm going to try and trade it with the trend, well, then I should be selling puts right back down here. So kind of an idea around expiration versus an idea around what would be the longer term trend trade. I am not brave enough to get short Goldman Sachs right here, but that is a trade that is setting up. NASDAQ pulling back a bit. Of course, I could always defend that single long call that I put on by Facebook by selling one against it, but I took the micro size, because it wasn't going to bother me if it did pull back. You've got the VIX, that's a very precarious position. Apple's still trying to hold against that 129. There again for the daredevils and the people that truly understand the analysis that I'm looking at on that one. If you want to work the short 129 calls, I think there is a trade there. That is a risky trade. And then any thoughts on Yelp for a pin at 45? I have a 2-wide put butterfly. It's doing pretty well. I know we talked about that one earlier in the week, and you've done really well with it, Mark. At this point, I can't... I guess what I was going to say, I can't really suggest anything other than what you've done. I think you've got a great trade into this point. Now, will it pin there? This is the exact same, well, it's a very similar pattern to, but the exact inverse of Facebook. Because on one hand, I think this chart is getting ready to get crushed. Will it at least hold on into Friday? I think it will, but that's kind of where you're having to weigh those two ideas out. So if you have any, issues or worries about continuing to hold it, I would just get out. You can always take off 3/4 of the position and try to pin the remaining 1/4. So market's finally starting to show some signs of weakness. If anything, at least I can point out that we didn't come in here and buy this yesterday, because you can imagine what that would feel like now. Now we're just trying to determine, is support going to hold during the pullback and yesterday's strength come back for us, or is this a bigger decline? And in the meantime, I will continue looking for other opportunities. But like I said, those short trades are just so counter trend and so, right there at the money. They're not terribly easy recommendations to make. And then Dan, on the structure of Thinkorswim for your commission charge, you can ask them to change it. And you should definitely do that, and you should try to negotiate your price while you're at it. And then you mentioned LinkedIn. Would you consider a pin at 260 or 259? On that one, Mark, remember that the pins are not going to be at something like 259. They're going to be at a solid round strike that you have options around. And that's kind of the key concept. If I say this in the room a lot jokingly, just because I try to illustrate strategies where if you do have a bigger account or you're familiar with this, what would you do? Well, if I had $1 million, I would sell the at the money straddle at 260. That's bringing in almost a $4 credit, and you have 1 day of life until expiration. That, it's trading for $4. How much is it truly worth? It is truly worth 28 cents. And that huge discrepancy is what we try to take advantage of. Also remember, I talked about kind of my 5 points for trades over the course of the next couple of days. Right now we're in point 2. So do I have to put on every trade I want right now? Absolutely not. Remember that this afternoon, John will be trading with you guys, and there's a lot to be said for being able to get information from the day. Right now, the vol spreads haven't told me anything. They are perfectly flat. The ticks have been noisy. So we just wait. We kind of have these ideas, and then once they can confirm those, we can start stepping in with them. But what I'm trying to say is that the biggest theta decay for these spreads will come from Thursday into Friday. So don't feel like you have to put them on Thursday morning. Now, if Thursday morning we're just ripping higher or there's actual big movement, well, then I want to take advantage of that. But if we're just sitting here marking time and trying to make our decision at support, well, this isn't quite the time to start piling into it. So hopefully that helps answer those questions on the idea behind those spreads. No problem, Dan. And then exactly, Mark, I think you've got a good idea with that butterfly. LinkedIn is not terribly liquid, which does help with those butterflies. But good question. Cost pulling back very nice. I think that pin looks pretty good. Glad to be out of the put credit spreads. Google is still in a very dicey spot. As it pulls back, I'm going to set up support. Tesla initially held 203, but it is definitely ignoring what's going on with the market today. And Netflix still not at a very good place to execute fresh trades. Facebook is holding its bid, but I am aware that the NASDAQ has not tested its daily pivot yet. If we look at Alibaba, that is poised for a reversal. And these are the signals, and I don't trade these a lot. Like I said, I do very much prefer trading with the trend. And there's no arguing that this trend is bearish. Switch this back to the weekly chart. But when you see this daily starting to form like it is, this is everything that I like to see for a reversal. So I think Baba is poised to move higher. Then you ask, okay, is that a swing trade or is that an expiration trade? That would be a swing trade. There is no way I would take that with March contracts. I just don't think you have enough time to be right. Is there an expiration trade based off of anything else? Well, that's where I like to look at the open interest. I will drop this back down, and I use several different layouts here because my primary one is obviously what I use throughout the day. It has all the information that I like to see. But when you're pointing out a specific topic, in this case evaluating open interest, some of these other chains will work a little better. So Alibaba is rallying. I am curious to any strong open interest on the put side. It's where I can look to for synthetic support and potentially a strike to sell against. I see the 85s stand out, but those are trading at 25 cents. There is nothing you can do with those unless you're willing to sell them naked and potentially take assignment on the shares. So I've got to pass on that one as far as a immediate trade goes, but I do think there's opportunity stepping out into April on that. Market's still a little soft here, it's such a tough kind of mixed bag sometimes because, this morning you're in the shower, you're getting your prep talk going, it's open house, I'm ready to trade and I'm ready to, evaluate this stuff as best I can. But then you get here, and if the market doesn't give it to you, you've got to just cooperate with it. So that's a little bit of what I'm facing right now. I've got plenty of these things that I'd like to look at, but it's just not quite the conviction that I am looking for. Tesla does continue to kind of perk up here. I need to pay attention to it. If it starts getting much more aggressively above this level, we could always sell the 200 put spread to tack onto it. With this expiration style trading, as I mentioned, I prefer to try and hold these trades because right now Tesla does not look good against 200. We could wake up tomorrow and it's suddenly back down to that price. Our trade would have worked out perfectly. But if you take a stop, then obviously you can't participate in it anymore. As I look at the option chain, you've got the 200 that's going at $1.30 and the 202 half that's going closer to 220. If this market explodes higher, the 220 or the half price strike will give me more of a credit and also give me less risk in the trade. It does not work as well with the pinning concept. If I step it down to do the 200 195, that's going at about a 91-cent credit. And that's not a bad way to give myself a little bit of defense. Now, I'm not crazy about this trade because it is counter trend. I preferred to keep this, trading with the trend essentially. But this will allow me to keep the position on and cushion it while it goes against me. Then, if this starts to reverse later in the day, I can take the put spread back off. Alternately, if I end up holding both into tomorrow and we can pin at 200, then that could be a solid trade. So I had to do something to help kind of cushion or defend Tesla. Since I do not want to get out of my call spread, I sell the put spread to help mitigate that risk. So I always try adding little notes just so you kind of get a feel for what the thought process is behind the trade. Makes it much easier than if you were to have nothing on and then start trying to take positions. Let's look at this Facebook chain again, because Facebook is starting to perk up after the S&Ps have tested their daily pivot. My single contract is up 10 cents, so nothing to write home about, but at least gives me a place to work from. We're about to push up through this all-time high. The options are going at 190, 192. I do not like buying them at these prices, but in these type of situations, sometimes you have to. The NASDAQ is still holding right above that voodoo line. Yen, relatively quiet. Most of the commodities today. Bonds are bid, but I am going to work this for this breakout play. So this gets a little trickier buying them here in the chain like this, and it makes it a little more difficult to post. It is still filling me, but this kind of goes back to where if you know what you're doing with this type of execution, you've got the order that I shared as my pilot position. Now you can scale into it with the size that you feel comfortable with. Right now I have 2 contracts on with a mid price of $1.87. I am looking for this to spike up into the skylines, which are just overhead, and then if things get really interesting, well, then we could always run into our extensions. So come back to our daily. Once again, that all-time high is at 82.17, just about 30 cents overhead now. The 1272 extension of the most immediate daily swing will take us into 83.28. The swing off the broader swing will be much, much higher. So at this point, if Facebook can break out, I'm going to look for that run into 83.10. I think that's an area where we'd be able to kind of flip it for that, relatively quick trade. So we just tagged that high. This is where I like being able to kind of focus on one idea. It's actually a penny shy of it. As Facebook approaches those prices, the rest of the market seems to be doing okay. It is not stellar. Netflix is starting to move there. Those are the types of trades too where, like I said, if you want to get into it, I think there is a trade here, but you've got to do it with size that if Netflix starts to roll back over, it's not going to be a problem. If we take a quick look at that chain, ticks still right at 0. Facebook pushing through just a bit there. Still working a few more of those Facebook calls. But really, this is kind of the point where you've got them if you want them, but I would not be chasing it up here. Now we have to start thinking a little bit more from the perspective of taking profits. And really, the dome is just not working with me all this well this morning. I love doing it this way because to see the bid-ask spread of the options is very valuable, and I think it helps people understand where you're coming from, maybe a background of just thinking, okay, something has a price. Can I not just buy it at that price? Well, with options trading, you've got a bid-ask spread, and right now it's 10 cents wide. It does a very good job of visually illustrating that, but it's just not executing very well this morning. So I managed to get an entire 2 contracts there in Facebook just because it was, there again, just was not filling me. I will hold those and try to get up into 83.10, but I think it's very hard to buy any more of them here. I'm not that aggressive. So Apple continues to remain weak, which may be putting a cap on things. There again, the importance of that 618 cannot be understated, because everybody that bought Apple thinking, well, the market's doing okay, Facebook's breaking out, why isn't Apple participating? They probably don't know about that 618 retracement. Coming back to Netflix and evaluating this one, this is the same thing where if you've been trading for any short period of time, this is probably not for you. But there is a huge lesson in learning and understanding that the 425 puts are 30 cents out of the money and are trading for $3. That is huge, huge premium. And you might say, well, to sell something this close to the money, isn't that risky? Without a doubt. But trading is risky. Some people might say, well, yeah, you've only got 1 day of life left, though. That makes it even more risky. And I would absolutely agree. But that's always the trade-off in life, right? If you're going to be safe and contained the whole time, well, then you miss out on a lot of opportunity. If you're going to jump out there and take risk, well, then you'll be rewarded for it. Another way we could look at this from a very conservative perspective, because if you say, okay, I'll sell the 425 with you, but I'm not going to take the $3.20 of risk. Okay, that's fine. Let's use a stop below today's low. So if I'm right, we get to participate in the move. And if I'm wrong, we can just take a stop. So today's low, we'll mark it off here at 421.79. It's nice too because we have a 39-minute squeeze that is backing us. So that's definitely a signal that you can use for your bullish confirmation. The 2 trades that I was evaluating here, and I always like to jump back and look at the markets, look at my ideas, notice the ticks kind of popping up here. This can be very deceptive because on one hand it feels like the ticks are popping, but on the other hand they're just moving into 200-300, and that is still extremely noisy. So don't let that get you too excited. If we really want to get crafty here on Tesla, selling the 202, 207 call spread on a pullback would be an interesting way to add to it. Stay patient with that idea. But as I continue looking at the markets and Netflix, the 2 ideas that I had discussed, one is that 425, 420 put credit spread. If you'd prefer to limit your risk, you could always sell it $2.50 wide. That would be a little bit more of the higher probability trade than the next one I'm going to look at. So I'm going to go ahead and take a few of these with the potential to add into them, work my prices. And then I'm going to show you the other trade that I'm looking at here. This would be considered the higher probability of the 2. I am offering that a little bit closer to the mid price, so it may take a minute to get filled. And of course, if Netflix just takes off, then I won't be filled. But this is at least what I'm going to start offering out. And then Kim notes that the Russell and the NASDAQ both have 15-minute squeezes. Thank you, Kim. That is a great observation, and we will take a look at that. I haven't been doing much with Celgene lately, Leslie. I know a lot of people have. I have not been one of them. You're absolutely right, Rich. Sitting on your hands is okay. And especially, too, from, like I said, and I try to illustrate each of these points, because if we want to take advantage of monthly expiration, don't forget that selling them on Thursday afternoon is a great time to do that. So I've got my offer in on Netflix. I have not quite yet been filled. Facebook has broken to a new all-time high, and I've got some like I said, not quite as much size as I would like to have, but when you violate something that you really like doing, which for me, buying something that is already extended, already kind of making its move, is a little out of line. It's a little aggressive. Okay, if that's what you're going to be doing, scale your size back. I would much rather be in a good trade with smaller size than a bad trade with too much size. That may seem obvious, but when you're in here executing in real time, it's just kind of those thoughts you have. So coming back to Netflix, we know we have a 39-minute squeeze, and I just got filled on my partial size put credit spread. I was posting this, and then I was going to look at the butterfly. So there's the first piece of Netflix. If it gets much below today's low, I will look to reconsider it. I am lenient with those spreads. So far, this looks like this action has taken a little bit. It's a little bit of both. It's somewhat of that argument of the breakout happening in some places, and then it's the, staying sideways and chopping in some. So just trying to pick our battles, so to speak. The next trade that I was looking at here with Netflix was looking at a butterfly. Now these butterflies, and the main reason that I like looking at them is because you've got a nice fire line up here at 431.93. A great way to keep yourself in check is to ask, okay, $4.24 is where we're trading. 431 is what you're suggesting as a target. Is there a chance Netflix will move that much in a day? Well, Thinkorswim, via the options pricing, suggests that it will move $8.50. So that's not far-fetched at all. If we look at the idea of buying the 430 fly and we do it 5 wide, I like to try to get these for a third of the max profit. If I can position my strikes correctly here. And that looks interesting. So the 425, 430, 435 is going at about 95 cents. These types of trades, when you can get them that cheap, the first thing you have to ask yourself is, what is my break-even price? Well, if we pay 95 cents for it, our break-even price is about $1.20 higher. So Netflix would have to rally for us to make money on this. But if it's able to get up closer here into the fire line, we have very good profit potential. We are risking $1 to make 4. And what I like doing with these trades is buying them here, selling half of them tomorrow at a double in a perfect world, then holding on to the other half to see if you can actually consolidate near 430. And then that's where those trades can really be lucrative. So I'm going to keep an eye on it here. Obviously, the reason that I hesitate on that is because if Netflix marks time or trades sideways, that trade will lose money. The put credit spread is much more forgiving in that respect. So the butterfly idea is one of those to have in the back of your mind. If the markets really start ripping here, if you can still get that for about $1, $1.10, I think that's probably a good place to put it on. Google is still very strong, but I have a hard time selling any type of a spread at these levels. It is just not an attractive price. I got filled on part of my Netflix spread, so that's acting okay. Took the put credit spread in Tesla to help cushion the existing short call spread. We'll see if it can get back down to 200 by tomorrow. Remember I talked yesterday about Apple too, where if you haven't seen this type of pinning action before, make note of it. Come back and reference it when we get Friday's closing price. And I think that can be a very eye-opening experience. So, love Google, but not really at a price where I can sell anything. Costco acts great. Netflix is a little back and forth. Tesla, I've tried to neutralize my delta a bit while we look for Facebook to tag the next skyline. Fall spreads are still very lethargic. VIX has given up a little bit of its opening bounce. And then the expected move in Netflix is $8 tomorrow, so is $3 a premium enough Also, $3 of premium on Netflix is only 1% of the stock price. Relatively, it's not that much extrinsic value. I would argue that one with you, Theo, and I would just say that, you've got a lot of good points there. And your first one that you point out is to say, well, the expected move is $8, so why are you selling it at 425? Well, I'm selling it at 425 to get a better credit. If you stepped the full distance out of the money, because you're saying, okay, if we're going to move $8, well, then wouldn't you look to sell the 417 half? Yes, if you were working an out of the money, higher probability strategy, that's absolutely correct. But the problem with that is you have additional risk. That might be something where John would take it that way, sell it further out of the money, get the higher probability. I prefer to look at it where there's less risk, but then the lower probability. It's also very interesting because, and you say that there's not much extrinsic value here. Well, I would say that it's huge, and it all goes just back to that thought process of, if this option were to expire right now, what would it be worth? Well, it would be worth 85 cents. To me, 85 cents versus 370 over the course of one day, that's some pretty serious cash. Market's still terribly sideways here. Facebook broke to that new high, but now it's just kind of, not all that exciting. Tesla's my only headache today. And the rest of the market still just can't make up its mind. So let's look at a few more. If anything starts to perk up or get crazy, we'll come over and look at adding to Netflix or maybe putting on a couple other spreads there. Notice how the yen has remained relatively bid this morning. That's kind of keeping a lid on things. And then, Larry, getting into the dome for the options, it's a little complicated. I'll just tell you, you want to copy and paste the option code itself and then enable the active trader window. If you don't know how to do that in TOS, we do have some videos on the site, but I'm not going to get too far into it this morning. And then why do you prefer a regular butterfly as opposed to an iron butterfly? In the case of Netflix, the butterfly would be a bullish butterfly, and I would prefer it because I have a directional bias. The iron butterflies are best when you're trying to stay delta neutral. The butterfly up against 430 would have more of a bullish bias, and the reason why I spoke about it was because of the 39-minute squeeze and the way price tends to attract itself to voodoo lines. So let's keep looking at a few more here. GM is being mentioned as being in a daily squeeze, and I will put my personal opinions aside to analyze this chart, and I think it's pretty quick on this one, Patrick, to say that it is good to go for higher prices. The first thing that I would just want to confirm with that is off your weekly chart. A little bit of a caveat, 2 points to the analysis, because from one perspective, you still have to clear the 786, but that is very minor in relation to your 618. So I think you're going to go up into $45. It might have a couple of pullbacks before you do it. No problem at all, Theo. I hope that helps. This, and what clicked for me, what makes the big difference, and where I think, especially if you're kind of new to options and the pricing is a little esoteric, really just think about, you can learn so much over the course of today into tomorrow if you just think about that intrinsic value. So like Priceline, that's always a huge one for this type of a discussion. If I had $1 million, what would be the best trade right here? It would be super risky, but it would be to sell the 1170 straddle. So much premium in this. And if especially, at first you might think that's a crazy trade because there is so much risk involved. But think about your break-even price. So if we're selling that straddle, it's a $17 credit. That means you can have a $17 move and still make money. I think a lot of times the fear of naked straddles or naked strategies gets people scared before they really think about the opportunities around them. Thinking about that type of stuff around expiration is very, very helpful. And then do you think the SPX will pin to 2100? I don't suggest that the SPX is going to pin in any way, shape, or form. To manipulate one stock and to get it to hover near a given price is doable. To do that for an entire index is more of a coincidence, in my opinion. We'll take a look at VIPS. I also want to look at a few of the other trades John is looking at in the silver portfolio. VIPS is kind of one of the same ones, and that cued that thought for me because it reminds me of Jazz. I think the chart looks awesome, and I think it's a very good looking pattern. It's got great squeezes. The problem is when you go over into the options market, it's not necessarily a beginner's option market. It's a little thin. It can be kind of tough, but I have no problems with you buying it, Jeff. It's just, I think it's one of those too where if you have been trading with me for any length of time, you know the way to set this up. You buy the calls in relation to a debit that you are willing to risk, and you hold on for the move. But I think that looks great. If we step over and take a look at Jazz, I wanted to bring this one up because John had mentioned that he was going to be getting out of the call debit spread that was in the silver portfolio. So if you've been tracking that, that is your exit heads up. The daily squeeze has just fired. We haven't quite made our extension, and it is a little bit of that, OCD thing that I prefer when we tag them perfectly. In this case, we failed just about 50 cents shy of it. So that's just one of those situations where if you keep holding Jazz, and then tomorrow we're down here at 170, and you're asking, man, Henry, what do I do with Jazz? Well, I can't help you at that point. If you're choosing to hold it when you're that close to your targets, then you have to accept the additional risk that entails. Really interesting signals here as the market drifts into about the first 45 minutes of the cash session. Interesting because the yen is catching a bid in the same breath as the S&Ps. These ticks, or these correlations, are not going to be perfect tick for tick, but that has been one of the better ones, and that's a little curious. It may not matter. The markets may just rally regardless, and then the yen catches up next week. But it does make it a little bit more difficult to want to have big size on with these types of ideas. Apple has huge OI at 115. It does for a fact, Nick. I don't think it's going to fall that far. I was looking a little closer to 125 where you have the same principle. That is so awesome, Tom. And Tom approaches this from the perspective that I wish everyone would. And he said, I took a small position in Facebook and sold it for $200. The open house worked out for me. That's exactly right. And on a morning like this, is there a ton of huge opportunity out there? Not really. It's kind of quiet, kind of choppy. If you can jump into something, pull down some cash to something that you're happy with, that's what it's all about. To some degree, I do find myself being a little bit more of it's somewhere between being a perfectionist and just trying to teach the absolute mechanics of this stuff, where it's, I want to see the 1272. And if you were trying to do this for yourself, what would your targets be? And that's what I'm trying to show. But, if you're getting in here and taking quick little 50 cent, whatever it is, day trades, that's awesome if that's what fits into your plan. So thanks for joining us this morning. Yeah, and Bruce isn't on today, but he will be on tomorrow. So if you decide that you'd like to join and actually be with us full time, well, then you will get Bruce every week, and that will include tomorrow. The weekly squeeze on Jazz looks awesome, Mark. It's just so thin. If you can buy the shares, I think there's a lot of opportunity in it. But mostly what we try to focus around is, a little bit smaller account where you're not trying to buy 10,000 shares of a $170 stock. You're trying to work a $10,000 options account. That's usually where I try to help people the most. And then what's the correlation with the yen? A strong yen is a warning sign for the markets, right? So it should be good for your end of month premium selling strategies. Well, Theo, it's a little tricky right now, to be honest with you. I would prefer to see that the yen was falling, and then that would make these strategies easier. Right now, it's a very mixed bag, and to be fair too, those correlations can act really weird on Wednesday, Thursday, Friday of this week. And remember, that's because so many of these contracts are rolling over. So while I love using the correlations, I do not stand behind them as the end-all be-all on this particular Thursday, Friday. S&P is doing a little bit better here. Overall, I think this is still pretty much chop. You could always look to SPX for a similar trade as what we discussed in NDX. Interesting thought, because somebody was asking, do you think the SPX will pin at 2100? Well, I don't think, and I'm not going to call it a pin, I'm just going to call it more of a coincidence. But that is starting to look pretty attractive. If we look at the options, these have a little bit better liquidity. If you've never traded one of the cash indexes like this before, it's not any more risky than any other type of spread, but if you've never done it before, it can just be kind of unique. The $5 wide is going for about $1.65. I think that trade will be, I think it will be good, but I do not think it's necessarily a safe trade per se. Netflix starting to look a lot better. Let's kind of evaluate two sides of this too. And this is where this is just talking out loud, this is where I try to think because from my perspective and how I would typically position this strategy is the bullish butterfly, because I'm looking at it to move higher. I'm looking at it as, that's just the way I would play it. But just to think about it the other way, what if we actually got Netflix all the way up into 431.93? Well, then this butterfly where you actually have the short puts as the body, how much more favorable would that be, if at all? It's going here for about $1.05. So let's cue this one up just for a second. Of course, the problem with this, and the reason why I typically would not do the butterfly this way, is because I think of it from the perspective of, why am I doing this trade? Well, the first part of it is because I want the 430 calls to expire worthless. Well, the 430 calls are out of the money right now. So it's just easier to manage than if you did it on the put side, where your body is going to be in the money all the way up until potentially that day of expiration. Looking at this one again, the spread on the call side is also trading around $1. So I actually don't see too much difference in doing those that way. Such a tricky one, because if it works out, it's going to be awesome risk reward. But as soon as I feel the market starting to kind of perk up, well, then the ticks come back down to zero and the vol spreads trade sideways. So I would just say with something like that, if you've got the account for it and you're really looking for those types of strategies, maybe the butterfly is still in there. If you prefer the higher probabilities, maybe you sell the at the money put spread, maybe you go one strike out. But this day just does not strike me as being strong enough to really want to have those directional obligations, or directional things that I have to see a rally to make money. I would rather put on positions where things can trade sideways and still make money. And then yesterday, your early morning person put on a butterfly on the spider centered at 207.50. How would you defend that position? Well, I will let Don, I believe that's who you're referring to, and I will let Don talk to his positions when he comes on. He is up after me today. I haven't spoke with him yet today, but I'm sure he's around. I will let him speak to it. I usually look at butterflies as being low enough risk that you just risk the capital you allocate towards it, and then think about a trade around it after that. So if the butterfly is not working out, which it clearly isn't, okay, then I've got that risk on. Is there something else I can do? Maybe it's a fresh put spread, that sort of thing. But I'll let him talk to it a bit more. And then do you ever leg into a butterfly to maximize the short premium as the stock approaches your target? Not really, Bob. That's one of those things that you can play with it as you get more advanced and try to work your prices and get better fills on both sides. But when you start a strategy like that, I just like thinking of entering at a price, exiting at a price. If you can get that kind of process down and do it methodically, do it consistently, and make money at it, then you can start getting a little more like, okay, I'd call it getting cute with it, scaling into your spreads as they go and everything. So as we kind of look at what's going on today, guys, I feel like we're in about as good of a position as we could ask for. I want to be bullish, so we've gotten bullish on Netflix, we've gotten bullish on Facebook. Google's at a tough spot to do it, so I've been holding off there. But the markets just show that. It's kind of bullish, but then it turns sideways and calms down. It is a premium selling environment. That's what we've done, and I don't think you can ask for too much more from a day like today. If Facebook will tag 83.10, I will be done with my day trade. In the meantime, I think we just have to avoid getting chopped up and remember that this afternoon will also be an opportunity to put on fresh trades. And thanks for that, John. I really appreciate that comment. Unconfirmed rumor of IBM buying Triple D. Gosh, I'm not even going to make any kind of a comment on the business side of that, but it's very simple for me. I will not buy Triple D until the pattern of the daily chart shifts, and that will take a very significant rally before that happens. And then ESPR has an IV of 122. Can you take a look? Wow. Huh. So a therapeutics company that is up 8% on the day. Absolutely huge premium here. And this gets interesting because when I look at this chart, and from those of you that are familiar with the way I trade in the chat room, there is nothing to do with this. You simply, as an options trader, or as a conservative options trader, there's nothing to do. But if we abandon that completely for just a moment and look at an options chain, maybe we can take another look at it. This is interesting to me because more than likely this company does not have weekly options, but it doesn't matter because the monthlies function as weeklies essentially because we only have 1 day of life left. This is where this stuff gets interesting because notice the huge extrinsic premium in the 115 calls. They're trading at $2.45 and they are worth nothing. They need another 92 cents to rally before they're worth anything at all. Meanwhile, the 105 calls, well, they're trading at $9.50. What are they really truly worth? Well, they're really truly worth about $9. So you see how you're buying intrinsic value and selling extrinsic value to take advantage of this. Now, what's the caveat on this? Well, the first is that it's not very liquid. You've got the 105s that an entire 10 contracts have traded today. So if I suggested that we took this call debit, we would wreck this spread. But just to price it out, the 105, 115, going at 685, that's awesome. What that means is that you could pull back $3 and still make money on that trade. So that's really interesting. I'll make a note of that and see, I might try working like a one contract trade in there. But that's a good observation because, from a trend trading and a conservative kind of buy the pullback type thing, there's nothing to do there. But from the perspective of, hey, this has huge IV and a ton of extrinsic value, you buy the good stuff, sell the junk, and that's the way I would play that into tomorrow. Thanks for the question on that one. It's a fun one to look at. And then suggestions on Priceline. So I meant to look at that one just a moment ago. I don't think we ever actually got over to it. So let's get back to Priceline. Let's see, CEMP. I'll write that one down for you, Mike. If I don't get a chance to look at it, I will try to review it for you tomorrow. And then, well, the elevated premium is just because it's had such a big move today. And then if Facebook tags your target, are you still looking at a possible pin for 80 or is that off the table? I feel like to some degree, John, that is off the table because it has made a new all-time high. That makes that a little bit more tricky. Now, there's nothing wrong with looking at that opportunity. Maybe if we get, what's to say it doesn't tag its extension and then just roll all the way back over? Maybe it does happen. I can't really argue it or make the case for it as much, but I think it's something that if you keep it in the back of your mind, the market starts to fall apart, well, then you can jump on some $82 puts or whatever it may be and try and ride that move back down to 80. And actually, I take that back. We did look at Priceline because the comment I had made on it that would be, the options trader's way of doing it, if you really wanted to do it to take advantage of premium selling, would be to sell the at-the-money straddle. As far as being right at a key point to do something more like a credit spread, I don't really have a good level to do that right now. If I trade Priceline, I really try to do it against a very key level and then try to step a little bit outside of those strikes to give myself some room or some cushion. And that is just not that spot right now on Priceline. Yeah, no problem, Vin. I'm glad you made some money on that. And then as I watch Facebook climb, I realize it may make your extensions, but I must be happy with my day trade. That's the way to do it. And as I look at it even here, remember that the whole thing with this too is that you get into a market and you have to, and I've always tried to think like, what's the right way of saying this? You have to give yourself a chance of getting lucky. Meaning, this morning I bought it and it wasn't, things weren't firing on all cylinders, but there was the chance. Well, we get here into the, 30 minutes later, the ticks have kind of died down. It's a little bit neutral. It's not a bad spot to take your profits at all. If on the flip side of that coin, the markets had seen that plus 1,000 tick reading, well, then I gave myself the chance to get lucky. Maybe Facebook had a good participation with that. Hopefully that makes sense. I guess what I'm saying is that there's nothing wrong with those quick 50-cent profits, especially in situations where it's like, hey, I only got 50, but it might have been a $2 trade. Probably an odd comment to hear because it's always like, oh, it could have been, but I think in this case you see the merit that that has. Netflix doing good, Tesla pulling back a little bit. One of those trades that I may do, but I can't really recommend because if you get assigned on it, it could be a little messy. But what I'm looking at here in Tesla is that if it does pull back, what would be a way to maximize my bearish opinion and a pin at 200? Well, I can't do it via the 200 or 205. Your first thought might be, we'll sell the 205 call spread, but I can't do that because it is already my long leg from another spread. I could do it and then just make the entire thing $10 wide, or I could sell the 202 half that is in the money, do it $5 as well, and then if Tesla does end up pinning at 200, that would really maximize that spread. If instead it went on to rally, then you have to accept the additional risk. Oh, wow, I'm from New Zealand and I'm doing this at 3 in the morning. Well, Naram, on some level, I'm a little bit jealous. I remember what it was like to come to these open houses, and that was kind of getting to be on the participant side of it, and it's kind of exciting. So if you stayed up for it and everything else, I hope you had a good morning. It is kind of fun. I appreciate the comments, John. Thank you for joining us today. You asked, can you recommend a way to use options for growth of a $4,000 account if I'm limited to buying options only? I can for a fact, John, and it's actually one of my favorite styles of trading. The first ticker that comes to mind when I think about looking at things like this is IWM. And there's my 9:30 bell, so I will turn things over to Don here in just a moment. And even if you don't end up signing up as a member, John, and I would encourage you to go buy the elephant class. It's one that John coined as one of the trades that he's been looking at, but it is a very effective strategy at growing small accounts. And it sets up where, and here again, I can't teach you the whole setup here, obviously, but when you have these weekly squeezes, they're such powerful moves, and that's where you can buy an option at $1 and sell it at 3, sell it at 4. If it goes to 0, okay, well then the risk was very well defined, and I've had very good luck with it. And I really encourage that for smaller account traders. As the market starts to soften up here a little bit, I am also going to get rid of my Facebook. I've got Don coming on essentially right now, and I do not want to have this position just sitting out here. If you're going to manage it on your own, I think that's perfectly fine. It gave me a quick about 50 cents this morning. And that's one thing that I have to, I work on a little bit myself too, because I prefer swing trading and taking, trying to make $2, $3 on a move. But there's nothing wrong with making, 50 cents and being done with it. Good deal, Don. I will get this trade posted, try to answer a few last-minute questions, and then I will turn things over to you. I don't personally feel like this is a good entry for IWM. Alam, I kick myself a little bit because I wish I would have bought that low a bit more aggressively. But as much as I want to buy IWM, I am not doing it here. And the elephant class was a beginner's guide to swing trading. If you call the office, they'll know exactly which one you're talking about. And that's awesome, Rin. It's good to see you in here this morning. I'm glad you made a little bit of cash. You know, squeezing a little bit of money out of a market like this, you know, it's like, what do they say, trying to get blood from a turnip? It's like, okay, we got a little bit. It's not a bad morning. Tesla pulls back a bit for me. Netflix can stay bid. You know, it's not a bad expiration. Okay, DW, I appreciate the feedback. It's good having you here this morning. And that's awesome, Randy. Anytime that I'm talking or anyone talks about doing a day trade, if you can get closer to that delta of 1, maybe not quite a delta 1, but like you're saying, deeper in the money, like a delta 85, that's awesome. Delta 1 is tricky because if you're going to do that, you might as well buy the stock. But that delta 85 still gives you some room for expansion. I think that's a great way to do it. So, all right, guys. Well, it's been a little bit shorter mornings for me. I'm used to doing about an hour and a half, but since the addition of Dawn, we've been swapping off about 9:30. So I'm going to go ahead and kind of bring things to a close. I think most of the analysis and the setups that I've given you this morning are still holding. Obviously, that may change into the afternoon, but at least you know what I'm looking for. Dawn is up next. John will be in for the close. And then obviously, if you guys would like to join us tomorrow, you can sign up and we'll be here doing the exact same thing tomorrow. So y'all have a great rest of the day, and I hope to see you tomorrow.
All right, ladies and gentlemen, right where Henry left off, I'll kind of take the ball running from there. My name is Don Kaufman. I'll be joining you for about the next 55 minutes before Carolyn comes in. I'm going to take you through a little bit of what I see in markets right now. We're gonna wrap up some stuff for expiration week. If you're not aware, it's expiration, and it's a triple witching expiration. Some people call it a quadruple witching expiration, which it's not really applicable anymore. Nevertheless, we are going to discuss one of the risks that's sitting out there right now. Again, I've got a number of different topics. I'm going to kind of keep you guys guessing those as the morning goes on over here. We'll see what we can do in the markets. We also are going to look at a number of trades, not only that I did yesterday, kind of give you a post-mortem on a few trades I did yesterday, but also really today I see one kind of nice setup over there. It's a little bit more of a quote-unquote duration type trade, but I like the way it looks. So with that, let's kind of kick it off with looking at S&Ps and looking at the market. So for those of you that are joining us, whether you're in the chat room, whether you're actually joining us for the open house, I'm much more of a quantitative trader. I would be known as what's called a quant. That means I have tendency to focus more on the numbers, the relationships of the market, not necessarily trying to discern every last move, you know, that we're seeing, or trying to determine, you know, precisely where we're going. So I have tendency to read what's going on more in the markets. I do less thinking, more reading is what I often say. So right now with the S&Ps down 7, okay, where do we stand? I'll flip over, and again, I do and will look at a 1-minute chart. And the only reason I look at 1-minute chart is because I need to see volume in some of the shorter duration possible out there. And if you're taking a look at my screen right now, you'll see that volume is negligible, to say the least. It's not massive by any stretch of the imagination. So volume, you know, every single morning you get a big surge of volume, cash open. We've really died off. I mean, we're lucky to be doing 3,000 contracts on a 1-minute basis. Now, that can change in a moment's notice. But again, if you really want to see, like, you know, some serious price action in markets, you got to get upwards of 5,000 contracts, okay, on a 1-minute basis, kind of popping over there. Now, just as I say that, okay, take a look at this, you know, last minute here, and we're doing almost 6,000 contracts in a minute. It matters, okay? Volume absolutely matters. It lets me know, okay, who's tuned in, turned on, and it also lets me know how many algorithms are actually popping. You got to realize most of the trade today, like that really goes on. Like most of the 6,000 contracts in volume, and this 6,000 contracts here in the S&P futures, you may not ever look at the S&P futures, okay, but you need to, because it affects every single product that you see on the screen. All the products on your screen are tied to what futures are doing. Yeah, even oil. Okay, and you're like, oh, oil, gold, everything. I mean, I've got my primary futures contracts listed over here, but the professional trading world has and always has been looking at what the futures are doing and what order flow is inside of those futures contracts. Now, just below that, I've been playing around with a new script that was written. I did not write the script. We've got a scripting monkey, Eric, that works with us day-to-day basis over at Simpler Options. He wrote this cumulative tick. All it tells me is the tick. Everybody's familiar with like the tick or the trend. Well, here's the tick, and it just accumulates the tick throughout the course of the morning. These magenta dots are ultimately the upticks. Of course, the other ones being the downticks on the day. It's relatively flat. I mean, and that's in comparison to if you saw yesterday's tick. Yeah, just a bit to the upside over there. So just wanted to compare and contrast the different tick values from one day to the next. This script, I've been playing with it, but it's not ready for prime time. I love to show off stuff, and they go, but you can't have it yet. Anyway, no, that's not what my intention is. It's just one of the things that I've been looking at now. I've been using it for about 3 or 4 weeks, tested in a lot of different markets, and making sure that it's ready for prime time before we do release any type of script like that. With that, yeah, the trade today, it's to me, it's very light and kind of choppy out there. So that's the S&Ps being down 7. The NASDAQ futures are actually up 4. You do take a look over at advanced decline lines. Again, I'm very much like a quantitative trader, but I will glance over advanced decline lines. Clearly, it's the advanced decline line. It's kind of what I call massively unchanged. It's a 50-50 shot in the advanced decline line on the NASDAQ right now, and of course being reflected by what's going on in the futures. I always do flip over to several different advanced decline lines. I do look at the S&P 100. A lot of people ask me, hey, Don, why don't you pull up the S&P 500? First of all, it's kind of a pain to look at 500 stocks. Secondly, the 100 stocks in the S&P 100, it doesn't matter that there's another 400, because those 400 don't equal anywhere near the market cap of these 100. So the market moves with the 100 stocks in the S&P 100. They're roughly the 100 largest market caps inside of the S&P 500. And they're the ones that matter. They're the ones that drive order flow. So if the S&Ps are moving, if the S&P 100 is moving, that's going to move markets. You can see the advanced decline line is decidedly negative, but we've seen it much worse and recently. Last but not least, one of the things that I do focus on is the Russell. Okay, at the forefront again of almost every move that we've seen in markets, the Russell has been there. And by the way, the cumulative tick has nothing to do with the Russell. The cumulative tick is the New York Stock Exchange cumulative tick right now. Even though I have this on my chart, it's got no real bearing in here. The Russell is completely unchanged on the trading day, and I point that out because if S&Ps are to go lower, if you're looking for them to go lower, or if you're looking for them to go higher, you really want to look for some movement in that direction in the Russell futures. Okay, until these Russell futures get a little softer, I don't think the S&Ps are just going to fall out of bed over here. So watch that, because it's been extremely effective, especially in the last 2 weeks of trade over there. You know, people the other day, oh, the markets are going to tank, and the Russell futures were totally unchanged with the S&Ps down 10. Listen, they're not going without the Russell actually kind of leading the way down over here. Next, okay, I jump right over the volatility, and I've always been known as an option geek, and I am. But I jump over the volatility because the volatility, all it's doing is confirming what you're seeing on the screen. You know, my feeling about volatility and volatility futures right now, the volatility itself, like people talk about the VIX all the time, talk about volatility futures. The volatility is kind of like, you know, the town like crier over. you already see a fire, and all of a sudden, like, there's a fire. I mean, the volatility futures and volatility right now, they're kind of like the last one to know. So it's they didn't get invited to a really good party, and until like everybody else did. And you just keep that in mind, because they have not been all that effective lately in trying to gauge where a market's headed. They'll actually tell you and confirm, like, hey, the volatility is up. We're getting the crap kicked out of us. Like, I get that. But ultimately, the volatility futures, they haven't been saying very much as of late. One thing I do want to point out, volatility happens to be up today. That's amazing, because the S&Ps are down 8 right now. So just keep that keep that in mind. So go down the screen. One of the big players over here has been the bond market. Ooh, you would not want to be on the wrong side of bonds. Okay, and what's the wrong side of bonds? The wrong side of bonds, it kind of looks like this. Now, if you see this giant gap on your chart, whether you're on Thinkorswim, whether you're on TradeStation, whether you're on Interactive Brokers, I don't care. Big gap in the chart, you got to get rid of it. Okay, to get rid of it, you have to adjust for contract changes. If you have a charting application that does not do that, you're kind of in trouble. Now, I'll show you how to get around that. But I check off adjust for contract changes. Again, as I said, you wouldn't want to be on the wrong side of this. To bring this up in a little bit more clarity, okay, the bonds have absolutely exploded to the upside in the last 2 weeks of trade. Okay, it's the inverse of what everybody would have expected. Okay, so think about this, if you will. The market already made up its mind as to what the FOMC was going to do before they did it. This is the FOMC meeting yesterday. Sure, big move up in the bonds. Yeah, it already picked the direction, and that direction was up. Okay, sometimes you have to just cut all the crap, all the noise out of the background. Just read markets. All right, stop listening, stop thinking. Just look at the marketplace over here. And there is no way. I'm a contrarian, okay, and I call myself a contrarian, but there's no way. Nobody wants to step in the way of a move like this. People constantly ask me, well, Don, would you maybe want to get short bonds right now? No, because, I'm a little bit out there, but I'm not completely insane. I got to look for some sign, okay, of these bonds stopping over here. Now, one thing I do want to point out, along with those bonds, some people do look at the ZN. The ZN is the 10-year, the 10-year U.S. Treasury bond futures. And again, these are products that you may never have traded. People, that's okay. All right, you want to get in tune with certain products, and I always use that term product because, again, I just don't care what you trade. Like, I don't care if it's a bond, I don't care if it's oil, I don't care if it's a dollar. I don't care, because in the end, I've kind of come full circle in this business. You just pretty much are going to buy it or sell it, right? People have to make things so ridiculously complicated, and there's times where I've been looking at markets as long as I can remember. And there are relationships and so forth that I see, maybe other people don't see. That's okay. I'm going to explain some of them on here. But just getting your eyes, familiar with, okay, today we have bonds. All right. How unusual, though, is it yesterday? Yesterday, you see the S&Ps up 25 points and the bonds up huge. Okay. You don't see that kind of movement. And then people they always sit there and they question it after that. Well, why did the bonds move up huge with the S&Ps moving up huge? I don't know. I actually think it comes back to, and this is where thinking doesn't generate trades. It's not going to necessarily help you, but if you're curious, our interest rate, this is on the 10-year, okay? This is the 10-year Treasury index. This is to be read as it's not 19.39. It's actually 1.939%. That's the effective interest rate of the 10-year U.S. Treasury. Okay, so it's TNX is the symbol. I can't necessarily decipher if that's going to be the symbol in every single trading application. It's TNX. There's also what they call TYX. But one thing I do want to point out with this, listen, the 10-year notes, they're under 2%. And from this point, have they been lower? Yeah, they've been lower. You can see them right here, 1.6%. Before that, you can go back about another 18 months before this and see them at 1.4%. Nevertheless, when you compare, for instance, Germany or Japan and their 10-year notes, theirs are sitting next to 0. Wow, we're at 2%. We're a hero. A lot of money from all over the world now is pouring into the U.S. bond market. Why? Hey, we're paying 2% for 10 years. Wow. And things are getting rough out there, and you're getting 2% for 10 years in any regard. That's a little, I guess, postmortem also on yesterday's action inside of the bonds, taking interest rates substantially lower over there. But let's start to get into, again, a little bit more about today's trade. The S&Ps are down, 850, and more or less, I also want to cover some of the trades that I did yesterday. First and foremost, this is one I did not post in the chat room. Placed it about 2 days ago. It's neither here nor there. Profit and loss from the open is completely and massively unchanged. This is a long duration iron condor in the SPX. It's only one contract. Okay, there's an absolute reason it's only one contract. It's an SPX iron condor. Just so you guys can see it, if you do want to see it. The strikes over here, 1870, 1880, okay, 2220, 2230. It's all the way 85 days out in the future. And this is actually, again, what I call a duration iron condor. I executed this trade in the June 2s, and I do want to take you a little bit into this particular trade, and I'll post it if you guys want in here, because the trade is absolutely still there. Listen, it's an 85-day trade. It's not going away. There's 85 days left in these options. The reason I did it is the volatility. It's a little bit better 85 days out than it is, right here in the meat of where people sell iron condors. A lot of people sell iron condors. They're 36 days out. They're 8 days out. I'm actually all the way 85 days out because I want to capture a little bit more premium in there. So that's actually iron condors, and what I, again, call duration iron condors can be extremely effective. They're not exactly what you may think. I'm going to be putting on iron condors, and I will be bailing out of those iron condors in the near future, meaning this is an 85-day iron condor, and I'm actually going to show you what this condor looks like, okay, in my order entry screen. So here's an iron condor, $10 wide call spread, $10 wide put spread for $1.95 credit, 85 days out. I'm actually looking to hold the iron condor in this example. Oh, we'll say, let's hold the iron condor just for 30 days. What does that look like? Okay. What's this iron condor worth 30 days from now? All you have to do is take the 85-day option, change it to like the May's 56-day option. Okay. And this can get a little bit confusing, but this is something that I like to talk about in here, because here's an iron that you can sell right now for about $1.95. Okay. After 30 days, you can buy it back for 90 cents. There's a ton of premium that people don't realize can be sold. Everybody thinks all this short duration. Short duration, you can sell short duration. You're going to get your head taken off, though, once in a while. Okay. I'm looking for longer duration trades, and because I think there's excellent premium to be achieved in longer duration without having to take that kind of catastrophic short duration risk. Anyway, it's a trade that again, I've been placing these types of trades for quite some time. That also, I'm doing my first class here at Simpler Options tonight. It's not a big pitch. I'm doing my first class at Simpler Options tonight, and that's exactly kind of the theme, is understanding that you don't have to necessarily sell short duration options. There's some great strategies for a little bit longer duration, but just because I'm selling an option 85 days out doesn't mean I'm holding the thing for 85 days. That's an insane amount of time. Okay, we're actually going to sell and we're going to bail. I'm going to get into like absolute specifics of how to structure those trades today. And the one thing I've never been able to do before, I've worked for a brokerage firm for the last 15 years. One thing we can't do at a brokerage firm is you can't actually say what's your delta. You can't say what's your probability. You can't say what do I do if the trade goes up in flames. So for the first time tonight, I'm actually going to talk about like absolute finite criteria. How do I enter them? How do I exit them? How do I actually layer them into one another? Okay, there's a lot more, than kind of meets the eye of just one iron condor here. And this is not going to be, this big profit kind of windfall anyway. That's SPX iron condor. The next trade I've got on here is the spider trade. Okay, and with this particular spider trade, this was a trade that we put on yesterday specifically for the FOMC meeting. Okay, and if you're listening right now, okay, I'm going to be very adamant about this. If you're, again, watch carefully over here, because this is extremely, extremely important. Okay, I like this. Why would you choose 85 days out rather than 45 days out? And you're going to have to come tonight. No, I'm just messing with you. I'll go back to the SPX. Okay, when you sell premium further out in time, there's almost no gamma risk. There's much less directional risk associated with the trade. So it's a much softer, gentler trade. So if the wheels are going to come off the bus, you can handle the risk further duration out and selling shorter term crap. I have done unbelievable amounts of research, okay, and traded these things for a decade and a half. Duration, especially in the midst of more volatility, duration, okay, is so much more important than the direction of the market. You'll hear me use that phrase a lot, duration over direction. You need duration for the premium to burn, okay? But you don't want, everybody knows options decay faster the closer you come to expiration. What they don't realize is that the directional risk you incur starts to drastically outweigh what you can make when you sell really short-term stuff. Okay, at some point, I know I do trades for short duration, like this spider trade. That trade is literally was put on yesterday, taken off today. I do short-term stuff. The short-term stuff, okay, that's to kind of keep me involved, keep me in the game. Okay, a little bit of P&L. Ooh, it's exciting. But at some point, you start trading a bit more, and you start to realize, okay, Don, well, these short duration trades, they can be effective for, a $2,000 account, a $5,000 account, a $10,000 account. What are you going to do when you really want to start to grow an account very slowly, very consistently? Okay, short duration strategies can have higher risks. So what I ultimately bring into the table in here with something like this SPX is this is a slow bleed premium, okay, and it's designed expressly, okay, to get in, to get out, not to make the full amount, but small profits, and not getting run over. So that's a little bit about what I'm doing over there. By the way, somebody said I'm showing premium of the SPX at 95 cents. What am I doing wrong? Steven, you have the wrong expiration. This is a June 2, not the May. Okay, I showed changing a June 2 into the May just to show you what it looked like if the Junes burned 30 days of premium. And again, I stress, okay, I am doing a class tonight. I don't like pitching stuff that hard, but if you want the full brunt of what that is, okay, the single most important portion of using these types of trades isn't the trade, it's actually the allocation. And that kind of wakes people up a little bit. It isn't the trade, it's actually the allocation, okay, of those trades. And I always try to emphasize a little bit about allocation over there. Sorry about that. I'm playing around on multiple screens here as we're going. So let's kind of move onward and upward in the second trade over here, because it's something extremely important that I do want to cover. So let's kind of move again onward and upward here. Spiders. In the spider trade. This is a trade where, ultimately I sold. By the way, this is not a butterfly. It is an iron butterfly. There is a humongous difference between a butterfly and an iron butterfly. The iron butterfly, think of it as an iron condor. It's an iron condor that shares the central strike. The central strike being what? 207 calls, the 207 puts. Okay? So this is the 207 calls, the 207 puts. Is yesterday, that was the at-the-money strike. So if we were to take a look at the spiders right here, right now, we're at 209, and change. The lower the markets come down today, if the markets come down today, the S&Ps right now are down some 11 points. They come closer to this 207 strike, the more this thing is going to profit. Now, just in this one contract, the P&L from the open, we're down 11 bucks. Okay, the trade isn't a loss, really. Okay, it's a loss. It's a $10 loser. I'm a loser. The other trade that I did yesterday, okay, which was selling the same straddle and buying wings further out, that trade did really well. Okay, for such a short duration. I sold 3 contracts, bought 1 contract at the outside hedge. Trade went extremely well, and if you want to take a quick look at that, I'll isolate everything I did in the spiders over here. Let's not go 30 days back. Let's just go like 7 days back so we can take a quick glance at some of the trades that I did. You can see that I turned around and I had sold this 3 lot for $318. Okay, I turned around and I bought that back just a few hours later. Okay, for $276, and then my hedge, which was buying the strangle, I ultimately did what? I had bought it for $288, sold it for $273. So ultimately, the trade like this again doesn't look like a huge amount of premium, but it was a very measured trade where I just tried to go for a little bit of volatility crush. And did just that. Very, very short duration stuff. This next trade, this is the one that we're focusing on right now. This 218 credit. That trade's still on. Okay, that trade is absolutely still on. It's down a whopping 15 bucks. Now, here's something that I have to tell you, and I'm going to hammer this into you guys right now. The spiders. Today is Thursday of a monthly expiration. Okay, this is for everybody listening. I don't care if you're in this trade or not. If you were in a trade right now in the spiders, the Qs, the IWM, the EEM, okay, how many other products are there? I could talk about the XLE. If you were in an ETF, okay, there is an extremely high likelihood that you could be caught off guard by a dividend. Now, I'm going to display this inside the spiders. I'm hoping that if there's just 10 people that are listening to this, hopefully I'll save somebody. If you're in the trade that I am currently in, you must exit before the close today. There's no if, and, or but about it. You absolutely, unequivocally need to exit the trade. Why? I am short the 207 calls. The spiders and most of your ETF products are going ex-dividend. Okay? They are going ex-div tomorrow. If you take a look at the option chain, look at the at-the-money options. Okay? The at-the-money options, like, okay, so what's he kind of getting at over here? Look at, like, for instance, the nearest strike. It's the 210 calls and the 210 puts. Notice anything strange? The 210 calls are trading for 36 cents. The 210 puts are trading for like $1.54. Why are the puts trading for extensively more than the calls? Granted, the puts are in the money by 30 cents. Okay? It's the dividend. The dividend is being priced in. Div is coming. The problem with the spiders is nobody knows how much the dividend is going to be. Okay? It's a surprise. Why? Because this is a product that goes ex-dividend 4 times a year. Okay? And it's a product that, and by the way, there are some variations of this, because if you look at a product like the diamonds, okay, the diamonds are the most confusing thing in the history of like ETFs. The diamonds go ex-dividend 7 times a year. When are those 7 times? I don't know. I don't trade this product anymore. I don't trade it because I never know when it's going to ex-dividend. I screw that up all the time, so I stopped trading it. But the spiders, okay, I can estimate what the dividend is going to be. Okay, you can estimate it by looking at the option price. The dividend is going to be anywhere from like 90 cents to about $1. Everybody can see that. All right, how can you see it? Again, I'm just pricing it right off the options here. Okay, and that's neither here nor there. Just, I mean, basically, you can go off the previous dividend. Looks, this one's going to come in a little bit lighter, it looks like. Again, somewhere between 90 cents and $1. Nobody knows for sure. It's all an estimation. Why does the dividend matter? Okay, look at my trade. I am short these calls. And I'm going to tell you guys, because if you've never been through an expiration, you cannot hold a butterfly into a monthly expiration of the spiders. You can't do it, because if you do, the likelihood of you being assigned on calls is extremely high. You could hold a put butterfly, but you can't hold a call butterfly. I'm going to show you exactly why. If you take a look at these 207 calls, and by the way, this is an out there concept, so deep breaths. If you sold calls, all right, you may have sold calls as part of a spread. I did. I sold these calls, and I'm long these calls. In fact, you can even pull up right over here what my position happens to be. See, I'm short one, and I'm long one. Short one, long one. Okay? Short one of those, and I'm long some put further out of the money, but that doesn't matter because I'm short these in the money calls. They're currently trading for 232, but the dividend is coming. And what someone is going to do is they're going to what? They're going to exercise their right to buy the stock from me. Why are they going to exercise their right? Because they want to capture the dividend, which is $1. Why are they bothering me? Okay, why are they exercising my options? Because options don't pay the dividend. They want to exercise their right. They have the right, okay, to take the stock at 207.50. Don't you think they're going to exercise their right to do that? Because if they take the stock from you at 207.50, then they get paid what? The buck, the dividend. Now, how do you know? How do you know if the option that you're short is going to be assigned? Generally speaking, if the option is in the money, okay, and you are in the shortest duration, the likelihood of being assigned is extremely high. But the cheating man's methodology, you look at the call that you're short. In this case, we're short, okay, the 207s. Look at the opposing put. If the opposing put is trading for less than the dividend amount, we just have to assume the dividend amount is the last dividend. I know the dividend is going to be between probably 90 cents to $1, but you may not know that. So you just take the last dividend, which is about $1.13. If this put is trading for less than $1.13, assignment is all but assured. You can even look right here and you go, what about these 209 halves? If you sold these 209 halves, am I going to be assigned? 50-50. Maybe 50-50 on this one. You better be careful, because if the market moves right up to the close, yeah, you're going to get assigned. Now I'm going to show you something even crazier. Somebody puts on a position 8 days out, even 8 days out. If you're short like a 207 call 8 days out, probability of assignment is actually high, because even 8 days out, these 207 calls have what? Okay, only about $1 time value left. And the trick again, you look at a call strike that you sold, look at the opposing put. If the opposing put, okay, is less than previous dividend, you're very high likelihood of being assigned. Now, you've been warned. It can happen 22 days out. I've even seen options 30 days out get assigned early because there's little or no time value. Okay, this is extremely important stuff. So again, I kind of urge you guys. By the way, how do you know when the ETFs pay dividends? You know, you can look up the prospectus of each individual ETF. Generally speaking, most of your ETFs do pay quarterly dividends out there, and you just have to be aware of what these products happen to be. And if you have any question about it whatsoever, you know, you can call up the different brokerage firms. Hopefully you get somebody that's, you know, decent on the phone. You never know. It's got a little bit of luck at the draw. But for me, you know, hell, I'd exit. Because there's nothing worse like getting assigned. And if you're like short 10 contracts, you're going to get assigned on short 1,000 shares. And if you're short 1,000 shares of the spiders, you realize that you're going to pay $1 dividend. Okay, and that $1 dividend, they are going to take $1 out of your account per share. You just lost $1,000. You're like, that's not fair. I was in a trade where I had defined risk. The dividend can really screw you guys, and I've had it happen to myself before. Okay, and it happened to me in the XLE. And I don't mind, using an example, I was carrying a butterfly in the XLE into expiration, just totally slipped my mind, and I got popped on the dividend. I got popped big time. That's kind of eye-opening. Anyway, you must exit this trade by today. And people are like, but it's down $16. Okay, it's down $16. Maybe there's maybe you can get out for break even over here. You win some, you lose some. The best loss you're ever going to take is pretty much a scratch, and this is as close to a scratch as you're going to get. Losing $18, in one contract, happy days are here again. There's no fix. Listen, this trade, you have to exit it. The best exit is, that's your fix. When you do really short duration trades, you got to just get out. It's okay to get out. Okay. Anyway, by the way, somebody said, should you get out now of the iron fly? Okay. Should you get out right now of this iron fly? And yeah, you can right click on it and create a closing order. And we originally sold it for $218. We could buy it back now for $234. You could do it right now. Okay. I myself, I'm going to wait. And you got to realize, like, when we're trading these accounts, it's my money. Like, I'm not going to force a trade just because, like, I'm on air right now and because I know it's an open house. Like, I'm emphatic about the consistency in my trading. And when I'm in a position like this, I knew what the risk was getting into the position. And I'm totally comfortable with my risk. So I'm going to see if the markets maybe can sell off just a little bit more as the day goes on. All I need is the market down a few more bucks, and I might either scratch the trade break even or even make a couple of bucks. But I'll watch it throughout the course of the day. This is right now, we're just off the lows of the S&Ps. So yeah, because we're close to the lows of the S&Ps, and what's it going to hurt to let that thing rest out there for a short time? And by the way, how are you warned about dividends? A lot of times, brokerage houses will send you an email warning you of the dividend. If they don't, that's not good. That's what I'm here for. So, and I'm telling you guys, having been on the brokerage side of the business for so many years, and every time there's these monthly expirations in the ETF, people lose hundreds of thousands of dollars. I mean, granted, that's across a million accounts, but people lose hundreds of thousands of dollars in that. Hey, look at that. Russell futures massively unchanged. As I said, I don't think that the S&P futures are going much lower unless the Russell cooperates. Go down, Russell. Go down. All right. And just as much as, when you guys sit in front of your screen, you pray for a stock to go down, go up. See, we go down just a little bit. And this trade now is only down some 13 or 14 bucks. And these are totally acceptable risks to take. All right. Somebody said, what about just closing the call side only? Yeah, I don't really play that game. You could do that. But the problem with just closing the call side only, then you leave yourself a risk. What if we tank overnight? What's the point? One thing I'm again, kind of, I think this is important. If you just close the call side, okay, and you can do that. You can just, isolate just the call side of a trade, by kind of clicking on just the call side of a trade, closing order. You can bail out of it for $2. But if we come, on fire down below 207.50, okay, you're going to get whacked possibly on your put side of it. And you can do that. But again, everybody's always looking like, you're playing chicken with the market over there. Sooner or later, the market's going to crash, right into you. And I don't mean crash as in actually move down, but I'm just saying when you start legging out of crap, I wouldn't really overthink the situation. I mean, you can do it, absolutely, but a 20-point move in the S&Ps to the downside, okay, you might be starting to take some pain on the put spread that you're short. All this is a short call spread and a short put spread tacked on top of one another. That's it. Okay, it's not like an ingenious trade. I was just trying to sell some crap and hopefully duck out before Janet Yellen said anything else. And that's kind of a fun game to play. So in any regard, that's that's the possibility of a trade over there that you could exit just a call spread, but don't try to get too cute. Vast amount of time when you fix trades. Sometimes fixing trades is just getting out a shovel and just digging yourself in deeper. I don't even like the word, quote unquote, fixing a trade over there. All right, moving right along. So with this idea, we talked a little bit about the spider dividend. One other thing I do want to reference is, albeit briefly, SPX. The SPX, the last time you can trade these March options is today. The last time you can trade them is today. They go off, though, of the opening settlement, not the opening price, the opening settlement. Okay. One other thing I do want to display over here, and I think you guys will find this quite amusing. Over the last few days, you've seen me talk about, okay. By the way, John, I'm going to answer your question in a moment about leveraged ETFs. Don't let me forget about that one. Over the last, couple of days, and yesterday specifically, I was talking a lot about these expected moves. And I just want to show you something interesting about the expected move in the SPX. Yesterday, the SPX, prior to the FOMC announcement, had about a $30 expected move. Let's go back and let's take a look at that. And I looked at it this morning and I said, that is just amazing. So here we are. This is yesterday, okay, closed. But let's go back, okay, to the day before the FOMC announcement, because this is giving you one of the most effective views, okay, of how expected moves can work. Here is the SPX, okay, positioning for about a $30 move with 2 days remaining. The very next day, okay, what's the move? Look very, very carefully. Here's the SPX at 2074. It's pricing in about a $28 move, okay? There it is, 2074, pricing in about a $28 move. You fast forward a day, where do we move? About 25, 26 points, okay? Incredibly effective, though, for deciphering how far a market is likely to move. It doesn't always work that way, okay? But I thought that was just a prime example of how markets are so good at really effectively pricing things in. Anyway, that's why, we show this stuff. That's why we use it so much. Does the expiration for the spider follow the SPX? The answer is no. The SPX uses an opening settlement. By the way, what opening settlement means, ultimately tomorrow morning, the SPX opens as normal. So the SPX opens, and let's say the SPX opened. Where did it open today? At 2098. That's the opening price of the SPX. But the opening settlement is not the opening price. Opening settlement, okay, the way that works is it looks at, sorry, I got to get at least 100, 200 milligrams of caffeine in me by, before about, it's 8:15 right now. I'm on Pacific time. Got to have it in me before 8:30 or, all hell breaks loose over here. So with this idea, the SPX, it uses an open settlement. Opening settlement is actually based on the individual components of the S&P 500. If you've never heard this before, you're probably like, what the hell is he talking about? The SPX, got a curious there. How many of you guys have actually traded this? Admitting it's the first step. I've asked this question before, but we got lots of people that are in this open house too. So how many guys have actually traded this? Use it all the time, okay? You don't know the rules of the SPX, it will blow your mind, okay? And just because there's so many people in here that have traded it, it's like 90% of the market here in our chat room has probably traded this. Short term, too dangerous. By the way, Kevin, I tend to agree with you. In really, really short durations, the SPX can be, I've called this product the widow maker. So when I was a young buck of 22, this is where I managed risk in, was the SPX, so pretty familiar with it. The product itself, okay? First of all, there's monthlies and then there's weeklies. They have two different types of settlement styles. Number one, SPX is European style settlement. What does that mean for you? It means that you can't be assigned early. Now, people love that idea. Oh, there's no early assignment. Oh, I don't have to worry about dividends. I don't have to worry about this. Yeah, what you have to worry about, it trades at like a $2,100 stock. The bid offer spreads in the monthlies, okay, are over $1 wide, but in the weeklies, they're tight. Like, look at this. This is a 40-cent wide market. 40-cent wide market. 30-cent wide market right now in a $2,000 product. And then people go and they look at like something like Priceline, and Priceline, this is an $1,100 product. Okay, and I know that we trade this, and I know that we trade it here in the chat room here, but the markets, they're wide in comparison to the SPX. So you can't complain about the SPX and how wide the markets are, because the SPX has gotten a lot better, okay, at tightening up those markets. But here's the issue. The weekly options in the SPX use Friday PM settlement. PM settlement Friday. That basically means where the market closes on Friday. What time on Friday? Well, the SPX on a normal day is open till 3:15 Central Standard Time. That's 4:15 for you East Coast people. But during the weekly expiration, these weeklies, 8 days from now, expire at 3 p.m. Central Time. You're like, oh, son of a, that's when you're getting out the pen right now, and you're like writing this crap down. You're like, so you mean that they expire at a different time? Yes, they expire at the cash close, which is, okay, 3 p.m. Central Time. The monthlies a whole different ball, you know, of wax over there. The monthlies, the expiration goes off settlement tomorrow. What's settlement? Settlement, okay, uses all 500 stocks in the S&P 500. And the problem is with 500 stocks, you guys ever seen like the market opens, but not every stock opens? Not every stock opens because they're what they call order imbalances. Some stocks can be halted for hours. I mean, they can. In the S&P 500, every single stock has to be open before you get the opening settlement price. And what's done is there's a calculation used. And the calculation is a regression calculation that says, what if every stock in the S&P 500 opened at the same time? Which is totally confusing because sometimes stocks can open hours after the market opens. So they use this calculation that says, what if they all opened at the exact same moment? And that is what the print happens to be. And there's actually a symbol for this. It's called the set. And the set is where, okay, the index, the settlement value happens to be. Why am I mentioning this? Because the set can drastically differ from the open of the SPX. I've seen it differ as much as 50 points recently. And then, of course, you sold some way out of the money calls or some way out of the money puts, and the settlement was 50 points up or down. You're like, wow, that was the worst trade of my entire life. I've been there before. Okay, it's not a happy thing, and markets can move because of that settlement alone tomorrow morning. Just keep that in mind. You usually get kind of a wild open on expiration Friday. The wild open only lasts seconds, and then it's gone, and the volatility dries up right after that. You check that crap out tomorrow. You'll see what I'm talking about. Anyway, with that, that's enough of the SPX. Let's move onward and upward. Remember, don't forget to close your trade in the spiders today. Last but not least, I got like 10 minutes left. I'm going to probably fry somebody's brain in here. By the way, somebody asked me about double or triple inverse ETFs. If you're ever going to trade a double or inverse ETF, the only thing I ask you, you can trade the options in them. Do not hold the underlying over time. Okay? The biggest and ugliest trade that I've seen in my entire trading career is the VXX. Okay? This is the most horrific product I have ever seen. Look at the 5-year chart on the VXX. Here's a 5-year weekly. Okay? This is not screwed up. It's right. It's 2,318. So, and this is only going back to what? Okay? Take a look at the date. That's 2010. So if you bought one share in 2010, it would have been trading for, yes, $2,318. Today, it's worth roughly nothing, 26 bucks. Okay, now that's a return. What's the return? I am left with 1/100th of what I had before. It's the worst product. Actually, there is one that is worse. It's the TVIX. The TVIX over here, I think it went from, oh yeah, that's pretty good. That's true. That's like a real number. It's 11,000 down to $1.79. So if you want to change $11,000 into $1.79, sign up for that one. These products decay. They're totally flawed. You know, don't like slam your head into a wall trying to trade some of these things. If you're going to trade them, you trade in and out of it, okay? Because there's a cost to carry with the product. Last but not least, and again, this is where everybody's head's going to explode. Walmart. Okay, taking a look at Walmart. By the way, somebody said not to trade the SPX PM settlement. The SPX PM settlement has little or no volume in it. It's probably not really worth your while. By the way, yes, the TVIX is right up there. Totally aware of it. I pulled that one up probably before you even wrote that in. The TZA. Hey, if you want to see your product is like that, you hold these products for periods of time. Yeah, absolutely, unequivocally. Okay, this TZA is not as dramatic, but look at it. It's decaying. I'm shrinking. It's brutal. All right, let me go back over to Walmart because for the next 8 minutes, guys, there's so many questions, so little time over here. I like doing these things. The way I have to be in the chat room for at least an hour a day because I got stuff I got to get out. And, you know, my wife definitely doesn't want to hear about this. If you look at Walmart, big time downtrend over here. Am I looking for Walmart to pop back up? Maybe. But Walmart has been totally bucking the trend of the S&Ps lately. And I've been watching it day in and day out. I'm stalking it. Now, in Walmart, I'm not looking for a trade just in Walmart because that wouldn't be fun. That wouldn't be very Don-like, would it? I'm looking over here at the implied volatility. It's about 17%. The implied volatility down here agrees about 17%. It's an $81 stock. Okay. Then I bring up Target. Target's been the exact inverse, exploding to highs. Ladies and gentlemen, we got ourselves a trade. I'm totally into this stuff. I'm a big-time pairs trader. Watch this. Here's Target. And I'm going to take Target and I'm actually going to lay Walmart on top of it. I'm going to compare it with custom symbol. Okay. And again, some of the trades that I do, you know, this is going to make you guys reach a little bit for it. Okay. Again, you've got Target exploding to the upside. You've got Walmart coming down fast and furious. You can actually even run like correlation studies on it. Okay. And I know that this stuff may stretch the bounds of what you understand in a marketplace, but that's okay. In the correlation, we are actually going to correlate Target, which is the primary, not against the SPX. We're going to correlate Target against Walmart. We use a length of 10 days in the correlation study. And I'm not even a market technician, but I have to appreciate the fact they've become totally decoupled and they're starting to come back into coupling. And they go through these periods, okay, of ebb and flow of being almost 100% correlated and then having no correlation with each other. This divergence, I'm going after it, okay? I like to pairs trade, and there couldn't be an easier product to correlate. Target's trading for what? Almost $81. Where's Walmart trading for? Almost $81. Look at the volatility on Walmart. It's about 17%. Look at the volatility on Target. It's trading for about 18%. It is a negligible difference. Why? Although Target's volatility is 1 point higher, the stock is actually 1 point lower. So mathematically, okay, they are equivalent to one another. Somebody's like, where the hell is he going with this? Now, you can trade options around this. You can trade stock around this. The first, time I've done this in the chat room, I'm going to go easy on you guys. Okay, the way the pairs works, you get short what's strong, you get long what's what? Weak. It's not a contrarian trade. If the whole market collapses down, likely Target will come down, okay, and Walmart will come down. But Walmart has already descended such a substantial amount, it probably won't descend down at the same rate, okay, as Target will come down. And that's because they're ultimately in the same sector over there. If the market rallies up, the market continues to rally. Yeah, Target, okay, could rally, but we hope that Walmart starts to play catch up. And by the correlation down below, it appears that that is what's occurring. To trade a strategy like this, again, you have to kind of, know what you're doing over there. You're selling what's strong, which is Target. You're buying what's weak, which is what? Walmart. In this particular case, selling what's strong. I am going to use stock. Okay, I'm just going to sell 500 shares of Target. Then I'm going to turn around and I'm going to buy 500 shares of Walmart. Okay, why? Because it's a party. And I love these kind of pairs trades. The fact that the implied volatilities are so like much the same over here. By the way, these are two separate trades. They are mutually exclusive orders, but I'm going to pop them at the same time. I'm using a feature called Blast All. This Blast All stuff, it's on Thinkorswim. I don't know if this is on all trading applications. You just sell one and buy the other. Now, how much capital do I have to tie up in this puppy? Right? It ties up a lot of capital. You know, cost of the trade, including commissions over here, the buying power effect. I have portfolio margin. It's going to tie up about 12 grand of my buying power. And this trade's not for everybody, but I love doing stuff like this because I'm very easily amused. Oh, look, see, I filled on one side and didn't fill on the other side. Oh, I'm waiting. I'm working. Okay, I can post this kind of stuff into the chat room, but I am telling you, this trade will be on, okay, for quite a period of time. This is more of me, like, this is the kind of investment strategies that I look for. And returns over here solely dependent upon the two converging upon one another. Now, if you missed one of the legs over here, you can always, cancel, replace, and, rework the order and see, I'm filled. So I'm ultimately filled on both sides of the trade, okay? And I've isolated them, and I'm even going to put them in their own little group. And I'm going to watch the P&L every single day in their own little group over here, okay? You can pop out of these things on an intraday basis. You can put them on for months, for years, okay? I do a tremendous amount of pairs trading, and I wanted to bring it to the table today because just wait, here in the chat room, I'm going to be doing a lot more of this kind of stuff that I do. Yeah, I trade some short duration, okay? Sure, I do stuff like the spiders. It's like a 1 or 2 day trade. I got stuff in the SPX, 85 days, but I'm going to be pulling off this trade, okay, with about, right, 30, 40 days from now. I'll get into more specifics. I actually really bank heavily on this iron condor kind of stuff. And some people don't like iron condors because it's not like enough action for them. Okay, markets aren't always exciting. Like, I'm not looking for action. I'm looking for profitability. It's really what it comes down to. Okay, and they're not that, not that exciting of a trade. You're like, oh, this is the most boring trade. Boring is good. The Target Walmart trade, I'll let this work sometimes for weeks, even months. And it has to do with how the pair ebbs and flows. But if you can look back, like, historically, as far as you want to go in this particular pair, okay, let me put in Target again. As far as you want to go in this pair with Target against Walmart, and these things are tightly correlated. They broke apart. They can continue to diverge for a period of time, but in the end, I'll get them. Okay, and I am willing to take a degree of risk on here. This is a little bit more, again, of a quote-unquote investment grade strategy. Russell is weakening, albeit very, very slightly over here. I also want to mention once again, it's in the chat room right now if you guys are interested. I am going to be doing my first class tonight for simpler options. It's really about trading iron condors through volatility, and moreover, it's about you staying intact and staying alive in the midst of volatility. Even if you get just a little bit, okay, about how you can function more effectively in volatility, okay, then it's worthwhile to you. And I really do, like, put a huge amount of work into putting this first course together. By all means, if you can attend, come to it. It's tonight. By the way, markets are actually taking a turn to the downside right now. I'm taking a quick glance over, and my my little spider trade is now a scratch. Okay, it's up even a buck right now. That's all we needed was a 2-point move down in the S&Ps to scratch the trade out. I'm watching very carefully, though. The Russell continues to weaken. Told you, these S&Ps aren't going anywhere until that Russell can move down. And you're seeing just that right now. So, hang on to this a little bit later, but I will be closing the spider trade, okay, unequivocally by the end of today's trade. With that, again, if you guys are joining me tonight in that class, and by all means do so, we'll see you there. It's 8 p.m. Eastern Standard Time. Thanks a lot, everybody. I'll be back on tomorrow in this chat room the same time. Typically taking about an hour after the market opens is kind of the general time slot I'm looking at. Thanks a lot, everybody. Have a good trading day. Bye-bye.
Know when to hold, know when to hold up, know when to walk away, know when to run. You never count your money. When you're sitting at the table, there'll be time enough to count when the dealing's done.
Okay, good morning. Sounds like the sound check worked. And did any of you guys watch the two-step pattern video that I posted yesterday? It was the free video that I posted on the site. I also posted it in here. Okay, good. Well, anyone who didn't, here it is again. I try and do at least one of those every day. And typically you can learn something from it, or it might even be a current setup. So yeah, we did it in real time in the other, in that other place. Anyway, let's see. I think that we'll start with Apple today. Let me grab a daily chart first so you remember what the bigger picture setup is in this one. Okay, wrong chart. That's Amazon. We want Apple. All right, as far as Apple is concerned, the last setup on the daily chart for swing trade was pretty much this time and price support decision at the 121 area. Okay, we had the confluence of 1, 2, 3, 4 cycles between the 10th and 11th. Actual low is made on the 12th, which is considered to be within the time window, as we always look at it, plus or minus a bar. And we also had the key symmetry support. So this was followed with a trigger, and now you're supposed to manage the trade. Now, if it plays out fully, the initial target off of that last low comes in at 136.86. So that's what we shoot for. But you have to remember, we don't always get the targets. So this is what I want you to guard against, or what you need to see it hold above if it's going to play out. Okay, first of all, we have some resistance on this 30-minute chart of Apple. This is the one that I keep up in the room here. You have the 618 retracement of that prior swing, and then you also have a 100% projection of a prior rally swing. This is where we've stalled out so far. Okay, so that's resistance to the move. Now, you can use that and you can say, well, if it doesn't get through the resistance, then I'm going to GTFO of the trade and then get back in later. Or the other way that you can look at it is, well, I know that there's some resistance, so I'm going to trail up my stops. Where should I trail them up to? And I'm going to do the work on the flip side. I'm going to take 100% of all these prior declines within the uptrend and project them from the recent high. And then also run a retracement of the prior swing. And you could run some of the other retracements, but I think that would be overkill at this point. Ideally, if Apple is going to continue to rally sooner rather than later, or actually resume the rally sooner rather than later, you want to see it hold above one of these two zones. Okay, so 127.47 to 81 is the first decision, and then right underneath that, 126.43. And you can also use these for new buy zones if you're not in it. Okay, so 126.43 to 99. Did anybody use that to exit this trade? If you're shorter term oriented, I'm just curious, because that's the next resistance decision. Okay, all right, and then you might be looking to get back in. But remember that the way that you make money with this work is setup plus trigger equals trade entry, and then you manage it. If what I'm showing you as far as the way I calculate the work is scrambling your brain, just look at it as a support or resistance decision that you use a trigger with to get involved in it, just like the voodoo lines, okay? All right, so how many people took the Tesla setup that we've been looking at on the buy side. All right, let me go find that chart. Oh, here it is. It'll be over in this area. Okay. So Tesla, again, on this one, I've had decisions on both sides, but the most recent one with the retest of key weekly support in Tesla and the test of daily support and Fibonacci timing that told us to watch for a possible tradable low. Okay, well, this fired off on the buy side recently, but it already made a target. Okay, so it made a target on the lower time frame chart only. Now, if this is a more important low with this time and price coming together, I would look for at least a test of the resistance on the way up. Now, why am I using resistance instead of giving you a 1272 target? Well, that's because this is a counter trend trade. Okay, so it's working, yes, so far, but it is counter trend. So rather than giving you an extension target, I'm giving you other resistance decisions on the way up as targets. Now, to give you an idea of what we hit and held yesterday, this is what I gave you for the trade yesterday. You had either support at the 190, 167, the 193.13 area, or 189.76 to 85. We ended up holding above the first support zone. It did end up firing off a buy trigger, and you've met two targets already on the upside. Okay, now you can keep it if you want to, but when you make two targets in the way of extensions, if you're shorter term oriented, you want to tighten up stops, because you tend to have a pullback after it extends. And also because it's a counter trend trade, you want to be very careful. So what I did here on the 30-minute chart was I started setting up the new support that you can look at for another entry. And for the most part, I'm using some of these smaller swings that'll give you the potential support, but I'm also going to use the larger swing just in case you get a deeper downside correction. So far, the areas that stand out for support, 198.99. Again, you can use these areas for day trades. You want to use maybe a 3-minute or a 2-minute to a 5-minute trigger for entries on these smaller decisions on these pullbacks. So 198.99 to 200.51 is that first area. And ideally, you want it to hold above this prior swing low at 193.11. And then the other area, let's say 195.73 to, let's say 197.50. Okay, so you're on top of the first area where you can look for a day trade against this support. All right, so I'm going to keep that chart in the upper middle one. All right, how about, before I get rid of this was the Google setup from yesterday. How many people took this trade in Google? Okay, yesterday, or the original setup was against this low, and we had time and we had price on the daily chart. And I believe it was a 78-minute chart also. We had a nice bounce off of it, and then it looked like garbage yesterday. But within this pattern, we had a zigzag. We had support. Okay, we had 100% of a prior swing down. We had an extension of a low to a high, and then we also had the 786 retracement, and it held. So that setup zone held, it fired off a buy trigger, you've already met target number 1. Now, because we're closer to targets, I can't really set up the buy. Well, I could set up the buy, but we're not going to be close to it. It would be by taking these prior swings, setting up the retracement and all that. But instead of that, what I'm going to do is, I'll do that one on the update, but I'm going to replace it with BABA. Okay, so let me take a snapshot of this, and I will leave it on box.com. And instead, we're going to set up BABA. Now, it's easy if a stock is setting up and it's bullish on a weekly chart, a daily chart, and an intraday chart, because everything all matches up there. But when it doesn't, you actually have to consider both sides. So I'm going to show you what I have on the daily chart of this one, and it's a sell setup. So on this time frame, if this is the time frame that you trade, this is a pretty important resistance decision within this daily downtrend. It's a zigzag into resistance. So that's one decision. Okay, if you're trading off of the daily charts, then you'd be looking at the sell side against this resistance if it fires off a sell trigger for you. So that zone comes in, actually, I have to edit this level because it took out some of it. So 86.89 to 87.98. Okay, now I'm not going to keep this chart up there. I'm going to do the lower time frame, but I'm going to post this one so you can refer to it so you know where the resistance is coming in. And I'll be able to recreate that resistance on this chart, but I'm not going to because I'm just going to give you that daily chart. But what do you see on this 39-minute chart? Okay, if you're trading this time frame, which side is the trend trade going to show up on? Well, on a 39-minute chart, it is a pattern of higher highs and higher lows. So if you're shorter term oriented, you might want to look at this. So I have these prior declines that I'm projecting from the new high. And you can see that this current decline is similar to some of these prior. And then also, it overlaps a 618 retracement. Now this chart's still going to be considered bullish as long as it holds above 83.30. So if you want to look at the buy side on this one, let's look at the zone of 84.10 to 84.91. And basically, as long as we hold above here and you're shorter term oriented, you can look at the buy side. You can look for buy triggers against this support. Your initial target would be minor. It would come in at this 87.59 area. That would be the first target. Second target, 88.29. Third target, 90.31. So this is where it can get confusing for some people because they haven't assessed what time frame they should trade. The best trade setups will be when you have the time frames match up. So if a daily chart is bullish and the intraday chart is bullish, that's a better setup. Right now, there's a tug of war, but it's still tradable. Okay, so I'm going to leave this one, since it is being tested right here, right now, I'll leave this one for you guys to look at for day trade. And then I will post that other chart on box.com as soon as I get a chance to. All right, so that's BABA. All right, we did Tesla, gave you new support in Tesla, gave you pullback decisions in Apple. All right, Priceline. Now, Priceline, we talked about this one yesterday. And I just need to find where's my main chart here? That's not Priceline. Where's my other one? Okay, on the daily chart, I told you I had timing for a low, but I had no reason to consider the buy side yet because, number one, we had not hit the ideal support, and I didn't see any reversal against the timing. But now we're seeing a reversal against the timing. Okay, so we had the 13-day decline, 13-day decline, and we shifted and broke out above all of that symmetry resistance that I showed you yesterday. So because of that, now we had to shift gears in Priceline because it's now shifted to a pattern of higher highs and higher lows. That's why I set up this pullback for you this morning. Area stands out at, let's see, 1160.10 to 1165.03. Initial upside target in this one, 1191.65, then 1198.90. Third target would be 1219.85. But since we shifted gears, we broke the bearish symmetry of that swing. We took out a prior swing high. You had the moving average crossover. That's why I set up the pullback, and I will continue to set up pullbacks until proven wrong because of that shift. Okay, so that's Priceline. Let's do Spider real quick. I already went over the bigger picture stuff in the S&P. I did the video on this one to show you how this had set up yesterday. The fun part about it was that there were a few of us that were doing this live, and when S&P started breaking down and it took out this prior swing low, I said, this is what you want to see for the two-step pattern, because typical technical analysis, you take out a prior swing low, you want to get short because that's bearish. However, if you have two-step pattern parameters and we then hold above those, who's going to get squeezed? Anybody that went short when it took out this prior swing low. And that's what takes you to the target. And we got that target very quickly yesterday. And I know that some of you did very well on that one. So what we have to do now, that's the old setup. So it's kind of like the Etch-a-Sketch. You just get rid of all the old work and do it again. So I'm going to run the symmetry projections from the recent high. Look for new support. We're on some support here. I'm going to run the retracement of the prior swing. And I really only want to focus on the buy side as long as we hold above, or at least for now, 206.02. That prior swing low. Let me see about a larger swing retracement, what overlaps. Okay, I'm going to get rid of this stuff underneath the market. There's also a little baby zigzag pattern here, taking 100% of the first swing, projecting it from the lower high, running an extension of that. And again, I don't know if this is going to hold, but it is a trade setup, and it would need a trigger to tell you that it's worth placing a bet against it. So 208, let's see, the focus will be on 208.40. All right, well, that's what Don explained to you. I did not hear the whole explanation. If that means that you shouldn't trade it, then don't trade it. There's only so much that I can fit in this brain, and this is the stuff that I know about. But yeah, if it's something that's going to cause problems for it, then don't take the trade. 209.01. Okay. Maybe this is the time that I should have the S&P futures up or something like that, but I just don't have those live. All right, so that's the spider. And then the last one I'm going to do is LinkedIn. The rest of the stuff's on the update, so just go download the charts from that if you're looking for any of the other stocks. And let's see, LinkedIn. Okay, so LinkedIn on the daily chart. Again, you have some mixed parameters. If you look at all this data, this is still a larger bullish pattern that has potential for a rally. But if you're focused on the shorter term, you can see you can make a case for the sell side too. So what do you do with that? You take it from one decision to the next. We had time and price support that hit at this last low. And now the question is, are we going to be able to get through this resistance or not? So I'm going to show you what it needs to clear. Okay, I think it did clear that. Most importantly, the resistance is going to come in with that symmetry. So 265.02 to 268.11. I will take a snapshot of that one for you and then post it. Okay, but on this time frame, if this low is any good, your target's up here. I don't know which side's going to play out. What I do know is that this was a support decision. This is a resistance decision. I'll give you a snapshot of this chart that also shows you the 30-minute resistance. This was also on the update. But then I'm going to take a peek at the 30-minute chart here. And I may come back later and do a little bit more of this work, but I do have to take care of somebody that's in my backyard. But here, you can make a case for a low-risk buy entry. How? Well, first of all, you took out a prior swing high and you're having a symmetrical pullback. So I can set that up. So I'm going to take 100% of this prior decline, 100% of this prior decline, run a retracement, actually run two retracements. And you can make a case for this chart being bullish as long as 255.45 holds up. You're in the pullback zone here, anywhere from 256.41 to let's get rid of one of these. $258.45. So for a day trade, you can go down to a 2-minute, 3-minute, 5-minute chart and see if you get a buy trigger. If you do, you can take the trade. You can define your risk underneath that low. And your first target would be 264.33. So there's multiple setups on LinkedIn. Again, which side you choose depends on the time frame you're trading or what you've written up in your trading plan. For those of you who don't know how to use this work, what a trigger is, I have a full 9-page, I think, set of guidelines on the front page of my website. So if somebody can post that, that would be very helpful. Okay, so are there any questions on the ones that I've done in here? Again, if you want to simplify it, just look at it as key support or resistance decisions. You don't have to know how to do it the same way that I do it. You can start by looking at it in a simple way. If you use the formula setup plus trigger equals trade entry, and then you manage it, and you have good psychology, you should be able to make a fair amount of money with this method. Yeah, we don't know if length is going to trigger or not. So that's what you wait for. If you don't get it triggered, don't take the trade. Oh, Facebook, huh? I didn't even look at that one yet this morning. Oh, nice. Okay. Yeah, so this was one of the recent ones. Oh. Okay. Yeah, so after that last cluster, it's getting close to target number 1, which is 83.28. So let me post that chart along with those couple others that I said I would give you, and trail up those stops as you go. 83.28 is one target, but then you have the bigger picture target up at 84.54. All right, on that note, I've got to run.
They're coming to take me away, they're coming to take me away, oh, to the funny farm where life is beautiful all the time, and I'll be happy to see those nice young men in their clean white coats, and they're coming to take me away,
Hey everyone, good morning. Good morning. Quick mic check, please, if we can. This is Neil, actually, not John, Neil. And we'll get started here in just a sec. Let me get my screen share rolling. Take just a second. I kind of honestly lost track of time. Caught a little bit off guard there. Was looking through some charts. All right, starting screen share now. You should see it any second now. And if you're in the trade room, of course, you can select my screen from the drop-down menu at the top. Otherwise, in the open house this morning, by the way, good morning and thanks for joining us again today. You should see the screen automatically shared, I believe, and look very similar to the very first chart that or set of charts really that I showed yesterday morning, be it a TradeStation chart. So, all right, thanks, Brett. Talking about the 12:30 trade yesterday. We can talk about that a little bit. So yeah, let's kind of review, I guess. Let's start with a review of yesterday, and sort of, I guess, with the idea of maybe answering any questions that could be lingering on the concept that I shared with most especially the open room attendees, because quite possibly could have been one of the first times hearing this, kind of concept or approach or whatever have you. So this is a look at yesterday, actually. And as we were together in the morning, we discussed the pivotal tendency at that 9:30 Central, U.S. Central, which is like Chicago. Think of it as Chicago timestamp. And with that, the higher likelihood or probability that the price action tends to reject and go back into the mid. Now, it can go down first, and if it does go down first, then it'll pivot higher and go back into the midpoint / volume weighted average price. And then with that, it clearly rejected the mid and traded higher. I was looking for it yesterday morning as we left parted company. I was looking for it to more likely breach the high of the initial balance, and with that, I shared with you a target up here, but we can see it failed to breach the initial balance high, and therefore then traded back into the mid again, and actually traded and closed below the mid. So now we have to shift our mindset, and we think, oh my goodness, okay, well, okay, plan two, what's going on? And so let's shift our thinking for just a minute and say, well, all right, remember we had the discussion of the rather tight inside day range the day preceding, and let's get an idea what that looks like. I'll just show you kind of real quick. The day preceding, well, if we can see it on there, it was that little tiny day right in the middle there. And, that's a really tight range day. And so I look at that and I think, all right, this is just sort of the way my mind works. And so you have to pardon me for just a minute and just say, well, okay, it can be a little kooky, but here's kind of the way I think. If such a high percentage of people trading, lose money, then, my mind sort of shifts to then a line of thinking along the way of, well, what does the market then have to do in order to basically kind of confuse the most people or throw the most people off guard kind of thing. And so with the low the day before of like 2056 or so in the S&P, then anybody that was on to that same sort of line of thinking that I was on to, which was, boy, Yellen sure has been market friendly and rather accommodating, and it seems that on the Fed announcement, the market has been more likely, really consistently, to be honest with you, to catch a bid and trade higher on these FOMC announcements. And so with that, if I'm going to be long, well, then we're a lot of people, especially folks that don't have the advantage of, being in a trade room like this and hearing, these ideas, observations, and sort of tendencies, and and so where are a lot of people going to, if they want to be long, question where are they going to have their stops? Answer, I would imagine a lot of them are going to be right behind the the preceding day's range, right? Okay, well, I'm going to get long. Where am I going to put my stop? Well, I'll put it right below yesterday's low. That should be okay, right? Nope. Answer, no. Because Mr. Market, leave it to Mr. Market to go, like I said, throw the most people off guard. And so what does it do in doing that? Reaches down, touches, 4 some odd points below the prior session low, and finds, wouldn't you know it, yes, the initial balance extension that we all discussed yesterday. So, if we think that's coincidence, then we can go look at and talk about now today. Oh, and by the way, somebody talking about the 1230 thing yesterday, that's approximately when the bid came in for the Fed. I've noticed it, I got to be honest with you, there were a couple of times where the bid actually started into the Fed. And I mean, of course, you could catch it at 2:30, but it actually started at 2:15. I've seen it start as late as 2:45, but it's like right in that little 30-minute pocket or window where the bid has started to come into and on the market, where the stock started to trade higher, or stock index futures, or whatever you choose to trade. You could do this with SPX, SPIs, whatever you want to do it with. It doesn't matter. Personally, I choose to do it with a futures product, but that doesn't matter. So essentially, the time of day where we talked about buying it, yep, and wouldn't you know it, right off the initial balance extension. And so you say, well, okay, that could be coincidence. Okay, that's true, and could be. And then we go look at today, and we say, all right, well, let's look at today and talk about today. So we form an initial balance. it is, remember I said on average 8 to 10 points wide. What is today? 81 by 89, 9.5 or whatever. That's 8 points. And it's rejected at approximately what time? Yep, 9:30. And does what? Pulls back into the mid, but does not reject the mid, closes below it. So now we think, unlike yesterday, actually I'm kind of a little bit more bearish here against this. And so I try to lay out, some targets. And I said, well, what was the range of the initial balance here? Well, I know what to do. I'm going to grab 50% of that, subtract it from the bottom, and then go look and see if I can make a case for that. And in this case, it wasn't too terribly hard to make a case for this, because that price right there not only aligns with, and I think, by the way, we're going lower is my guess. We're going to 72, but I'll tell you why in a sec. But so anyway, you get your and you get your 50% extension. And you say, well, since we closed below the mid, and I'm a little bit bearish against this anyway after such a capitulation type move yesterday, not sustainable type directional move, momentum type thing. I mean, it makes more sense to pull back. So then what conceivably is a target? So I put it in the room earlier this morning, and I was like, well, I think 77 should be our first downside, target. And I've got another one is at 72, by the way. But so if you pull the range from yesterday, you'll come and find that approximately 77, 76, 77, whatever, is 50%, back on yesterday's price action, and then right in line with about 71 or so right in here, which basically coincides with our initial balance extension number 2, is like a 618 on yesterday. So kind of feel like we might continue to sit down just a tad, a little bit more is my thinking. And so basically, in kind of recapping what we discussed yesterday, we started there. So I guess we could start there again this morning. So in anticipating that, what is this? Now we want to go to ESM. In anticipating that, where you may have some long S&P exposure. By the way, I was talking about doing Dow yesterday. I ended up actually going with the S&Ps. I don't know why. It's like I said, it didn't matter. It's a personal choice. You actually could have gone with the S&Ps or the Russell and ended up with about the same net effect. But so on the highs this morning and anticipation looking for a pullback, what I kind of thought I'd do was hedge it with a little bit of Dow, so that I'm not really giving back anything in the S&P where I'm short a little bit of Dow, right? So then, of course, one question may come, well, all right, but why go to all that trouble? I'm gonna bring you a chart over here in just a second, try to make some sense of this. Actually, you know what I need to do real quick? I'm gonna kill that. Let's see if I can get this chart to cooperate. I'm having a hard time with my Thinkorswim. Is anybody having a hard time with Thinkorswim this morning? I am. And I don't know if I'm going to be able to go back and look at the history over this chart with you that I was hoping to do, because I'm having a hard time with the platform actually as we speak right this minute. I've been having some trouble with it this morning, but okay, so you can do this on your own. This is not terribly hard to do. It's not terribly difficult, but here's my point. I was going to go back to all the way through like 2014, basically, and show you basically this is what I was looking at. And here's why I would maintain a bullish bias, even though I'm thinking in terms of a pullback, like this morning. So I go back and I look at this chart all through 2014, and I find that this day right there, that is the end of the week prior to the monthly expiration, look at what it does. And you go back and do this for yourself, and you'll see that on average, you get this 1, 2, 3, 4, 5, so that'd be Monday, Tuesday, Wednesday, Thursday, Friday, maintaining the bid into the expiration. And then maybe Monday or so, something like that, come off a little bit. And so do it again here. We got there's a Friday prior to expiration. So that's a Monday, Tuesday, Wednesday, Thursday, Friday, boom, into the expiration, and then sort of started the roll a little bit. So here we are again, right? Friday prior to expiration. So I'm looking Monday, Tuesday, Wednesday, Thursday, Friday, still got maybe another day or so in my mind, possibly worth of uptick on this into the expiration. Who knows? I don't know what tomorrow brings. Okay. I don't know, but I'll give you the same sort of, theory type deal as, yesterday morning. I'm looking for these clues is what I'm looking for, You know what I think I'm going to have to do, guys? Give me one sec. I apologize, but I swear I think I'm going to have to shut down and restart my Thinkorswim. Because it's absolutely like, it seems to be like completely locked up. That's weird. It does. It really seems to be like completely just messed up. We'll deal with TradeStation or something then for now. So, a Java upgrade I'm seeing in the room. Scott Ever Jim says a Java upgrade this morning. Maybe that's got to do with it or something. I don't know. Right now I'm trying to figure out even how to force it down in order to be able to restart it, honestly. Wow, I hate that. That kind of really takes us off our game there for a minute, doesn't it? Boy, let me just say I'm sorry I'm taking a minute here, but I'm having now a very difficult time with even my TradeStation platform. Y'all, excuse me 1 second. I'm sorry. It'll take me a second. I hate this. See if I can at least get this to work now. Okay, well, we'll go with this for right now then. And I may try and restart Thinkorswim in a minute. But at least we got something that we can work with now. So sort of really throws me off, though, to be honest with you. All right, so let's go in keeping with, I guess, the theme, if you will. We'll go with our yesterday's look at a few of these things. We were talking about a believed to be high likelihood, I guess, if you will, probability of a pullback in the dollar. And this actually comes off of, now I would show you if I could on my Thinkorswim platform, because I've got some programming in that one that I don't have in my TradeStation platform. But actually, if you were here yesterday, I hope you recall the little signal that we all saw up there yesterday. That was absolutely the inverse of what we saw in the euro. We'll go look at the euro in a minute too. But it indicated, to me, I believe to be anyway, higher probability likelihood of a short dollar. And so I go start taking a look around to see if I can find anything to, basically show confluence with that, line of thinking. And we found it in the euro. Now, the first question, obviously and likely, is going to be, were you looking for such a, drastic move? Answer, no way in this world. Absolutely not. I mean, who in the world would think that it would sit down, 4% in whatever it was, like 4 minutes or something like that after hours? But reasonably, yes, indeed, we were looking for a pullback. Anything like what we saw yesterday, it was just, icing on the cake or whatever, but that actually, I hope some of y'all got on some of this. I mean, I guess I got a couple of emails saying, you know, wow, what a move or whatever, but that was kind of nice. The euro was the other thing that we looked to. In literally, if you put the two charts side by side, you'll see the absolute perfect inverse correlation, but same formation, same chart pattern or whatever that that indicate. And we had on the Thinkorswim platform, we had the custom programming where it had the little buy signal down there that said, yeah, up tick likely on euro, down tick likely on the dollar. And so same story here, you know, if you ask the question, well, would you look for such a dramatic move in the euro yesterday from 106 up to 110, 400 ticks? Answer, no. Nothing like that, just an uptick, not like, you know, that it was supposed to necessarily go bid for something silly like 400 ticks. But there again, I don't know, call it icing on the cake, I guess, if you will. Went long 96. Yeah, that's good, Joseph. Actually, I got a couple of emails of folks that did exactly that. They faded that drastic move in the dollar yesterday and are quite happy with that decision. Both the short and with that, you know, that drastic selling that we saw down into 94 decided to actually fade that move back in the dollar, which, as it turns out, obviously is quite a good move. So that was pretty neat. Trades in the room, yeah, I think John, I would say like all the time. I think, yeah. John's asking if I make trades in the room. I would say yeah. And by the way, too, John says, well, you know, do you make trades in the room? For anyone in the open house, we're juggling the scheduling around a little bit for this purpose of this open house, so that you can hear from all of the trade room moderators at different times. So you get a little feel for John in midday, and then also today for a feel for John on the close, for instance, that kind of thing. Normally, I am on and moderating on the mic and going through charts and that kind of thing in the afternoon from 2 to 3, from 2 in the afternoon until 3 around the cash close. And so what I'm doing in that case is posting trades in the chat throughout the morning with the targets and that kind of thing. Like, for instance, that question was from John in the room, so you should have seen my post in the room earlier with targets for the S&P trade, that kind of thing. So, all right, let's see. And moving along, the other thing, what we talked about, the S&Ps and when to buy them, or any index futures, it didn't matter which ones, that kind of thing. Some of the other things that we had on our list was the move in the Australian dollar and the fact that it had recently fired that squeeze, and that, you know, you'd look for then selling opportunities as it moved back into the averages. Now, you'd ask the same question, like, wow, are you looking for such a drastic move in the Australian dollar on such, you know, US dollar index weakness? Answer, no. As it turns out, you know, that's another good entry. That's just basically as it turns out. I mean, I've got a, you know, voodoo target down here like 75. That would be, I would think, you know, target. But that's kind of, that was a more, there was more volatility in a couple of these products yesterday due to the dollar than I was really looking for. Exception, and here we go, was in the yen. Now, this one I'm really trying to figure out. I've got some puts in FXY and trying to figure out how much I like this. And I'll tell you what's got me here. With the yen up yesterday, and it was up. I mean, it was up kind of nicely, actually, about, you know, 100 or whatever at one point. With it up yesterday, I look at it and I say, okay, well, it's allowed to be up yesterday on dollar weakness. However, the normal correlation that I look for, and I really like correlations, you know, and I look to them an awful lot. Like in the morning, for instance, if the yen is up and the bonds are up, I already have sort of an idea that I'm trying to be short stocks, you know, at least for the first part of the morning. The question is always, okay, well, when to sell them, and, you know, and where to sell them. And then I would take you back to my line of thinking that I just shared with you a second ago, and that is that, well, if Mr. Market is going to go to work and confuse as many people as possible, then the answer is, if you're trying to get short, then the way I do that is I sell into the initial bid that is likely on the open, right? So if I come in, for instance, and I'm making the point to correlations here, trying to figure out what to do with this yen. If I come in the morning, yen's bid for higher, bonds are bid for higher, I'm thinking, okay, I'm trying to be short some, you know, some S&Ps, Dow, NASDAQ, Russell, something, or maybe all of them. Question, how do you do it? Answer is let them bid up a little bit, get people long, sell into that, and as it hopefully then starts to roll over, we'll use those stops, those sell stops that are underneath those folks' initial longs in order to help, you know, kind of propel the move. So I look at this and I say, all right, well, yen's okay to be up a little bit yesterday on drastic dollar weakness, but this is an important time for me for the yen, because with the otherwise correlation with the stocks being as bid and healthy as they were yesterday, and that was a drastic move, by the way, then the normal correlation would have yen lower and or looking for yen weakness, and I'm not seeing that. And so that is definitely on my radar, I have to tell you. That right there, okay, that's telling me something stinks. That plus the fact that I was trying to show you that Thinkorswim chart a minute ago, which kind of indicates bid likely into the expiration, and then almost immediately thereafter for stocks to come off. And so if that's the case, and we go bid into, you know, expiration tomorrow, and then Monday or Tuesday start to come off, well, guess what? The yen's telling me that it's ready to regain an uptick. And so that is very much on my radar, and I would caution you all to consider looking to the same for clues. I mean, it's definitely at least good for that, for a clue. You'll have to tell me how much I can't remember how much we got into the ags yesterday. I know that we cover them daily, and to some extent, you know, I could say even almost really extensively in the room. And that is that we were enjoying this uptick in the beans and corn both. And then we were met with, well, John did a video one night, and he's like, we're coming into some resistance right up in here, and all of a sudden they start to fall out. We have an ag report, a crop report right in the middle of this. It was quite seemingly at least bearish in nature, and watching the price action on the report couldn't lift its head, and they continue to sit down again. With that, we've gotten a fresh squeeze that's now fired. And so, if you're not on this, I can tell you that, a short in at about like 385 or so, something like that, it's worth trying. It'd be worth trying. It'd be worth trying. If you don't. Yeah, sound's cutting out. Let me do another mic check. Is that okay? I'm good now. All right. Let me. I saw where I might have lost a screen share. Is that correct? No screens. Okay. Give me just a second. I can fix that. That is easy. It may, in fact, you know what I think I'm going to do while we're kind of setting stuff back up here. Let's take a chance, try to restart the old Thinkorswim just a second. I'm going to give Toss one more chance here this morning. See if we can use it as well. All right, so that was corn. Going to the, we're going to see the same story basically in the beans. Although the beans actually have been, this is another one of those things where if you're in the room, you already know about this, you're already on it. If not, then you're going to have to wait. If you're just hearing this for the first time, I would encourage you to wait for a retracement back up until like 990, 993, so something like that, in order to start to leg back into this idea for short. This was one that actually John called some time back from literally the highs up here at like 1040. So if you're not in this, then you'd be kind of chasing it, in my opinion, in order to try to get it at this point. All right, let's see what we got. Looks like we might have, yeah, we got a winner. All right, well, good deal. All right, looking for a bounce in the yen, question from Chris. It's on my radar, and I've got some yen exposure via FXY, and so it's definitely on my radar. I'm just trying to figure out, really what to do with it. It's a bit confusing right now to me because of yesterday, the way the yen traded. One, I can give it credit for the bounce on the dollar weakness, but then two, wondering why it didn't sit down any more than it did on the stock strength. So a bit confusing, honestly, at this point for me. All right, making our way on through. This is a really good sign for those that have been on this live cattle trade. The target again for this is like, we basically decided to split the difference up here at like 159, 160. We said, let's just split the difference and call it like 159.5, essentially, right? So this has actually come really right as of yesterday, and this turned out to be a really nice trade. That and the coffee, which I absolutely, listen, when we're taking heat or in something that's not really a lot of fun, trust me, you have a hard time beating me to the mic. I'll be the first to admit it. And this was honestly no fun for 2 days, but it took all of 1 day to really come right, and since then has been marching really and making its way to target objective up here at approximately 150. We call it 150, 151, where we're all of kind of this opinion where we're going to evaluate it for a possible short. And that target, if we can see any sign of weakness at approximately that level, then we'll consider hopping back on that for new lows down here. Right now we're in retracement mode, and believe it or not, it doesn't look as pretty, okay, but this is exactly the same pattern as what was laid out in the dollar and the euro, both. Not as pretty because of the heat that was, we took 2 days worth of heat on this, but this is really starting to come right. And after 2 days, it only took like really one session to turn itself back around, so that's kind of nice. The other that we kind of need to catch up on is the lean hog short on the squeeze. Uh-oh, didn't get the little forward. This one too is working out quite nicely. This is for this is basically just the squeeze that nailed this one. And if you remember from yesterday, I received an email that cautioned me, don't just look at the continuous, go ahead and populate the April 15, and you will at that time see that we're in a squeeze that's about to fire with that. return back to the 8. It's been nothing but net since, and so this is kind of cool. Looking for further continuation in this. No reason not to, in the fact that it's it's been cooperating perfectly. We've got what, six bars deep into the squeeze, average 8 to 10, and so give it a couple more sessions, and then we'll start to lighten up on it a bit, because there is at least that cautionary note that we could be running out of momentum in just a couple of sessions. Question: you have a long Macoca. Okay. Let's go look and see if I've got anything for you. Macoca. Oof. Let's go use 1, 2, 3, 4, 5, 6. Am I looking at this correctly? You've got a long Macoca. I don't see anything here. The only thing that I could point to here is the fact that both the SMI and momentum are below 0. We're 6 bars deep into this negative momentum on the squeeze indicator, and extended. This is the main thing for me. Extended away from the averages. And so if I could find anything in here like this voodoo or whatever that would tell me, okay, bounce, then not now, but then I'd be looking for bounce back up into the averages. So I'm not really seeing terribly much there, to be honest with you. I mean, this is still clearly in a downtrend since I received that sell signal back on March the 6th. I don't have anything there. All right, so any more futures products here? Let me look real quick. Oh, okay, gold. Tony's gold is working out obviously quite well. With that, check this out. This is probably worth noting. These things work more often than they don't. We're getting, now conceivably the day's not over yet. This indicator is capable of and can and sometimes will repaint, meaning that if gold were to drop drastically between now and the end of the day, that signal is free to have itself check out and disappear, i.e. repaint. As it stands right now, it looks like it's good, valid. We're what, almost halfway through the day. Gold goes out in an hour essentially. There's there's like a little trade after 12:30 in gold. So I'd look for further follow through, uptick in gold, bottom line, and where to would be the question. My thinking initially would be back into the same targets area that I gave you yesterday, around 11.95 or so, something like that. This looks like it's got more upside follow through to me. All right. And is there anything else on here? Let's see. Nat gas, I shouldn't even look at because it drives me crazy. The treasuries, they continued, although we got flat in front of the Fed treasuries yesterday. They did continue higher. That enabled the notes actually to make their objective, which was their rollover gap. And so that was actually filled yesterday. Generally speaking, and that doesn't mean it's going to happen this time, but I've noted that recently, as that particular rollover gap, the notes is met, then this product begins to back off a little bit. And so that was like honestly the objective that initially Tony had in mind when he put this trade on back at like 159. So target objective met on that, honestly. Look. Went through the currencies. All right, so that pretty much does that. Let me go through a couple of the recent squeeze fires. I'm seeing one question in the room right now on this one. That is ESPR. This one I heard Henry touch on a little bit this morning. This is one that we've been on for a while in the room and been really enjoying. You can see the last signal we had on this was way back at like 60 some odd, $65 back here. It's moved pretty drastically since then. There's a recent squeeze that fired about 5-6 sessions ago, and this just really continues to make for strides up. Another 11 some odd % today on $100+ stock. This is one that you definitely want to have on your watch list. There's no question. Recent squeezes, keeping with that theme. Yeah, this one's not so pretty. Although, as it crested the $100 mark, I'd be looking for it to make this voodoo objective up here. We'll call it 110. It's only 4 bars deep into what was a relatively short in duration squeeze. Not short as in fired short, but short as in duration, because it was only 2 dots. But for Disney to hold support on its ADMA at like 106.5 and make for a 110 objective on that recent squeeze firing long, that would make sense. I'll get to that OPK. I've got that on my list too, but I don't have that in this current theme of recent squeeze. This one, however, this is a therapeutics, much like that ESPR. We got on this theme in the trade room, and I think it was Henry's noting the how John had this tendency to be enjoying some of these healthcare stocks, and so I started to run some scans in that sector. Found a number of them to be either pharmaceutical or therapeutics, and so this one's been on our list for a while. FOLD up, I would say, pretty drastically today at 30 some odd %. That's like flying. That's also, by the way, on a recent squeeze fired 3. It's in its 3rd dot right now, squeeze, and so realistically, there are folks that are already on this from the squeeze firing, and it's sitting on the ADMA right there, so that's actually quite a nice little deal. Another one that I've got on my list that I really like is this one. And notice, if you can see the squeeze at the bottom of the screen down here, you can see that it is just firing today. So this is a brand new signal for anybody interested in this. I like this ticker. I have liked it. I've had interest in it since back here at like the 16th, as you can see on screen, and the squeeze has now fired. So you're now, if you're interested in this, a buyer on first retrace back into ADMA, which is going to have to have it sit down for you a bit, but it's at least worth adding to your watch list there. Ticker PAYC if you wish. PAYC, Jerry. PAYC. Now, this one you're chasing. My honest opinion, if you look at it now, we've been on this for a while in the room. If you're just hearing this for the first time today, you're chasing. This is a buy on retrace back into the averages, and honestly, I'd let it sit down 22 or so, something like that, from where we first got the signal. But it wasn't a squeeze. The squeeze it didn't last for very long, and actually decided to go ahead and fire long at the time. And of course, like I'm pointing to, we actually had this from back on 10th or 11th. But again, I think this is worth adding to your list. I mean, this is one of the ones that we're interested in the room. And looks good. It just, in my honest opinion, if you're hearing this for the first time today, you're chasing. So let that one sit down a bit. Add it to your list. Let it sit down. Put an alert in back at, say 23. Start to watch it maybe for a buy back at like 22 quarter or so, something like that. I gave you Ann, I think, yesterday. That meets with the recent squeeze sort of mode. It's up again today, not terribly much, but it's actually been up. It's been up as much as $3 or whatever higher today already than where it's showing right now. This one I gave you yesterday, so and that gap, second channel. We'll have to keep an eye on that one. Okay, I was asked just a second ago about this one, OPK. This one meets with a theme that I've got on my list for rather lengthy squeezes, and with that, I'm interested, and I reference these like literally every day, looking to see when that squeeze is going to fire, because it's like at least 12 or so bars deep in the squeeze, and so when that fires, I definitely want to be aware of that. Ticker is OPK. I've got interest in this, but really more on the squeeze when it goes. So does that answer the question on that from the room as to what to do with it? I'm basically kind of in wait for the squeeze mode on that one. Let's see. I don't think that I need to touch on this one because Henry already did. It's on my list as having a really pretty lengthy squeeze that I'm interested in seeing fire. I believe it'll go long. We don't know that until something happens with it. But at this point, the squeeze is probably, I don't know, 12 or so days in, and the momentum's on the buy side, on the high side of the zero line. Holding its averages well, you can see it pulls back into like its 21 period frequently, and just maintains a bid with every retracement. No certain guarantee as to what what'll happen tomorrow, but that's where it's at right now. I'm being asked to look at this one. All right, now this one I do not have on my watch list, but wow, it is doing really well today, up 12% off of its, basically you could call that kind of a collage of averages there. I wouldn't even, without zooming in, no. What you're looking at basically is like a 2 standard deviation channel. It's right on the center line of that, held its averages by signal day, momentum above 0 in a rather lengthy squeeze. Momentum on squeeze is going above 0 today, as you can imagine, with that bid. I mean, this is definitely something to like. The way I would do it would be on retrace back into the ADMA. However, there's no guarantee that it'll do that or retrace for us, but that's the way I would treat it. It looks great. I mean, it looks good. And of course, being a pharmaceutical stock, I like that. Another thing too, let me point this out real quick. Because something is going on here with Rite Aid, and I don't know what it is. This is one of those things like when I looked at Dollar General in the room the other day, I was like, look, you can't deny the fact that there's something going on here, and that this stock is bid in Dollar General, but I just don't. In this, I don't like that. I don't like the store. I don't get a good feeling when I go in there and shop. So, I kind of tend to basically shy away from that stock because I don't like the company. I don't like the store. Well, I know people in the business of selling to stores like this, and I will tell you that they will not sell. It's got to be, it's got to be rumors of a buyout. It's got to be. That's the only thing I come up with. LB says rumors of a buyout. Because here's the thing. I know people that sell to stores like this, and they will not sell on terms. When they're selling into like the pharmacy stock, they won't sell on terms. It's cash, right? Because they found that they have a hard time getting paid. So I know that, and I know that I'm scared of Rite Aid stock because I know that story. But then I look at this and I'm like, dadgum, man. I mean, for days and days and days, I keep getting, this thing makes my scans day after day after day, and it's doing nothing but uptick, 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 uptick. Then boom, get a buy signal, huge volume, follow through. There's something going on here, and the only thing that makes any sense to me is exactly what LB just wrote in the room, and that is, some type of buyout type rumor or something like that, right? So Walgreens, maybe buying out Rite Aid, which would make sense because, you know, you look at this stock and you can see that, and I know for a while, because I know, like I said, people that sell to them, I know for a while that they've, you know, have had cash flow problems. So that buyout makes sense. All right, that's all I can say. But you look at this chart, and you may want a piece of this. So, and that's why I bring it up, right? Maybe somebody makes a few dollars on that. I hope so. That would be nice. Okay, well, let's keep with the, may as well keep with the theme. AMPH, I believe this is one that traded. Yeah, we've looked at this a couple of times. This is not really the one that like John's been on, but we've been on this in the room a little bit. That tells me that we're likely to see retracement. You get an extended away from like the midpoint of this channel. I'd let this thing pull back, honestly, back into like the 34. 21, you take a leg in and on the 34 because you watch it and it does pull back to the 21 pretty frequently. All right, so that's ticker AMPH if you're interested in that. This one we look at literally like every day in the room and have since it was probably $10 or $10.50 or so, something like that. It's at $14 today. It's on its highs. If you're seeing this for the first time, I can't remember if I gave this to you yesterday or not, but if you're seeing this for the first time, you know, I mean, you can see the tendency for it to pull back into the ADMA. I'd let it do that and be a buyer of this oncology pharma stock, ZIOP. You can ask, would you sell the S&P here? Let me go look and see if I can find anything for that. I don't think it'd be the worst thing in the world, but it depends. You know, I was asked earlier, like some folks were long the S&P and asking like, well, where do I trail my stop? And I was like, well, that's a really tough thing because, and the answer was, it depends on what your game plan is with this, because I still see lower and initially into 77. And then honestly, maybe is maybe even deeper down into like 72. So let's see. To sell for a 72 target, which is a 71 or so target, which is like a 618 on the daily, you may consider selling like an 81.82 so that way you know that you're looking for a 10 handle move into your target 71.72. If that, you know, if you're looking for that kind of move, if you're interested in, you know, get 5 handles in it and scale, and then, you know, your target would be the 10 point move into 618 retrace on the daily down around 71.72. Yeah, TKMR, be happy to. That's one that I think we like. Yeah, look, another 2.5% today. Retrace into the 8 holds. Looks good. No squeeze or anything on this one. Minimum about 0. Good. I mean, you can see you got some $21 overhead to contend with, but other than that, I mean, you know, this is one that that I like, and I mean, it fits. It kind of fits with the theme that we've been on for a little while and looking for some of these, when possible, $15, $18, $20, pharmaceutical stocks that tend to move, when you can get like that's 3% in one day, for instance. So yeah, I like that. Absolutely. No question. Oh, and speaking of which, and this is a little higher price, but here's one of my favorites actually. There's nothing not to like about this. Allergan, I mean, this thing just makes strides, it seems, daily, and it blows off any kind of little sell signal that I can come up with. It just doesn't seem to matter. Anything pulled back into the 8 seems to be a buy, and up she goes. ticker AGN, Allergan. Now ACT, yeah. So let's see, what about BMY and Teva? I gave you yesterday. If we want to look at, I actually started to worry because these guys, Mylan and Teva, actually compete for new drug, for manufacturing purposes, for new drugs that are coming off patent. And so, you look at it and you say, okay, well, who's winning, this fight, basically? And, it's just, they just uptick every day. And you look at the charts and the answer is really both of them. With this, it's kind of like a pick your poisons kind of a thing. But they are like literally, fighting it out tooth and nail daily, watching for anything coming off of patent and interest. Their interest therein lies in manufacturing, the generic version of that for distribution into, pharmacies. So those are MYL, Mylan, and Teva, TEVA, Teva. And both of them look fantastic, absolutely. And both recently came off of a lengthy squeeze, fired, and it's been really the kind of push. Like if you look, this is the day it came off a squeeze, right? And so this is the kind of push that's the purpose of the squeeze. Is you're looking for something that traded sideways and coiled and had energy. And then once released, you're looking for a dramatic move, and that's pretty much what we're seeing right here. So this is actually, one that I really like, and we've had on watch list for a while. Here's another. Now, again, same thing as I mentioned before, if you're seeing this we all know about this one from the room because you guys have been trading this one and doing really well with it. But if you're just in the, if you're in the open house and seeing this for the first time, you can't get it on it up here, in my opinion. You're chasing it. You got to wait and know that we believe we've got a good stock here because we've been trading it and doing well with it. But you're going to want to, if you're seeing this for the first time, you're going to want to wait and try to catch this on retrace. My guess would be back into 42.5. Something like that. And if you can't get it for that, just let it go. But the IPXL Impacts Labs, this thing's been doing, quite nicely for us now for a while. The scans that I'm using, the one that I really like, Robert, I showed yesterday, is the simpler stock scan. And specifically, it depends on your time frame that you're trying to look for, but where I'm looking for something that has, I'll call it higher probability, I believe high probability anyway, of having a nice move. I'm looking to the daily nested squeeze, which means that the weekly squeeze is fired and is either long or short. You can decide that. And the daily squeeze is setting up. So you have advanced warning. So to be looking for this one to fire, say long or whatever, short, whatever you want to scan for. And so it's really easy to set that up. You go into your watch list, and like I was showing yesterday, we all have in the room, as members, we've shared this, and so we all have access to this, putting the squeeze in our watch list like that, like I see here, right? So if you had a weekly squeeze that's fired recently on a ticker, and you see that your daily squeeze is setting up but not yet fired, well, then that one goes on your watch list, right? So you can go to the Simpler Stocks scanner and subscribe to that. That's terribly inexpensive. It's like less than $50 a month or something. It's anyway, you tell it what you're looking for. A nested squeeze, which means the weekly is fired, the daily is setting up. Hey, put it on my watch list, and let's watch and see when this thing fires. And when it does, I go to that chart and I say, okay, now I know to start working bids on the ADMA. 1, 2, 3, simple, easy like Sunday morning. So that's pretty much kind of what I'm doing. I got some other little things like I'm looking for these little arrows that I'm showing you, which is kind of a custom type thing that, we're looking for. Kite made that today, and somebody just asked me to look at Kite a second ago. You see that the reason that hit that scan is because it got that little arrow today. Yep, and thank you for that. Very true. Nalini in the room says most of these biotechs you're going to have to trade the stock, the outright shares, because the options are both thin and wide. Absolutely yes. Which has me, by the way, very much the reasoning for my looking for the price points that I'm looking for, so that you can with ease trade the outright. Absolutely yes. I'm looking for stuff, that is in that like that NVAX that I gave you the other day, that Novavax pharmaceutical thing. I mean, that was like, $9, and it's got a story. Right? $9.50, and it's got a story. And part of the story is we've been on this one since it was like 7.5, and now it's at 9.5. And the story behind this is they're working to get clearance, FDA clearance, on an Ebola virus vaccine. Now, I don't know if they'll get it. Nobody knows if they get it, but if they do, I made the joke yesterday. I was like, I don't know where the stock's going to be, but I would imagine it's going to be a whole lot higher than $9.50. And so, yeah, you're right. You go and look at the trade tab on something, like this one, if they're optionable, yeah, they're going to be thin and they're going to be wide, and especially in these price points. But I'm doing this so that, we have some, one, out of the box thinking, two, these things are tending to move in, like percent points, like 3% a day and that kind of thing. And when they do, you can be on the outright shares because they're affordable and take advantage of, some nice profit potential. You know what I mean? So, but yeah, you're right. Absolutely, you're correct. Gary making the point that ZIOP, this oncology drug manufacturing stock, was $2 in October, and it's $14 today. So that's the kind of stuff that I'm up at night, looking through stocks so that I've got stuff to share with you guys in the morning, honestly. So. Which is cool. I mean, I really enjoy doing what I'm doing. I do my homework anyway. I'll tell you that right now. I mean, I absolutely do my homework. But when I know that I need good stuff to share with you guys the next day, I'm doing my homework. I'm up at night rolling through, stocks and scans and charts and looking for stuff to share with you all. Yeah, FOLD, we've been on this one for a little while now, and that's an explosive move. Yes, that absolutely explosive. Yeah. Okie doke. Let me look and see if there's anything else, some other stuff that I really like that I need to make sure you guys know of. I guess I'm kind of running out of time. There's nobody really scheduled to be in right behind me, so it's not like somebody's going to kick me out, but. Let's see. Okay, so Brian says we're doing lunch from 12 until 1 o'clock, and so if y'all want to take a break, then we can do that. I'm just gonna maybe go through one or two more tickers just so you know, and really because we're doing this open house today, and so this will be the last that I'll be on for the purpose of the open house, and so I want to make sure you guys have some good stuff to take with you. And the way to keep getting good stuff is obviously join the room. I mean, this is the kind of stuff we do literally day in and day out, daily. Like Don said this morning, he's on every day for at least an hour a day. I'm on every day for an hour. John's on at least 3+ days a week. Bruce, Raghee Horner, Carolyn Boroden, I mean, Henry, Brian, the list goes on. So, Lulu. Oh, just in case anybody doesn't know this, it appears that a lot of people still eat pizza. A lot of pizza. Look at this. This is Domino's, ticker DPZ, and golly, this is one that John put us onto. It's been a while. I mean, it's been way back here. Golly, I don't even know when. 1st of February, I think, right in here. $98 or so, something like that. It's been up 106. Obviously, people eat a lot of pizza. And the other that you may want to add, that's DPZ Domino's. The other one that you may want to keep in mind is Papa John's, PZZA. This last squeeze was actually a short squeeze that you can see actually worked, but now we're working our way back to closes above the averages. I've got a fresh new buy signal with momentum of 0. I'm back on the buy side of this one and liking it. So it's actually a good time to kind of start liking this one again, I believe. Up almost 2% today. PZZH, Papa John's, and quite obviously people eating a lot of pizza. Tracy asking, where do I post? I post in the lower section where you're posting right now, not on the top. My stuff is like, more frequent, and, if I'm, short 87 S&P looking for 77, that kind of thing doesn't need to clutter the swing trade type stuff that's going in the presenter's box on the top. And so what I try to do is end it with like a question mark so that it shows up in blue, so that it kind of distinguishes itself from the rest of the, the typing. That plus the, my posts have the simpler options thing in front of it, but that's where I put them. Okay, we're going to do lunch, guys. I'm getting a couple of messages saying let's do some lunch. And so with that, I would like to thank everyone for being with us today again for the open house. It is my sincere hope that you will consider joining us on a regular basis. I think you, hopefully, I mean, what a couple of nice days, honestly. The setups that we had yesterday just came to fruition, just like remarkably well. It's not the kind of thing that we look for every single day. Obviously, pretty much everything that we swung at, we hit yesterday, and some of them like literally out of the park. I think it was a fantastic day. So it was a good day for an open house. Enjoyed you being with us. Appreciate it very much, and hope to have you back again, and maybe see you tonight in Don's class. I know I'll be there, and I would encourage you to be as well. I've been around this stuff for a long time, and I swear every day that I listen to Don, I learn something, and that is the truth. And hey, I'm not afraid to admit it, because I'll say this, like Tony says, you stop learning, stop earning. I'll leave you with that. You guys have a wonderful rest of your day. Enjoyed being with you. Thank you.
All right, everyone, we are back. Can do a quick sound check. 1, 2. Can everyone hear me all right? 5 by 5. Always first. Thanks, House Monkey. All right, good afternoon, guys. This is Brian and Daryl. The next hour is going to be an entertainment / technology session. Usually what we do is hop in here and answer tech questions, website questions for typically 30 minutes, but we'll be in here for an hour today, trying to answer questions and help you guys out. So typically we just kind of hang out in the background and wait for questions to scroll across. We can see the open house questions as well, so feel free to chime in.
Definitely help out with a few questions for the new members as well, kind of help ease the transition into the actual trading room. And Slum Queen, I see your question there. No, that was the Mr. Sneaky Code that Neil was talking about, the little yellow errors, I believe. And I think that he was going to either still work on them some more or do something, but I don't think he ever offered it. I'll talk to him about it at some point. But if it is available, we'll definitely get it out. If not, then we'll definitely figure it out and let you know.
Okay, so Todd asks, how can you scan for daily and weekly squeezes and toss? Todd, we actually have that open code on our website, so we can definitely get that to you. In just a second, I'll send you a link to that, and you can plug the...
In fact, why don't we just go ahead and show you? This site is pretty cool. It's the Simpler Options knowledge base, so kb.simplertrading.com. And then inside of here, this is a full-on knowledge base FAQ site. This is going to be the place where you can figure out how to scan for squeezes, how to add the squeeze into the watch list, bunch of cool stuff.
So if I just keyword search squeeze scan, one of the top articles is going to be right here. So how do I scan for squeeze and thinkorswim? You're going to get the code as well as a tutorial video and screenshots. So let me get this link for you.
Jim, very astute. Yep, there are two of us talking. This is Daryl as well. Figured we'd try the whole 2 people, 1 mic thing. See if we could, have a little fun with it today.
There you go.
Very white. Yeah, I'll take that. Brian's voice in the synthesizer. Yeah,
that's an upgrade. Yeah, I'll take that.
Be interesting to hear. I like it. Worked up the sound. Oh, thanks, Kara. I appreciate that.
I think she mistook your voice for me, honestly, but and yeah, Jim, it works pretty good when you're in the same room.
Oh, Don, I know plenty of people, including possibly people who may or may not be related to you, who would disagree with the not so sexy part of your comment. Reminds me of the Doublemint ad. Nice. Ooh, a duet? Bet you we could probably do something like that. We'll see. If the questions don't come in, then I think we could easily pull something off. All right. So another thing that we wanted to go through on that knowledge base site as well, another question that a lot of you have been asking for the some of the newer members is how you get opted in for the alerts that we offer. So if you go into that search area again, and it's just a keyword search, kind of like Google, as you start typing in, it'll pop up and show you the categories that match. So you can actually look down, and the one that you want is, how do I opt in for the different trade alerts that Simpler Options offers? So in here, that shows you where to go to your member page to sign in for your SMS text alerts, or we'll also show you how to go in and sign up for email alerts if you would rather receive those over email as well. Mark Van Meter asks, I understand the squeeze indicator, but please explain the consolidated wave on thinkorswim, not the individual waves that John uses. So actually, it's another good opportunity to show you the knowledge base here. So that is the TTM wave or the TTM combo wave. So if we just type in combo, it's going to show you a couple of different things. One of them is going to be an article on the combo wave itself, going to give you a little bit of history, tell you how to use it, what it looks like. And then the other one is actually a video that shows you how to break up that combo wave into the individual A and C components in thinkorswim. Now, we also do have the full 3 ABC wave code, exactly like what John has in TradeStation, available for thinkorswim, but it's just not built into the platform. So if you want that, you would have to purchase it separately and then install it that way. On Sorum for international texts, you actually just type in your country code and then your number the way you normally do, and it'll get right to you.
So John in the room's asking what's the difference between using the code versus the built-in study. And John, in the past, what we found is the open code is just a lot more reliable because the included study that you can scan with, if TOS pushes an update, it can change the code. I've seen them remove it before. So, you know, the open code has been solid since we started using it, and, you know, it's just much more reliable.
And then Tamara, actually, the one camera that I know I've heard good things on, thanks for the voice. One camera I know I've heard good things about, actually, Henry has a drop cam, and they're pretty sweet. It connects to your Wi-Fi. It has a, if you want to. It's pretty neat. I was actually telling a friend, Constantine, who works with us here, about it too. So Alan is asking in the web teach room, how do you set up different intervals for the squeeze a la radar screen on thinkorswim? That's actually in that video in the knowledge base site. So if you want to check that out, it will show you. But all you have to do is when you're adding in that custom indicator into the watch list, there's a aggregation period on the top of that window. So it'll by default be a daily, and then you can change that. Now, we don't really recommend going too low into intraday time frames. It just uses more data and it'll kind of slow down the platform. But you know, you can toss a daily and a weekly on there, or monthly if you want.
Alan, so if you're talking about your alias for the room, if you want to change your default alias, I mean, really every time I get in the room, I type SO _, under my name.
Yeah, it does your first name. So whatever you type into your first name in your membership field, it will it'll just use that as the default when you go into the room. You might have to close your web browser or, you know, erase your cache and cookies before you go back. It'll work. And Tamara, this is the drop cam. So it's just dropcam.com, dropcam.com. Try saying that fast. And it's made by Nest. I don't recommend their thermostats. That's a whole nother ordeal.
Or their fire alarms. The fire alarms I've heard about.
Yeah. All right. So don't recommend anything but the drop cam. The drop cam is actually pretty cool, though. Like I said, it's got an iPhone app you can hook up to it. Henry is raved about it. I definitely trust Henry with any of my tech questions. So I think that would be a good place to start.
So Steven, I'll send you that information for the Voodoo lines and a link in just a second.
And Ahmed is asking, sorry, just got back. Who is speaking? You have the pleasure of listening to Daryl Gum and Brian Brokaw. We're the two tech behind the scene guys, but we do a tech session every Tuesday and Thursday in the room here. And we pretty much just answer any platform related questions, computer related questions, pretty much anything tech that you want to know, you can ask, and we're here and we answer it.
We try.
Yeah. Sometimes we'll say, I don't know, but most of the time we can get it figured out.
Give me the KB address again. Sure, Wayne. It's kb.simplertrading.com, but I'll type it to you right now.
No, got an extra period. Cappy, same thing. We'll go ahead and post it in there. It's KB, so knowledge base knowledgebase.simplertrading.com. Sorum, nope, you don't have to add the plus. You just add the regular country code. So just the 3-digit country code and then your number. Gail, yeah, the best way, honestly, would probably be Don at simpleroptions.com. You can also, for anyone at all you want to talk to, if you just email support@simpleroptions.com, we all have inboxes there. It's kind of like sending a, package directly here. We always organize it and send it exactly where it needs to be.
Steven, that link on the Voodoo lines, yes, it is available for Thinkorswim as well.
And Chad, yes, as luck would have it, we are going to be in Vegas. So definitely looking forward to seeing everyone there who's going to be there. Looking a lot of fun times ahead.
Robert, to sign up for the text alerts, click that link I just posted in the session posts. Type in alerts, and then you'll find an article on how to sign up for that.
Sweet. Ahmad says, which platform do you support? It's kind of a long list. So Thinkorswim, TradeStation are two kind of standards. We also do eSignal, NinjaTrader, Infinity AT or Sierra Charts, whichever one you use. Trade Navigator. See, I already said eSignal. What else? I don't know. Ninja. Getting into IB a little bit. Jared is actually pretty good at that right now. We're also starting to play around with LiveVol, which is actually a really cool platform. Is this part of Gold? Oh, is this support part of the Gold membership? Yep, Ahmed. Brian and I are here every Tuesday and Thursday at 1 o'clock. So any questions you have, like I said, we'll try to figure it out. Randall, yep, the radar screen and toss is actually at that same site, kb.simplertrading.com. And yeah, Robert, the text alerts are just above email on the page, either above or below. They're both on the exact same page. So if you don't see it and you're at the bottom of the page, scroll up. If you're at the top of the page, scroll down and you'll find it.
So LB don't like E-Trade. It's nothing against E-Trade, LB. It's just their desktop software. Their application is just a little bit limited. So, we're always keeping an eye out for additional platforms we could add to our roster. That just hasn't become one of them yet.
Yeah. And when it comes to web-based platforms, man, there are just so many of them. I mean, there are a ton of desktop platforms too, but web-based platforms are usually harder to code anything on indicator-wise, or just harder to support. It's kind of the walled garden technique. So having a desktop platform usually tends to need more support, so that's kind of what we focus on.
Yeah, and nothing against E-Trade. I started buying and selling stock when I was in my teens using an E-Trade web-based account, and it works pretty well.
Mm-hmm. And then Brian Spillane asks, are the red and blue candles the TTM trend? Yes, they are. So the trend, if I just think they are, might be Neil's. Let's go ahead and say, it looks like the trend. No, maybe not. It might be Neil's, with the white bar. So let me just put that back down. So that one is not the trend. However, the trend is very similar. What the trend does is just calculates an average of the open, high, low, close of the previous 6 bars. And then if the current bar is above that average, then it paints the bar blue. If it's below that average, then it paints the bar red.
David asks, any work with market profile? Yeah, David, I actually have some market profile charts in Thinkorswim that I used to look at pretty regularly. But Neil is your guy for market profile. He's pretty well versed at that stuff and kind of showed me the ropes and all that.
And John says, what level of access do you need for the trading room? That's just a gold membership. That's simpleroptions.com/gold. I'm sure John's going to talk about it later on as well after the close. But
yeah, but before we get out of here, we'll definitely send you guys a link to it.
It's the gold membership for Simpler Options or Fibonacci Queen. We'll get you there. On the TradeStation, how do you change a chart from regular session to 24-hour for futures? Floyd, on that one, you would right-click the chart and then go to Format Symbol. And then on the tab on the far right, what is it, the style? I forget what it's called, but the tab on the far right that opens up is where you can change it from session hours to, I think, do they call it natural hours, or is it 24?
Yeah, it's hard to say. We just don't have the platform to look at right now. Let me see.
I have it on my computer, so if it doesn't open up here, then I can definitely go over and show you.
Oh, I'm just gonna have to kick Henry off.
You can use mine if you want. Lynn says, are you going to do any work for Options House? You know, I've heard of them. I've not played around with them yet, but yeah, I'll definitely toss on the list and check them out, see what we can figure out. Steven says, how do I include the 2 times ATR on the price chart and toss? You might actually mean the 3 ATR. John likes to run 3 of them. And believe it or not, that answer also ends in kb.simplertrading.com. So if you go there and just type in ATR, one of the topics is how do you set up those, it's the Keltner channels is what it is. So, there it is, session.
Yeah, so you're going to right-click your chart in TradeStation, format symbol, properties, session. You're going to click this icon, and then you're going to modify the session hours right here.
Just click over to use custom hours, and then it'll have a 24-hour template there for you. But yeah, the 3 times ATR chart, all that is the Keltner channels with the period set to 21, and then on the chart 3 times with the length of 1, 2, and 3. But there's a full video with instructions on that kb.simplertrading.com. So definitely go there and check it out.
So Mark is asking about toss performance, saying that the more layouts he has and he switches between, the more it slows down. Mark, I mean, we could probably spend the next 45 minutes talking about toss performance and why it's like that, but it's definitely a global issue, and the performance hasn't seemed to get any better, especially with these recent Java updates, and I've switched to the 64-bit version. So we're still always trying to find new solutions for Thinkorswim and the performance. But anymore, I kind of direct our clients to support chat and Thinkorswim, so Thinkorswim can remotely look at your system and configure it based on your computer components.
And the memory settings are kind of tricky. Even adding them in or adding more memory doesn't always help. The main thing is Thinkorswim, the way they calculate any of their indicators is once per tick. So every single time you get a new tick of information coming in, it recalculates and redraws every indicator, every drawing, and everything on your chart. So it's not a problem if you just have, like, say, 1 or 2 pages open like Brian, but if you have, 6 monitors and 7, 8 toss windows open, it can be a little hard. Another thing you can do if you have a lot of memory is just open up the platform more than once and just right click on the icon in your taskbar and open it again. And then you can have, a couple windows open in that one and then open another version of it.
Yeah, that helps quite a bit. I know clients that run probably 3, 4 or multiple instances, and that helps break apart the memory allocation, really improves performance. Yes, yeah, Jim, that's what Flash and Java both pushed updates this weekend, and I can't say I'm thrilled, but the issues have been minimal. Notice Java went to A blue installation window. So that's
That's biggest
That's big,
change,
yeah.
I'm sure. Yeah. And can you open Thinkorswim on 2 computers simultaneously? As long as you're sharing the exact same internet connection, like if you have a laptop and a desktop sitting on your desk hooked up to your cable modem, yes. But if you have one at the office and one at your house and you're trying to connect them both at the same time, then it won't.
Yeah, so when you log in, Thinkorswim's going to look at your external IP, which is assigned by your internet service provider, and if it's the same from the locations you're trying to log in from, then you can log in as many times as you want.
And Tamara, that's a good question in the recording. I'm not sure if it does or not. I'm actually not even sure how it handles the recording. I guess I haven't used it personally. We'll see. As soon as Henry gets back around the computer, I'll ask him and we'll find out. I'll let you know. I won't forget you. Will we use TradeStation data feeds?
That's a good one.
Oh, another way to add any way to avoid adding another video card in order to set up multiple monitors. Short answer, no. If your computer doesn't have a video card capable of running more than the monitors you want, there's really not much you can do. I mean, you can get little USB adapters and plug them in. The problem with those, though, the drivers are pretty horrible, bad support, even worse video quality, and it's slow. I just wouldn't recommend it. The absolute best thing to do is just grab a video card that supports the number of monitors you want, or grab, say 2 video cards and plug them in at the same time, as long as your computer supports it. Most computers will be able to take a PCI Express graphics card. The one that we like, we've been using for a couple of computer builds, Don and John, is the NVIDIA NVS 510. And that one actually runs 4 monitors at the same time.
Right. So if you only need 4 monitors, you can just replace the one that you have with that one and avoid having multiple cards in your computer. So someone in the open house asked if we send out emails about trades. We actually do. So we send out text alerts and email alerts. So anything that's text out is also emailed out.
As far as running multiple versions or multiple instances of Thinkorswim on a Mac, I know it used to be possible. Didn't Henry?
What's that?
Like running TOS twice on a Mac?
I do believe you can do that.
I think it's possible, yeah. Unless something has changed. Oh, Jackie, that's cool. You can, TOS will set you up with another login for your account. That's pretty cool. I didn't know that.
Yeah, I didn't know that either.
Yeah. So I'd just say use the support chat button and ask them if there's any way to.
So Jake asks, how's using TeamViewer to remote to home computer to log into TOS? It works surprisingly well, Jake. I use it all the time between the office and my house. But, John was having issues yesterday, and he managed to remote into his computer here from Kaufman, and I was actually astonished that it worked so well. So I have nothing but good things to say about TeamViewer. And you can also, from your phone, remote into a computer where you have the chat room open and listen to and watch TeamViewer, the chat room as well, through TeamViewer.
And then, Soren, how do you add extra time frames into the TradeStation radar screen? Manually is the only way to do it. You have to click each time frame or each interval category and then type in the other interval that you want to use. It takes a long time to do, but once you get it set up, it's better.
So Don asks, if I become a member, can I copy items from the chat for later review? Don, anytime in the room, you can actually download the chat log and the session log. We have to clear it out every now and again because once so much, months of chat builds up in there, it bogs the room down a little bit. But we typically leave it in there for a few months, and it's always available for download.
And then, once again, for the opening Thinkorswim multiple instances at once on Apple, yes, it absolutely should be able to do it. I've never heard that it isn't. I mean, all you have to do is right-click if you use a real mouse, or you can hold down the control button and click to virtually right-click on the Mac, the Thinkorswim icon, and then there should be the option to open it again. And I've never heard of it being a problem. I'm pretty sure that Jared and Henry both do that. They both use Macs. So how do you download the chat log command? When you're a member of the room, you see that little button that's being broadcast in the webinar, right just to the right of the search, a little down arrow, that's how you download it. Ralph, you don't get the option. Kathleen says, thank you. Did it work for you, Kathleen?
So Nicholas asked, do we get the same trades as a gold or silver member? No, Nicholas, and the main difference is the room. So with the gold membership, you get the chat room where, you know, a lot of trades are placed in there, as well as the text alerts and email alerts. With silver, there are weekly trades that are tracked in a spreadsheet, but you don't get the chat room, so you're missing out on those trades.
Scott Abergin thought about having pause or rewind in the room. Man, that would be sweet, but that is definitely not going to be something in the near future. That's talking about maybe when we substantially revamp everything and switch over to our own provider versus using the web teacher or something else. But the best that we do is Jared working hard and fast on getting those recordings out as soon as he can every day for the room archive. And those are going to be inside of that list on the right-hand side of your membership after you log in. He usually has them up by, say, 6 or 7 each night, usually before.
Okay, so Chris in the room, do I have a spec sheet for the best trading computer? I do, and it's based on what John is using right now from Falcon. We've kind of steered towards using their computers and their builds, and I have no complaints thus far. So let me send you a link to what John's currently using. And, you know, John has a really powerful computer. You don't necessarily need all of that stuff that he has, but if you take those components and, you know, kind of base your build on that, then you're going to be good to go. Dave, I appreciate you saying that so much.
Oh, yeah. And what would the reason be to use multiple instances of TOS on the same computer? Just if you're having some performance issues that you think might be related to the number of charts you have open and you have a lot of memory. Just got another question. I have 8 gigabytes of memory. Will adding more help TOS? Yes. TOS doesn't have the ability to take advantage of more than that unless you're using the 64-bit version. And even then, we've heard that sometimes it doesn't. But if you only have 8 gigabytes of memory and you have obviously your platform open, you probably have a few other windows open at the same time. It's something that is going to definitely increase your speed. Memory is an easy bang for the buck.
It's become so much cheaper over the years. I mean, you know, when the two of us started building computers to get 2 or 4 gigs, like you're spending hundreds of dollars. So it's become very reasonable throughout the years.
Yeah, for those Voodoo Lines updates, Kim, I know what you're talking about, and I've tried the same thing. It's annoying, especially if you have them on 10, 15 charts. I tend to, same thing as like John's TradeStation layout. Like I tend to have it on, maybe a daily chart and a weekly chart just so I can see the key levels on it. And then I don't put them on all my other smaller intraday charts. You can still see the levels and where they are. But yeah, if there is ever a way to streamline that process, I'm definitely going to take advantage of it. Chris, 27-inch or bigger monitor. We actually, we were just doing inventory around here, and I think we had like 41 Dell monitors and about 10 HP monitors. They're definitely, those 2 brands we like quite a bit. We haven't really used many other ones, but it's one of those things where when you use something and it works, there's no reason to ever get anything else. We like the Dell 24s. We think are good, but if you want something bigger, they have like, I think it's $500 for a 4K 28-inch from Dell now. Jared's using 3 of them on his desk right now. Oh, thanks, Jerry.
Jerry, we really appreciate that. You know, most of the work we do is in the background, and nobody really has a clue what we're doing most of the time. So we both appreciate that.
And Ralph, yeah, absolutely. I'll check on Henry's Mac later on, or ask Jared to check it out later. I know Jared's running Yosemite. I'm not positive if Henry is upgraded to it yet or not, but we'll check it out and just, you know, we'll see. I'm pretty sure the ability is there.
I know you do, John.
Sometimes. Actually, so John, does that indicator in TradeStation automatically show up? Is that drawing tool? It's not, put it this way, I know it's not our product, so it's either something that John has developed himself. Yeah, the auto trend lines.
Oh, they're in TradeStation.
Oh, they're in TradeStation?
Yeah.
Oh, okay.
I don't know what settings. Neil sent me some predefined settings, so Neil would definitely be the one to ask about that. I'm sure John knows too. I'm not sure what John uses on his settings though.
Oh, nice. That's awesome, Don. Man, I always forget that we have like the ultimate insider toss knows everything guy. We should have just asked Don first. Probably sitting in the background laughing at us like they keep trying to answer a question they don't know. The auto, no, we don't have the auto pivots for toss, but toss actually doesn't need them. They're built in, the regular floor pivots. They're just called pivot points. You say which NVIDIA card we use for multiple? Yeah, that is the NVS Nora Victor Sam 510. Yeah.
Or even the 450s. The 450 is the old model, and they still work great as well.
Yeah.
The 510s, they have a lot more memory on the board, on the video card, but you know, they both work great. Let's see.
Oh, Ray, we do see your
Rich.
question.
Yeah, Rich, it's NVS 510.
Do I have an opinion regarding the best auto trade system? No, I don't really get into systems too much. I mean, we know Doc Clayberg, online systems trading. That guy is real awesome, but you kind of have to do a little bit of programming and stuff. We really don't get too much into that. We'd rather you just hang out with us. We'll all figure it out together.
Brett, yes, I got it. I will. I'm sorry, I haven't had a chance to get back to you. I'll take a look at that this afternoon after the close. Brian, if you purchase the Voodoo lines, is there a course that explains how they can be used? Yes, Brian, there is, and it comes with documentation as well. So
actually, I think John's about to do. I think it's going to be in like 3 weeks or 4 weeks. I saw on the calendar. We're going to do another Voodoo Lines webinar, and I think John is going to do a class after that too. So that'll be pretty sweet. Harold, John is in Grand Cayman on. I mean, how big of a scope we're thinking? I mean, he's in the Milky Way galaxy. He's also in the trading room typing. He's going to be coming in, I think, about 26 minutes or so. Oh, nice. Thanks, Neil. TradeStation auto trendline settings 773.
Neil, okay. Man, those work really good. Those actually work really good.
Oh, and no, forgot about that. It must be the most important part. questions dried up already? You got any good jokes, Brian?
Not any appropriate jokes. Is there an appropriate joke?
There are all kinds of appropriate jokes. How do you open a shared worksheet in your Thinkorswim and save? So what you would want to do, like let's say you opened up like this flexible grid up on the left here.
So yeah, there's a couple ways. What I've found to be most reliable, just because of quirks with browser plugins and certain browsers, sometimes people click a shared link and for whatever reason it won't open up in their platform. You can just come over here to setup and click open shared item, paste the URL in there, and I've never heard of that not working. So that's the best way to open up a shared item.
And then Don says, can you show us how to find 64-bit? Yeah, actually, I know a way to do that. You just it's not going to work. So for Thinkorswim 64-bit, all you should have to do is go to Google and type in Thinkorswim desktop. And once you do that, you have this Think Desktop Client Installer, and on this page, you're going to have the two options: install Think Desktop 64-bit or install Think Desktop 32-bit. And you can have both of those open or both of those installed on your computer at the same time, so you don't have to worry about switching back and forth. And Kim, and then it'll save in your setup. You mean like in your main chart window? Like the main platform window? Yeah. Brian, does it open up inside of that when you open a shared item, or does it still open in a separate window?
It will open it in a detached window. So
if it's like a single chart, what you can do is right click on the chart and then choose Save Style, and then just save the style and include the study set as well. There's a little checkbox, and then open up your chart tab in the main platform and just apply that style and save it. If it's a flexible grid that you want to save, like this one that Brian has up right now, you see that little icon on the top right here? It looks like the little menu button. If you click on that, wait a second, Brian and I are sharing the computer. He's using the keyboard right now to talk to somebody else.
In just a second.
So if you click on that right here, or you click on the actual flexible grid one instead, I'm sorry, the four little boxes, then you can choose Save Flexible Grid As, and then once you're back inside of the main platform, you can just choose your flexible grid by clicking that same button in the flexible grid tab.
Yeah, it will be listed at the top. So if you say multiple with multiple names, they'll be listed at the top, like how I have open range at the top of that.
And then as far as bumping the memory settings up in Thinkorswim, what you do when you open up the platform.
He didn't say please.
Oh, you're right. Don, can you say please really quick? Cherry on top, pretty please? No? Okay, I guess we can show it anyways. So when you open the Thinkorswim platform, before you log in, you're going to notice a little gear icon, a little cog on the bottom left. So before you type in anything and log in, click that, and then this is where it's going to show you your memory usage settings. Looks like Brian has his set at 4 gigs. The 64-bit platform goes all the way up to 1620.
I wouldn't recommend it. Yeah, I would not recommend it. And I've found that something Don told me as well is that the minimum is kind of irrelevant because TOS is going to use the maximum regardless of what you're doing. Another thing about adjusting these settings is if you change the settings, even if they're set properly, you can get a JVM error when it restarts and tries to launch your platform. So just be careful with that. If you're not comfortable fixing that issue, just be careful. Be aware of that. A lot of times, if you get the JVM error, if you reboot your computer, it'll relaunch. But just a heads up.
TOS, how can you set different symbols in each cell of the grid? It's actually that way by default. It's just a question of whether or not they're linked together. See the little icon to the right of the symbol? When you click that, you have a choice of linking it in 9 different colors, or you can unlink. If you unlink them and make sure all of them are unlinked, then you can have individual symbols in all of them. And Doug asks, how can you tell which is running, the 32 or the 64? You can't. You just have to know which one you've opened up. I mean, you can tell before you log in. If you click on that memory settings button, the 32-bit version, I believe, can only go up to 2 gigabytes of memory, whereas the 64, like you saw, goes all the way up to 20. Best performance in TOS, Tammy, honestly, it's different on every single computer. On Brian's computer, he's had great luck with just 4 and 4, but you could definitely experiment and try different settings. I mean, it shouldn't break anything, but if it does break anything, all you have to do is give them a call and they should be able to figure it out and fix it too. See, how do I make my shirt as cool as Don's? Oh, I think it was a typo.
So Donald in the Southern Room is asking if Falcon is the best trading computer. Donald, the main thing that I like about Falcon is that you can customize the components in the computer, 1, even if you're getting a laptop, and 2, they will send you a computer with Windows 7 on it. It's kind of hard to find a manufacturer that will send you computers with Windows 7, already set up. So we're just not huge fans of Windows 8. I know some people in here are using Windows 8, but we've kind of stuck with 7, and it's worked out for us.
And Nancy says, link to everyone's bios. That's actually another cool site I'll just show you really quick. Let's see, what do we do? /open.
Oh, wait.
Yeah, no, it's not the same one.
You have to upgrade back down to Windows 7. That's a good way to put it, Don.
So let me just paste this link here for you. That's the Room Traders bio page. You can also get to there if you just go to the Simpler Options homepage and then scroll down, and right there where it says who we are. That's another way to get to it. Where can I buy Falcon computer products? Sydney?
Tradingcomputers.com.
Yep. Is there a contact for Falcon Computers? Do we have?
No, we don't have it. We've dealt with someone specifically, but they're a pretty small crew over there. So you can tell them that they're very familiar with John and who we are. So just tell them you came from Simpler Options, and they'll they know who we are. But they're working with a pretty small crew over there.
Doug asks, can you transfer your workspaces between the 32 and 64-bit? The easiest way to do is just use that built-in sharing in Thinkorswim. So open up your 32, share that workspace, and copy that link, and then open up 64 and paste that link where Brian showed you earlier. And then that's by far the fastest and easiest way of getting it.
There are other ways, but that's the most user-friendly way to do it. Otherwise, you're going through the program directory and whatnot, and that's still kind of hit or miss.
Yeah, and copying those workspace XML files, I've never done between the 32 and 64. That's why I was kind of hesitant to bring that up. But yeah, you're right, Rick. Theoretically, that would work, but especially going between two completely different architectures of the platform, I would just share it. It's guaranteed to work that way. Yeah.
Squeeze available on TOS or Interactive Brokers.
Yeah, actually, the squeeze is available. It's built in and licensed by Thinkorswim on Interactive Brokers. You can definitely get the squeeze. All you have to do is give them a call. It's something that they can add onto your platform. I think it's like 40, 50 bucks a month, something like that for the indicator. And you can also, for any platform, even if it's not a platform that has the visual indicator, if you have the Bollinger Bands, Keltner channels, and a momentum oscillator, you can duplicate the exact same setup. John just made the squeeze because, in his words, he was tired of going cross-eyed. Yeah, Dr. Jim, that's another good point. Sometimes the delays in Thinkorswim are just a lot of data going to a lot of people at once. You know, you can tell whenever there are giant moves, sometimes it'll go there, but and another thing that you can do in some extreme scenarios, you can actually turn your quote speed down to moderate. You know, if you just have a bunch of stuff loading and you don't want to open up multiple versions of the platform, by turning your quote speed to moderate and getting at most a 2 to 3 second delay, you know, it'll definitely increase the speed that it can redraw the indicators and run a little bit smoother.
So we had a comment in the open house that said, you know, Falcon Computers is kind of expensive for beginners. You know, you can go to other manufacturers that kind of do the same thing. And that's very true. The thing that Falcon does really well is multiple monitor setups. And, you know, before we started dealing with Falcon, we were building John's computers. And, you know, we like building computers. We're pretty good at it. But, you know, after a while, we just want something super stable, you know, for John and the traders here, and that's, you know, that's what we've gone with. So
that's true. And then another big part about Falcon is they're people who know trading and trading software. So they ask you what platforms you use, and they pre-install and pre-configure those platforms for your computer. They also have support that knows how to answer questions like, hey, my Thinkorswim isn't running correctly. What do I need to do? I mean, they have people in the 3-year warranty. I mean, they can figure out what's going on and help you out with it. So that's another main advantage that you don't get with, you know, buying an Alienware or even building your own. Although, you know, when we always built John's computers, I guess you just hired us as lifetime support. But Airbus, I couldn't say it better myself. You get what you pay for. They're not cheap, but I mean, if it's a tool you use to make money, wouldn't you want to have a, you know, proper expensive tool? I mean, if I work for a living, I'm not going to go pick up a Black & Decker drill or anything like that. Oh, I guess I shouldn't knock Black & Decker. They make okay stuff. Different if you're a former installer or anything like that.
Yeah. So another question I saw was, what's the best cable modem for trading? And there's really not, you know, particular modem that's going to give you an advantage. You just need to make sure you're getting, you know, I want to say as much bandwidth from your ISP as possible. You just want to get as much bandwidth from your ISP that's, you know, within your price range. So, you know, we've stuck with basic Motorola surfboards or DOCSIS 3 that do gigabit, but aside from that, there's really no modem you can get that's just going to, you know, increase the speed. So it all comes from your ISP, and What they're giving you is what you're going to get. Yeah, right, Mark. One that works.
And Ahmad, Falcon or Belkin? Sorry, kind of hard to understand us when we're just using our regular microphone in here. It is Falcon, like the bird. John, how do you keep the Porsche tops positioned and scaled? Yeah, actually, I run into that a little bit too, and it seemed to be a little more common recently. I need to get with Eric, ThinkScripter, and have him take a look at it and see. I've actually been meaning to, so thank you for bringing that up. I'm going to put a note and make sure I ask him about that today. Fred says, thoughts on solid state drives, worth the price? Oh, absolutely. I think that is by far my favorite part of computers nowadays. I mean, it's the only time that I can remember, since maybe the Intel Core series, that order of magnitude better feeling. It's fantastic. I mean, it's much more reliable. They measure, reliability in mean time hours before failure. Most solid state drives are in the million hours, 10 million hours. The speed is substantially faster. Instead of, imagine what it takes for a regular hard drive to pull a 1 and 0 from a certain spot. It has to physically spin a metal disk. It's always spinning, but it has to spin it. Then it has to take a little magnetic arm and it has to move over where that 1 and 0 is. And then obviously a program is a ton of 1s and 0s, so it's in multiple places. So it has to seek back and forth. And on a solid state drive, you just click and it's there. There's no, instead of measuring it in milliseconds, it's measured in nanoseconds. Yeah, Steven, they're sweet. I definitely would recommend that.
Yeah, they're a game changer, and they become a lot more affordable as well. So,
you can get a 1 terabyte solid state drive on Amazon now for I think like $379, was it, or $400?
Yeah, it was really reasonable.
Cheap.
And most people don't need that much storage, so half that, you're looking at 512 for $250. So, I saw a question in the open house. What does the gold membership come with, and how much is it going to cost me? So John's going to talk about that later on this afternoon, but the gold membership, is based around the chat room. You get all these presenters you've seen in the last 2 days, text alerts, email alerts, nightly newsletter, video updates, a 10 and 2 p.m. Text update. So we're working hard trying to get you all this market information, and
get to hear Brian and I every Tuesday and Thursday. Come on.
That alone.
I think we should raise the price and charge just for our own session. I think we could totally do that. Mr. Voice, I like it.
Western Digital Blacks. Yeah, Ray, those Western Digital Black drives are really nice. Chris, Tuesdays and Thursdays at 1 o'clock. Raphael said, are there recorded classes available with the gold membership? Short answer, yes. We have a ton of tutorial videos on the website, as well as beginner's guide to options and things like that just come with the gold membership. So yes. All right, guys. Well, it looks like Daryl and I got most of the questions in here. John's going to be coming in about 7 minutes. So we'll go ahead and jump out of here, give you guys a 5-minute break.
Hold on, I need to answer one more. Is there a group photo of the Simpler Options staff on the website?
Oh, I hope not.
There is. Same answer that I've given about 10 times. It is inside of kb.simplertrading.com. Or is it KB? It might just be simplertrading.com. If you go to simplertrading.com and click About Us on the top of the page, you'll get a picture. There's Jared, that's me. That's where I get my voice from. A tiny person, as you can tell. That's Angela, Marcus, John, Henry, Brian, Mandy, Jeff, Diana, Priyanka, Dan. We have more who weren't in that photo, but we'll see if we can grab another one and put it up there. That's most of us.
Yeah, Don. We made Don stand behind that tree. He wasn't allowed in the photo. So. Just kidding. We love you, Don.
Totally.
Sweet. All right, guys. Well, go take a quick break and John will be in shortly, and we'll take you guys into the close.
Sweet. Y'all have a good afternoon.
All right, guys, before I get going, this is John. I just want to make sure my mic is working and you can see my screen share. And my screen share, by the way, right now is going to look a lot like Brian's charts. When I minimize this, you'll see my charts. All right, cool. Well, I think today it will be smoother than my attempt at doing this yesterday. Now, the one issue I have is I'm on a laptop, so when I minimize the screen, I'm not going to be able to see your questions here. But I will check back on questions and stuff like that, especially towards the end. All right. All right. So let me minimize this. And in theory now, you should see I've got a Thinkorswim screen sitting up there, and in the background you'll see TradeStation. Should be good to go. I can't see, so let me just check real quick. Yes. All right. Cool. All right. So what are we going to do today? So let's do this. Let's kind of look at the markets first. We'll do a position review and kind of see where we are, what we want to keep, what we want to add to, any positions that we want to do and stuff like that. Okay. So, well, first of all, let's just kind of look at the markets. So anytime I'm looking at the markets, I always like to look at the ticks and just kind of see what kind of conviction do we have? Okay, and that's all the ticks are, is a measure of the conviction in the markets. Okay, if there's no conviction, the ticks are going to be like, minus 600, between minus 600 and plus 600. And the one thing that stands out for me today is that there's really no conviction in today's market. Yesterday we saw that conviction after Miss Janet decided to reveal that she will raise interest rates in probably the year 2030, that the markets there was a lot of conviction in getting out of shorts and in getting long. And today, there's really no conviction. We had one little 800 tick reading, one little minus 800 tick reading, and since then, no conviction. Now, does that mean that the market just goes sideways, or is this ultimately a buying opportunity, or is the gig up? I mean, obviously, there's a lot of problems going on in this world in terms of, they're kicking the can down the road. I know all that. I'm that's the kind of stuff that I really like, and it makes me very skeptical that any of this in the long run is going to work. But in the short run, I'm not going to fight anything. Okay, so let's look at a couple things here. A couple things I like to look at. Now, again, remember, keep in mind, I'm scrunched down to a one-screen operation here, which is fine. So here I've got a weekly chart. The A, B, and the C waves, these little dots also tell me if those waves are above or below zero. On the daily chart, I've gotten rid of the waves just to give myself a little bit more room, but I have the dots. Okay, dots again tell me, are they above or below 0? If they're up here, they are below 0, and if they're down here, they're above 0. The idea is like, hey, if they're down here, it's a buy. If they're up here, it's a sell. And here I have average true range. I'm a big believer in 21-day average true range, and I'll talk more about that. But the idea that essentially, if you're in a stock, and especially if you're long an option and it's a short-term trade and it's moved more than its average true range in one day, how much more are you expecting? Okay, so you want to know that so you can kind of get out of it. And these levels hold really, really well. Down here, I've got, this is one of my favorite kind of contrarian indicators. So on the spiders right now, you can see that everybody's loading the boat and buying calls, okay? And this is that auto trend line feature in TradeStation. So everybody's loading the boat and buying calls. A lot of times when that happens, the markets don't really do exactly what you'd think. So right here, everybody bought calls. Up here, after the big move, it's sold off. Everybody bought calls here, and you sell off. Okay, so I kind of look at that as a little bit of a, heads up, kind of a contrarian indicator. We'll look through the other indexes though too. I like to look at like the SPX and everything. Then here's a 195-minute chart. Why a 195-minute? Well, the cash session has 360 minutes. I'm a little anal when it comes to my charts. If you use an hourly chart, you're going to have 6 1-hour bars and then one half-hour bar. Okay, they're not equal. So 195-minute chart is simply a daily chart divided in half. Of course, we're talking about stocks that trade during the cash session. I don't count the after-hours stuff with stocks. I do with futures. And then a 78-minute chart, that is simply a 78 into 360. It goes into 365 times. If I did that right, is it 360 minutes or 390 minutes? It might be 390 minutes. Whatever 6.5 hours is in minutes. And then down here I have the ticks so I can know what the market conviction is at the moment. So just out of curiosity, let's look at the SPX here. So we can see here that the SPX, in terms of the put-call ratio, also taking a nosedive. Okay, that's interesting. So one thing I want to look at here is also the skew. So one thing I do with the skew here is anytime the skew gets up above about $135, I typically have seen the markets decline. And it's not a perfect kind of a thing, but I look at this is that if the skew gets over 135, there's a reason. The professionals are nervous and they're hedging, and this is what drives the price of the put options up on the SPX. Okay, so here you can see over 135, market sold off. When we get down here to 120, essentially there's no concern about the professionals, and boom. And this has to do with is there the odds of a 2 standard deviation correction or not? So recently here we got down below 120, no more concern, we rally, and now it's kind of coming back up. Right now that's dead neutral, so nothing really too concerning there. It is kind of dead neutral. Let me see what's going on here on some key stocks like Apple. Apple right now, put call ratio now is, by the way, these values are going to be different. For the S&Ps, guess what? They're going to typically be higher because people are using those for hedging. For Apple, it's going to be, each stock has its own kind of unique stamp, and that's why I like to look at it like that. So Apple, if Apple can push through this voodoo line, okay, this voodoo line, huge level here, these levels just can become very, very powerful. And right now, these fire lines are the most powerful, and you can see right now it's just smack up against that. So I want to see what the S&Ps are doing here. And for me, the S&Ps here are at a fairly strong buy point. Okay, if we look at the 78-minute chart, that's hard to say as a closet bear, but we had this explosion yesterday. We came up through the snow line, which is very powerful. And what have we done today? We've just been drifting down to this level. Right now, this is a picture-perfect setup for a rally into the close off of this level. And the nice thing about this is you can do this with pretty little risk. I mean, essentially a stop at the lows, that's about what, 5-6 odd points. So if you trade futures here, you could buy some S&Ps, you could, or obviously what we'll be looking at is some long stock trades. We're not seeing any buy programs yet, but we're certainly not seeing any sell programs. Okay, so that's kind of the things that we're looking at as we get into the close here. So let's take a look at current positions as well. So I haven't made any changes today since we did this yesterday. And I mean, if my main regret, and by the way, you can make a lot of money trading by not being perfect. Okay, so my main regret from yesterday is Priceline. I dumped Priceline. I was kind of watching that stock going like, man, that thing is an animal and it's on fire. And then I saw today at one point it was down like $16, but now it's actually back. I guess I don't actually need to see the skew or see the S&Ps on all of this. So let's come in here and get rid of the comparison candle. And interesting. So actually, I'm glad I'm out of Priceline. That's fine. I can live with that. And what was the other one I got out of? Oh, Alta. I'm going to bring up a different set of charts here for that one. Alta was another one I dumped. You know what? And Alta acts perfect today. This is exactly what I was looking for it to do, and of course it's doing it today. Now I got rid of Alta because the life in the options was expired this week, and at that point it was the juice wasn't worth the squeeze. But this may be worth another visit. On this pattern, I mean, most of the time it's not only going to come up and challenge this high, but most likely move up to that 159 level. Okay, so I like that. So let's just kind of see where we are with this current portfolio then. So so for right now, so for the trading room trades, yesterday we added AMBA. We bought the $65 call that expires in 29 days and then sold the $72 call that expires next week. Okay, that's a diagonal. In a perfect world, by doing a diagonal or doing any kind of vertical, you are spreading, you're hedging your risk, and essentially you are splitting the reward and the risk. Okay, if your main goal in trading is consistency, these are the kind of setups that you'll look at more often. Now, yes, so that one's fine. In a perfect world, we rally up to $71.80 next week. Our $72 call expires worthless, and then we roll it again. But you know what? If it keeps going, it's okay because we make the spread. Obviously, the downside is if it goes against us. For AutoZone, now this one's kind of interesting. Let's look at the charts on AutoZone here really quickly. Now, AutoZone, it's a very difficult stock to trade because it's thin, but you're giving yourself an edge if you do it as a spread. Okay, you'll actually get filled more frequently because the market makers and the people on the other side of the trade are like, I'm not willing to take this risk, but I will for a $2 spread, but they'll give you a better price if you do it like that. So with this one we may have to give up. So if we look at how I structured this, it's been a solid trade. I was hoping that I'd be able to hold on to this the 640 call. We bought them at $19.55. Right now they're $30. So a nice $3,000 profit there. But the 660 call, which I sold for $275, is at $675. So at this point, AutoZone is going to have to fall to $660 for me to, keep that. Well, 6 of one, half a dozen the other. We can take the profit and we can move on. So let's take a look and see how much more potential profit we have versus risk on this trade. So if we look at AutoZone, let's hide any simulations we have. We're not too interested in that. And at this point, we can see that our max profit on the trade would be a pin at 660. If for some reason it's downgraded tomorrow, that's going to hurt, right? And at this point, we're right here. So there's really, at this point, there's really no reason to hold it into tomorrow is what I'm seeing here. Like, we're not going to be leaving any money on the table. So let's close it. I mean, that's pretty simple at this point. Now, one thing that'll come up is, well, why not just buy the 660 call and, keep the 640 call? And I call that kind of getting cute. You don't want to get too cute with these things. And hey, you know what? We made $2,000 on this. Remember, it made a nice contribution to our weekly goal, and we close the trade and we move on. Okay, so I'm going to close this trade. I'm not opening a trade. I am closing it. And right now, the market makers would gladly let us out of this trade at $20.40, and that's called a screwing. Let's try, let's see, 1955. Let's try 2360. Well, no, we couldn't get 2360, right? 640, 660. Okay, never mind. So max profit on this is going to be $20. So that's an interesting spread right there. I mean, if we could get out at 23.60, that would be awesome. But you know, that's not going to work either. So, well, let me just, out of curiosity. Oh, good. I got my business card there for China. That's good. Hopefully, nothing too interesting pops up there. This is always a tough thing with AutoZone. So, so we're not going to get filled there. I mean, that's just how that's going to work. We'll have to drop it down. But I'm just curious. I'm just going to leave that working here for a few minutes, and then we may see where we are tomorrow on it too. Obviously, you know, the goal is to get out. So that's AutoZone. Okay, so let's go look at AMBA here on a chart. In terms of a chart on AMBA, I love how the stock acts. Okay, we're consolidating here at the tree line. That's super powerful. We are extended on a weekly chart, but this is consolidation on a daily chart. Okay, put call a little low, you know, but at this point I'm looking for a move up to $70.44. So there's nothing else to do on that one. Now, one that we added yesterday was GoPro, and GoPro today we could call it Go Low. And you can see now it's established. Here's its trend line that it's established. I was looking to see if it could break through this trend line, and it has not been able to. Now look at this. The put-call ratio is going higher, saying, hey, people are loading up on puts on this, so that may be helpful. But at this point, it's one of those things on a trade like this. I have this really weird rule that I like to be right away, and I don't give these things much room at all. Okay, and if you look at this, we're on the verge of breaking down from this, and if it breaks down, it could fall apart very quickly. So at the very least, what I want to do is I want to come over here and look at this GoPro and just kind of see how it looks. So I've lost $890 on it. You know, not bad. My max risk per position on this account is 2%, so that would be about $4,600. Doesn't mean that I'm going to let a position do that. These $44 calls that I sold yesterday for 49 cents are right now 22 cents. Okay, so I can buy those back at the very least. And let's do that. And 25 cents. That is jumping up just a little bit there. But let's buy those back 20 cents. See if we can get 20 cents. Okay, so I got out at 20 cents. And now we've got 14 days to figure out what to do with this. What I'm going to be doing on this is watching this level here. If it breaks through it, I'm going to have to dump it. Okay. If it can start to rally again, then I can sell options against it. With 14 days out, we have what's called the gift of time. Okay, so we can give it a little bit of time on that. All right, so that's GoPro. Let's see where we are. So, oh, Jazz. So Jazz has been pretty sweet. Let's so for Jazz, we've got the 170 calls at $13.75. They've jumped up to $18.30, and we're at a point now where we kind of want to start protecting what we have, meaning that we either need to trim and trail, which means take some profits. And I don't really like that candle so much, but what I like here is this weekly squeeze has not even fired off yet, okay, which is pretty powerful. And what I'm looking at here ultimately for a target is the 1272 and the 1618 extension from this high to this low, okay? And if you look at this, you can see we're creeping into that 1272 extension, which is around $191, $192. The real money, though, is if the squeeze triggers and pushes us through that, then we're talking a potential move of an additional $20 higher to 212 bucks. Okay, a squeeze has the potential to do that. So what I want to do with this trade is try to hold on for that potential. So I look at this as we can either sell some $195 calls, okay, to kind of protect our 1272 extension, but we could also look all the way up to 212. It's had a good run over the last several days, And when that happens, these out of the money calls start getting kind of what I call jacked up, meaning people really start buying them a lot and like, oh, wow, they're going to pay anything for these options. So let's just kind of see what we have here. I mean, what kind of price could we get, say, for next week if we wanted to sell these? So the expected move is $7. So let's do, 186. Let's round it up to 187. Let's round that up to 8. Okay, so 187 plus 8 is about 195 bucks. And we go here and say, wow, 15 cents by $1.60. That is not exciting in any way, shape, or form. What about the 192 halves? That lines up with the 1272 extension. That's a little bit more meat on the bone. Okay, so let's do this, because the biggest problem I have right now with Jazz is that I have $18,000 at risk. Okay, and this is how you need to manage these positions. I don't have $13,000 at risk, meaning, so I bought 10 options, right, for $1,375 a piece. You've got to manage these positions from where they're valued right now. If tomorrow somebody comes out and downgrades Jazz and it drops $50 a share, okay, you're not going to be down $13,000. You're going to be down $18,000, okay? That to me is not cool. And if I go and look at this and say, okay, here's an account. I've been trying to grind out about 2% a week. I can come down here and say, all right, I've got overall profit year to date is $65,000. If Jazz gets hammered and goes to zero, that's going to drop from $65,000 to like $45,000. Okay, that's unacceptable. So a large part of this is managing your risk. You want to find good setups and you want to manage your risk. So if we look at Jazz here and say, okay, what happens if this thing gets downgraded? Oh, wow, I could lose easily. Like, I could go from having a pretty decent sized profit to a pretty decent sized loss. Okay, so I call this a good problem, but it is still in every way, shape, or form a problem. Okay, so the first thing we're going to do is we are going to feed the ducks. Now, doing that this morning would have been even better. I certainly don't want to sell everything, but I certainly could sell about a third. In fact, a little more than a third of my position here. So 4 contracts. Let's see if we can get the midpoint. Bada boom, bada bing, bam. Okay, now here's one thing that's jacked up is when you look at this and say, oh my God, you just lost $5,000 today. When you're legging in and out of positions, it's always weird the day you're doing it, but you got to remember, the profits that you had and all that fun stuff. So now what we've got is we've reduced our risk, we've fed the ducks, we've reduced our risk, okay? And now what I want to do is we're going to sell some options against it. And I'm going to sell 3 that expire next week at the 192 half. So 3 singles, dink, dink. And let's see if we can get $1.15. And got it. Okay. So for next week, now I lined those up with that 1272 extension. Okay. And I also line that up with the expected move of next week. Now remember that ultimate move up to $212 is how far away from where we are right now. So 186, 196, 206. So that's about $25 away. Now what I want to do is I want to find where is the $25 expected move, if there is one. Well, that's not until all the way out to June. So I'm not going to sell options that have a longer value than these, right? Now remember, this is a 1 standard trade, 1 standard deviation. But I can go to April, where there's a the expected move is $12, and say, all right, what we're looking for, wow, 210. I wonder, we could sell the, I'm curious if there's a market here for those 210s. It's got a 0 bid, which is always awesome. 0 bid. 2, 3. Single. That's nice. Let's try to sell it at 0 and see how that works. What was the bid ask on that? It was 0 by 210. So anytime you see something like that, you can come over here and say, okay, let's look at the theoretical price on that. And if we look at the 210s, the theoretical price is 98 cents. So let's see if we can get $1. And we'll just see if the market makers are willing to deal. And if they're not, that's fine. Okay, so that order is working. And we may not get filled on it, but you know what? We can sit on it too. What's going to happen is that Jazz is going to have a little bit of a pop. Okay. All right. So that order is working. Jazz has been very kind to us. And now let's come back again and just kind of look. And then I want to start looking at some new positions. Okay. So Jazz is good. GoPro we're good with. SBNY, I really like this as a longer term trade. I think this is the longest term options I've purchased this year is on this stock. And if we look at this, there's the reasons of this is very simple. There's a weekly squeeze, okay, and with a weekly squeeze, you have and a longer, let's see, pattern like this. You have a nice consolidation and a very, very realistic target of $144. Okay. And if this thing goes crazy, you have the possibility of a target of $156. Okay. Now, I bought the options 93 days out at the 145 price point because if it can go up there very quickly, guess what? Those options will increase a lot in value. And if for some reason it can break out to the 1618, then we have the potential for a 5 or a 10 bagger for very little risk. Okay. We're not risking a lot. Unlike Jazz, with 10 contracts that now worth $18 a piece with 18,000 total dollars at risk, with SBNY, we only have a couple $1,000 at risk. Okay, so that's a good part of it as well. So that's SBNY. I like that one for a longer term play. Okay, so now let's take a look back over here. We got that one covered. Twitter, Twitter, gosh, I wonder if Twitter is going to pin. That could be pretty fascinating. So Twitter's been a nice winner. This is one that we talked about yesterday, potentially getting out of it. Not only did it hold up well yesterday when the market rallied, Twitter rallied, but today with the market acting kind of sloppy, it's actually doing really good. Now, I've got a theory on Twitter here. This is something that works some of the time, but Twitter's a little outside of the range here, is that I actually, and this is something that used to be more popular, but it's still something I've seen work enough that I continue to follow it, and that is open interest. So if you look at the $50 strike, there's an open interest of 38,000 contracts. How I look at this is very simple. You've got a bunch of funds, and now this may not be the situation, but I just want to let you know kind of what I'm thinking here. A bunch of funds that sold the $50 calls, and now they're sitting pretty. There can be a short squeeze on those options. If prices start pushing through $50, then that can force a short squeeze on those options. And sometimes you will see implied volatility on one option series jump because suddenly there's a ton of volume coming in from people who are forced to cover. Okay, so that to me is fairly fascinating. Now the expected move into tomorrow is only $1, and today we're at $48. So it'd have to have essentially a 1-day 2 standard deviation move to make it happen. But I love the idea, and that's why I set up this trade like this. So I bought the $44 call that's a month out, sold the $50 call against it. Now, technically, I could buy this back or just buy it back for a nickel. It's a free trade. At this point, I'll try to let it expire worthless. If it does rally through it, guess what? I still make the money on the trade. We've got a butterfly here. This only cost us 9 cents, $9. So if this doesn't work out, we lose $9, and if it works out, we make like 100. So we're risking 1 to make 10. And then so anytime I come down to Cayman, I spend about 30 minutes a day on a paddleboard, okay? And on that paddleboard, while I'm thinking about the meaning of life, I also think about trading strategies. And one of the things I've been thinking about here, while I've been out here, is the idea that if you've got a squeeze and you've got a target, and you've got a 80%, 75 to 80% probability of hitting that target, you can buy a call, okay? You can sell a put credit spread, you can buy a call debit spread, but in actuality, selling a straddle at your target could be the most profitable and highest probability trade out of them all. So anyway, I'm going to play around with that one a little bit. And I got a couple of other ones like that too. But so that was kind of interesting. So for Twitter right now, there's nothing to do except possibly, do more of a position here. What I want to do though is I want to find a potential trade. Well, we're going to find a pinning trade here for tomorrow. But first, let's go through the rest of our portfolio. Okay, so that's Twitter. Twitter's fine. Alta, I'm a little disappointed that it's doing exactly what I wanted it to do today, and now I don't have a position. That's a throwaway position there. But that's okay. I focus on risk, focus on risk, focus on risk. So VIPs, we got VIPs, and then we got Facebook, and then we got USO. So for VIPs, this stock is a beast. Okay, this stock is a data request. So I love this, and look at this weekly squeeze. Now, one of the things here you got to be careful of is that when these things get to the top of their upward channel, they can also top out. They can and often do top out. So I would say that, well, no, we got some room here, but let's call it $29. We're at $27.40, so there's a little bit more room here. Now, if you look at the average true range levels, guess what? Last time we went up to 3 ATRs, we came back to the mean. Then we went to 2 ATRs, came back to the mean. We're probably not going to get too far past 28, 24-ish on this run. So how do we manage it? Well, we got to come back here and we got to take a look at this sucker and say, all right, how have we constructed this so far? Now, I call this trade kind of a being cute trade. What I mean is that by being cute is that we buy the calls first and then look at legging into some short options. Okay. And the reason it's being cute is because you're betting that you're going to be right, which is always, that's. So I only do this with what I call turbo setups, turbo Porsche setups, where you've got, squeezes, waves, everybody's in alignment, all the charts are singing Kumbaya and they're ready to go. And then from there, look at as it starts reaching the upper edges of a potential target, and notice that given this plenty of time to work here, then start looking at selling options against it. Okay, so if we went out next week here and said, okay, well, we saw that upper channel was, I think, was it $29? And if we look at next week, expected moves $1.30. So, $29.30 plus $1.30 takes us to $28.60. So we could sell the $29 calls, and that's outside the expected move. So we get to the $29 calls, and it's like, there's nothing worth selling there. Okay, so that's, it's not really worth selling there. The one thing I'm a big believer in is trying to stay away from negative theta. So if we could maybe even just get a little positive theta here, that would actually help things out too. And all I mean by that is even just selling a little bit of premium, and that could also, that could also be done as a spread. So let's look at the 27.25 put credit spread for next week, and just see if we can get a little bit of positive theta here. And if you're not sure what that means, I can show you real quick. So 27.25. And all that means, so right now on this trade, no matter what happens, we're losing $10 a day on this trade in premium decay. Okay, that's not huge, not a big deal. But wouldn't it be nice if no matter what happened, you were making a little bit of money instead of losing a little bit of money? Because over time, that can add up. Okay, so now, by selling some puts that expire next week, and it's a spread, so there's not much risk, now, instead of losing $9 a day on this trade, I'm making $6 a day in premium decay. So what I love about this is that the premium erosion that you're getting in your long option is being offset by the options that you sold. And this is a way to construct a trade to continually put the odds in your favor, okay, over the long haul in terms of getting consistency. Okay, so we got that one. Vips. Oh, Facebook. Facebook has just been on fire today. So we've got the $85 call on that we sold. That, in theory, should expire worthless. And let's look at Facebook here. Look at this squeeze, guys. Oh my gosh. I forgot that this had such a beautiful chart on it. Okay, so we got to do something more on this one. Now, I personally do not like Facebook. So personally, my wife and I have logged out of it. We've changed our passwords, and we've dared each other to see who could stay off of it the longest. So, I think it can kind of suck you into a parallel universe if you're not careful. That does not mean that I'm not willing to buy it, though. So if you look at this just from a channeling perspective, this weekly squeeze could drive it up really high. So I need to own some more Facebook. So let's come over here. We can look at Facebook. And now the implied volatility on the stock is low. So if it's low, I tend to go further out. Let's give ourselves the gift of time, and we're going to look at a potential pin on this thing. So when in doubt, go further out and go delta 70. Okay, it's it just makes your life so much easier. Anytime you're buying an option, just go out at least 2 expiration periods and 2 strikes in. On something like this, because the implied volatility is lower, I'm willing to go delta 70. So that's the $80 call out here. Now, the premium portion of this option, if you're wondering how much premium you are paying for, then if we look at that $80 option, it's $2.78 of real value and $1.12 of premium. Okay, so what I'd like to do on something like that is potentially try to offset that with some puts. So first, now the next question is could we, so the expected move is only $5. So we actually can sell at least the 90s and potentially even the 87 halves against it. Okay, so that makes a lot of sense. So let's sell the 90s against it, give it a little bit of extra room there. So we're going to buy a vertical here, and we'll buy the 80s. We'll sell the 90s. That reduces our cost a little bit because the chances of it going to 90 are pretty low. So that's, I call that potentially free money. And there we go. Ba-ba boom. Let's see if we can get that sucker. And that order is working. And now sometimes if I can be patient and just wait for it to fill. But for times like this, when we're trying to construct a trade, I don't want to be a dick for a tick. I just want to get it. So I'm trying to get 363. We're at 365 here. You know, not like a huge deal, but you know, if you like what you see, do not be dick for tick. Do not be dick. That's some trading wisdom there. So let's try 365. Oh, come on. Come on now. Now I should, mother of God. Okay, let's see. Do not be dick for 2 ticks. Now, right now what's happening is the algorithms over at TD Ameritrade are seeing all the volume that's going in. They're like, you know what? Let's make sure John gets filled last on that. Just kidding. That's a joke. Okay, so I'm filled on that. Now, what do we have? We've got negative theta, right? So I want to come in a little bit closer. And let's sell the 80. The 8077s, 35-cent credit. And let's see if we can get filled on that. And the idea with this is that by getting filled on this, let's see, there we go. Now, I've still got theta, there we go, bam. Boom, positive theta. Now, what we've done with this is that with the 80-90 call, we got a little bit of premium coming in on that one, of course, but not a lot because we sold that one so far out. But now, by selling that 80-77 put spread 14 days out, we're going to benefit from that rapid theta decay, all right? We've got a very, very bullish stock. And we sold something not quite 1 standard deviation out, but close, meaning that we could be wrong and still make all profit on that trade, on that put spread. Okay, I love the setup. Okay, so let me post these in the room, and then let's keep looking here. I actually do want to look at some pinning plays for tomorrow. Okay, so we got that one. All right, sold 20 verticals. And then what was the other one? Bam. There we go. and bam. Okay. All right, so we're good to go there. And now let's come back. So that looks good. Oh, so I want to look at for some potential pinning action on Facebook as well. So now what I want to do is I want to look at volume and open interest. And I have a very simple rule of thumb here. All I'm looking for is extraordinarily high open interest within the expected move. Okay, so expected move tomorrow is $1. So 82.5, 24,000 contracts. Okay, there. Now, if you go down to 80, there's 69,000 contracts, but that's outside of the expected move. Okay, so and it's against the trend. So you're looking for stuff that's within the trend and within the expected move. So the question here is, does 82, is there something higher than this? Now the 85s have 18,000 contracts, but the 82 have more. So the idea with this is it can act as a little bit of a magnet, okay, and kind of pull it here. This one's a little unique. I think the safest trade that I see on here is selling the 82F puts. That way, if it continues to rally, great, you get that. And if it pins at 82.5, guess what? You still get it. Okay, so I'm going to look at the 82.5 80 put credit spread as a simple pinning play. We're not talking about we're not talking about a lot of meat on the bone here, but a very high probability trade. And the idea with this is that either it's going to go onward and upward to 85, or it could fall and pin at 82.5. Either way, that's a trade that would work out there. Okay. All right. So getting into the home stretch, let's look at a couple of other stocks that like to pin. Let's look at Apple. And expect to move to $1.30. Boy, so I'm looking for something that's extraordinarily large for this stock. Okay, the largest open interest I see is at the 130 strike, 73,000 contracts. Now, is that within the expected move? No, it's not. We're at $1.30 there, so it's not within the expected move. So that's not that interesting. To the downside, if we go, the only other one would be 125, and that's also really not that close either. Okay, so that one, that's kind of a blah. Apple used to be a great one, but hasn't been quite the same since it's split. Let's take a look at Google, and if you guys, let's look at JP Morgan actually. JP Morgan is like my favorite one. It's like, it's worked, I say this now, it's worked like 11 out of the last 12 months. And of course, I say that now, so which means it won't work tomorrow. But if we look at this, you're going to typically see one strike that's got an insane amount of open interest. And let's see here. And the $60 strike has 36,000 on the call side and 28,000 on the put side, with an expected move of 57 cents. Interesting. I've seen this stock make the expected move so many times that I wouldn't put it past it to make this run. So let's look here and to see, is it, could it be on a path to $60? And, $60 would take it back to about the 21 period moving average. That's kind of a stretch. I really like to see it within that expected move. That's just, it's such a small thing, but it just really gives you odds in your favor. If you guys see any other ones, let me see. Starbucks is one we've also done as well. Gosh, Starbucks, man. People are buying some coffee. Tesla, CELG, Nike. Okay, let me write these down. Nike, Starbucks. When is it splitting? Tesla, CELG. Nice, okay. Look at CMG. In fact, let's look at Starbucks. Starbucks is just a beautiful stock. It's gorgeous, as they say. Wow. Kind of missed that one, but And you can see everybody and their mother-in-law has got calls. So kind of missed the boat on that one. But if we're looking at open interest, no, not a lot. So it's moving, but for CELG, as I recall, the stock doesn't have a ton of open interest. But it's got volume today of 4.9 million shares. That's not bad. 125, not bad. 125 strike. Wow, the 125 strike actually has some pretty decent open interest. This actually would be worth selling a straddle on. Let me take a look at the chart real quick. CELG. Boy, that looks pretty darn bullish. Gosh, I really just love that chart. There's no squeeze on it, but I love the chart. So let's come back and look at this. Now, biotech stocks can get a little hairy. So on something like this, if you're selling a straddle, I always like to kind of buy protection as well. The nice thing is when you're doing it like this, you can get protection on either side for about 10 cents, which is what we can do here. So what this is called is an iron butterfly. And believe it or not, although it seems scary, so you just go sell iron condor. All right, so we're going to sell the 125 call, and we're going to sell the 125 put. And if we bought the 127 call as protection, let's actually buy the 128. Well, no, let's do the 125. And then the 123 put. So we've constructed something where we could get a $1.22 credit, and we're essentially risking $78 to make $122. So it's actually not a ton of risk, and it just takes advantage of premium decay. And so if I did this with 10 contracts, then I'm risking $800 to make $1,200, okay? So let's get that one going here. And this is the fun thing about options, especially with monthly expiration, is you can now, you can set things up that might normally seem kind of scary, but you can actually set them up with a really decent risk to reward ratio. Okay, so while that one's working now, so our Nike earnings today after the close, I think that's the other thing that we wanted to look at here. Seems like a bullish stock. This stock has rarely had an earnings miss. So CELG is going along here. So the first thing I want to look at here is the implied vol, and we got 67% implied volatility. You can see that normally it's about 36%, so it's almost double. That's worth playing. And what's kind of nice is that it's tomorrow. Expected move is $3. So on something like Nike, I've found that it tends to rally after earnings, but the last thing that we want to do on something like that is buy calls. We just want to sell puts, okay? So I actually like the idea of selling at the money put spreads because you can get a good risk to reward ratio. So if we sold the 98 half to the 98 half 95, then what happens with this is you get a pretty decent premium. And you just got to know that this is a bullish bet. It's a bet that Nike will be flat to up is what it is. Now, what if I'm dead wrong and after it drops $10? Well, in this case, I would lose $213 while trying to make $137. Okay, so not horribly risky. And it doesn't mean, if I want to do, would I want to do this with 10 contracts? Would I want to risk 2% of my account on this? No. Max loss, and so I'll do this with like 5 contracts. So I'm just looking at this as a bullish bet, and if it's flat, I make money. If it goes up, I make money. And, obviously if it goes down the expected move or more, I know exactly what my max loss would be. Okay. All right. Let's see. And I've not been filled You know what? That's a good point too. Yeah, there could be. I didn't think about that. The currencies could be problematic too. So that's a good point. I know. What was the one that just came out and talked about some currency risk? But either way, so for that one, I'm fine with. But play it how you want. If you're more bearish on the earnings, okay, I just got filled on that. If you're more bearish on the earnings, you just do the opposite. Sell the 98.5 call spread and then buy like the 102s for protection. Okay. All right, so we got about 15 minutes left. Let's check in and just see how Mr. Market is doing. And we can look here, start off at the S&P futures. And the S&P futures are just kind of blah. Now, we are here at a buy point. Normally on Friday expiration, we rally, but there's no really setup here. Okay, so let me go through a couple symbols here and just see if there's anything setting up. On Tesla, been a little wacky here. I do not have a position in Tesla. Netflix has been. Are there any squeezes you guys have been looking at? Because I mean, I'm stuck with one laptop, so I can't really see much. CMG, GDX Daily, Google, Netflix, ILMN. No, not ILMN. CMG, FireEye, USO. Okay, let's look at those. I will look at ILMN. So for those of you that aren't familiar with ILMN, this stock, I mean, boy, that's actually a really good setup. I've traded this twice this year, and both times it didn't work. So I'm a little gun shy on it, but this actually is a really good setup. CMG. Oh, nice. Okay, so CMG, we've got a daily squeeze. Put call ratio is going higher. That's bullish. We're sitting right here at the mean. Plenty of upside potential here. I like it. So let's look here at CMG for a potential play. Now, obviously, I'm not interested in anything that expires tomorrow. We can see here that it's current implied volatility is pretty low. It's in its 8% 8th percentile, which is great. I like that there's more people buying puts here than calls. That's bullish. Most of the time, retail put and call buyers are wrong. And expected move is $20 over the course of the next 2 weeks. So this is actually a very simple trade. We're going to come here and say, all right, let's buy the Delta 70s and sell the Delta 20s. Or actually, we could do, let's buy the 65s and sell the 25s. All right, so we're going to do the 670, 695. So let's see what this looks like. So we're going to buy a vertical and 670, we'll sell the 695s. So that gives us an 1185 debit, which means that we're risking $1,180 to make $1,320 per contract. Okay. Now, on something like this, what I like to do is have my max risk on the trade equal the amount of risk I'm willing to take. So I don't want to lose more than about $3,600. So guess what? I'm not going to do more than 3 contracts. So let's try that one, 12 bucks. And that order is working. Now, that was filled. We've got a theta where we're losing $17 a day. So we could also stand to sell some puts on this. In this case, because it's pretty bullish, I don't feel a need to go down 2 standard deviations. Let's just look at the 670, 665 and see if we can get filled. 670, 665, $1.20. And I just want to see if I can get filled on this trade. And I was. Okay. So now we've got positive theta. Okay, so I bought the 670, 695 call debit spread 2 weeks out, and then sold the 670, 665 put credit spread, and we've got positive theta. So we can go over here and we can look at the Analyze tab and just get a better idea. And it's always good to get an idea. I mean, what's the freak out factor here? And if we look at this, it's going to have an interesting little skew here. Our max profit is going to be, at $695 or at above it. On this trade, we can make $5,180 if it gets to $695 or higher. On the downside, I could lose $7,300 if this thing really starts to tank. Okay. Now, so what I've got to be careful is around $668. So $668 represents, for me, about the most loss I would want to take on this trade. So I'm going to have to keep an eye on it. Okay. Does that make sense? Let me check the questions here on it. You could also, yeah, Trevor, you could absolutely do a diagonal on that as well. Okay. Okay, so that one was good. So let's look at FireEye. But I love the squeeze here. So the reason for this trade is the squeeze. So you can see the last squeeze here. Bam. Typically, a squeeze on CMG can be a pretty hefty move. So that looks pretty sweet. Let's take a look at FireEye. Nice daily squeeze. Ooh, boy, look at that. So daily squeeze setting up within a weekly squeeze. What I would like to see is that the momentum on the daily squeeze at least can shift to positive, meaning in this case it would be yellow. So if it's like that tomorrow, then I will look at putting a position on that one. PANW, that's a great looking weekly chart. The daily here just rotated. Let's see what we got here on daily chart. So we had a good move here off of this last squeeze. We went from about 127 up to 150. That's a pretty decent move. And now we've just been consolidating and we've got a fresh squeeze setting up. So let's see if this sucker has any options. And I haven't traded this one in a long time. Up $1 today. Implied volatility is not too bad at 32%. And if we did the same thing where we went about delta 60-ish, 65 to 70, so that would be the 142, and then sell. So buy the 142, sell the 150. Let's try that one. 142, 150. Well, actually on this one, because it's got a, did it have a weekly squeeze? No. Okay. I was going to say, so sometimes if it has a weekly squeeze as well, then I will buy an out of the money debit spread. If it doesn't, I'm going to I go typically in the money. So let's go 143, 152 half and see what that looks like. So 143 and 152 half, $4.20 debit, risking 420 to make 530. Decent risk reward. Bada boom, bada bing. And that order is working. So trying to buy the $143 call and sell the 152 half call. Okay, so let me post that one here. All right. And CLG is still working. Oh, ESPR, let's take a look at that. Oh, let's look at a high IV one. ESPR. All right, so this doesn't look like an earnings trade. This must be this is going to be some kind of a biotech thing. So if we look at April, so these can be fun. If you look at this, the $110 puts are $10.60. and there's an expected move of $24. So you can sell those. I mean, stuff like this is kind of, so this is kind of an all or nothing deal. If whatever is about to be approved gets approved, you make bank. If it isn't, you lose. So you just got to establish your risk to reward ratio on that. That's it's an interesting one though. All right. So let's kind of look at how the market's wrapping up here. And yeah, nice. Some of these biotech stocks are nice. Jazz, let's see, it's kind of settling into the day, up a little bit. I continue to love that stock. So this one, because it had a daily squeeze and a weekly squeeze, I was willing to do out of the money debit spreads. You know, buying, I think we bought the 185, 195, 30 days out for $2. That was pretty nice. And then let's just take a look here at the markets. And look at this. We're going to settle right here on that snow line, okay? 2008, essentially 2082. And that's kind of a line in the sand for tomorrow. I think tomorrow with options expiration will probably grind higher. That would not be surprising. That's typically what we do on monthly expiration. So it might be worth, you know, catching some S&Ps overnight. I'm going to wait. I'm obviously also on vacation, so I'm not too concerned with trying to catch a few points on that one. But typically during options expiration, you do see a monthly grind. Okay. All right. So let's see. The markets here are about to close. Here, let me put this up too. I'm gonna a few things to discuss. So for those of you that have been with us in the open house, I hope you liked it. I hope it was interesting. I'm gonna watch the ticks here. So this is the last day of our open house. If you have been with us the last 2 days and you want to continue, and you can be in our live room, ask questions, interact with everybody, get the text alerts, see our nightly videos, log into our forum. We've set up a page at simpleroptions.com. Wow, I did that again, didn't I? simpleroptions.com/gold. Okay. You can also email us support@simpleroptions.com, and you can call us at 512-266-8659. Okay. And that'll just take you to a page where you can just kind of see like, okay, so what's going on there. So you'll see two things there. There's a gold membership. Okay, that is the trading room, and there's a silver membership. The silver membership is really more for end of day traders. It's geared towards end of day traders, but we actually have a lot of end of day traders, meaning they work full time on the gold membership. The silver membership is only $79 a month. The gold membership is only $147 a month. You'll see the schedule each day in the trading room here. Essentially, the main difference is that with the gold membership, the silver membership and the gold membership have all the same things. There's a portfolio, there's a newsletter, there's nightly videos, there's tutorials. The main thing is with the gold membership, it also has the chat room, which we've been doing today, and also text message alerts. So you can actually choose either one. At this point, at some point we've been talking about, especially because we've just added 4 new moderators to the room, and we continue to add services, that it's getting close to time to raising the price for our room and for our services. However, once you're in, you're in. So if you sign up at $147 a month and we raise the price, guess what? You stay at the $147 price for the life of your subscription. All right, so that's what that is. And we've been having a lot of fun with it. I think that this year we're going to see a ton of volatility in the markets. We're going to see a lot of opportunities in some of the major asset classes, such as bonds and gold and oil. And the great thing is we can trade options on ETFs for all of those. And of course, there's a lot of great opportunities in various stocks, which have been great. And kind of the idea and the theme of this room is number one goal is consistency, okay? And while maintaining consistency, look for the occasional home run trade. To me, a home run trade is an option that can triple or quadruple in value, okay? So that's kind of the idea with that. If there's any questions, anything like that, I can certainly answer them. But you know, the idea with this is just very simple. And what's nice about the room too, and what I found is that as you're in the room, now the room is not a teaching room. In the room, we're not, you know, the idea in the room is just trading. So if you're newer to trading, it's great because you're going to see trades. There's a lot of other great traders that are actually in the room that are clients of ours, and they type in trades and different things like that too. And you'll kind of get to know, it's like, okay, my style is going to be a little different than, say, Henry's style, which is a little different than Don's style, than Bruce's style, and Neil's style, and Tony's style. But they're all complementary in the idea that, you know, trading isn't actually that hard. It's keeping money is hard. So the idea is not only looking for good setups and trading those setups, but using proven techniques that actually help you keep the money that you make too. Because it's the biggest cliche in the world are traders that make a lot of money then lose it all. Okay, the idea is to make a lot of money and keep it and continue adding to it. All right, so that's what we got there. Let me see if there's any other questions in the room here. And all right, so we got that. Excellent, excellent, excellent. Yeah, it's crazy, Lee, yeah. And then, yeah, and so this is, and I'll see if you guys have questions here too. Yeah, and so tomorrow, guys, for those of you that are in the trading room, tomorrow we go back to normal. You know, we're done with the open house. And, you know, as we have some new members that join, just be kind to them, you know, and the guys in, so the rules of the room is essentially, we are here to trade and help each other trade. So anybody that's going to come in and be a jerk, we'll just kick you out. We don't, you know, this is it's kind of like, it's a living room full of traders, and it's okay to have opinions, but the main goal of the room is to help each other make money. So just kind of, you know, that's the idea. And if that's not what your goal is, then, you know, you'll learn very quickly that won't work. But if your goal is to sincerely learn about trading and making money, that's essentially the end goal of the room. All right. Okay, cool, Dr. Jim, thanks. And Skydiver Jim. Have we ever had to boot anyone? Oh yeah, actually we have a couple times. We just mute them. We actually can mute people. They can still stay on. They just can't talk anymore. And the funny thing is like I can if people are critical and stuff like that, that's fine. I always like, you know, feedback, positive and negative. But there's that fine line of, you know, hey, are we really trying to help each other make money here, or, you know, are you just unloading all your frustrations on all your friends in the room and stuff like that too? And so it's just kind of, you know, it's one of those things. Yeah, you know, we don't need to talk politics in here. If you want politics, you can turn on CNN or whatever. So that's what we got. And again, tomorrow is monthly options expiration. You know, the last time there was a monthly options expiration, actually, I was in Orlando and had a lot of positions on, and that was the second best trading day of the year. For tomorrow, I don't have a ton of positions on, but we'll see what tomorrow is. Typically, again, during monthly options expiration, we're just kind of looking for that slight grind higher and just watching a lot of those out-of-the-money calls, kind of suck that money into those out-of-the-money calls, and then let them expire worthless, and then continue moving from there. All right. So that's what we got. So what I'm going to do now, again, so if you're interested in joining the room, simpleroptions.com/gold. If you have any questions, you can email us support@simpleroptions.com. You can call us 512-266-8659. If you're ever wondering what the schedule for the room is, you'll see it there. And by the way, guys, on Tuesday, we have an official plane trade. So Tuesday at 9:30 in the morning, I'm flying to DFW, and then at noon, I'm jumping on a 17-hour flight to Hong Kong. So we got some potential airplane trades. I will be setting those up because it's always fun. So for airplane trades, we typically have really big moves. What I like to do is I put on positions with stops and open targets. Because it seems like the markets, when they do move, I am on a plane. So we'll be doing that. Yeah, well, and I'll look at tonight. So in the videos, I'm going to do the videos here shortly after we get off the mic here, and I'm going to look at the currencies, especially the dollar and the euro, what's going on there, bonds, and some of the key stocks and things like that too. Yes, I will bring a book. I probably should. I haven't watched Breaking Bad yet. That might be a good opportunity to start that show. The last time I was on a 17-hour flight, I slept 8 hours, watched 2 movies, read half a book, and when I was done, it was like still 6 hours left to fly. Like it was still a flight from LA to New York to go. I've heard that. I've hesitated starting Breaking Bad because I know as soon as I start it, I will put everything else on my life on hold while I watch it. Yeah, I just started. Well, I watched the first 2 seasons of House of Cards. That was pretty fun. I haven't started the 3rd season yet. You will want your life back. Yeah, it's like 5 seasons, right? Oh, on Fringe? Okay, I'll check that out. Yeah, it seems like in the 3rd, I mean, it's the first 2 seasons of House of Cards were fun because of all the maneuvering, but like, you know, season 3 is already there. Oh, nice, nice. He was the dentist on Seinfeld? I did not know that. Yeah, so in China, they're officially launching options trading on the Shanghai Stock Index. So I'm going to go out and do a keynote speech. It'll be interesting. I guess the audience is about 1,000 people, and I'll have a translator. So I got to see if he's going to understand my jokes. I don't know if they're going to translate well into Mandarin. And we'll see. It'll be interesting. Oh, Robert, I totally watched that. That was awesome. Yeah, that new one. I've tried the idea, you know, there's a joke in trading, you can eat like a bird or defecate like an elephant. Or eat like a bird and defecate like an elephant, and you know, it doesn't work out so well. And that just does not work with translations. So I'm trying to find some things like that that would work better in translations. Shameless is awesome. I actually like that show a lot. Okay, so next week for the room. So here's what I'm trying to figure out. So I think I'm going to do, I've been talking with Henry about this. So I'll be in town Monday, so I can do something on Monday. Tuesday, I'll be flying. Wednesday, I want to try to do one session from my hotel room in Shenzhen. But I've got to get there, see what the internet connection is like. Usually the internet's should be pretty good. And just see what my schedule's like. So there's going to be a little bit of hurry up and wait for that. Also, there's a 12-hour difference. So if it's, you know, 4 in the morning, you know, 3 in the morning in Shenzhen is 3 in the afternoon, et cetera, et cetera. So we will see. I will know a lot more when I get there. Oh, is it Port Julia? I mean, I did one time. I think I was in Beijing, and that was like the worst internet ever. I've seen like the Hong Kong, Shenzhen area. Last time I thought it was pretty good, but thank you, Nick. Yeah, I don't think Dick for a Tick will translate into Mandarin. All right, guys. Yeah, I definitely am not booking Malaysia Airlines. Huh, interesting. Okay. Yeah, that is probably good. If I'm doing the Facebook challenge, it won't work there. Oh, GTFO for translator. I'll try that too. Wee for a point. Yeah, I was in Singapore one time, and I made a joke about, you know, I said something. I said, well, I hope that doesn't get me caned. And the audience was literally kind of horrified that I said that. So yeah, I'll make sure I don't say anything too stupid. I mean, there were like some people that laughed, but they laughed very quietly. Yeah, North Korea and Baghdad. All right, guys, I'm gonna get. I will get started on the videos. Obviously, want to recap some of the bigger moves, and then next week will be. I definitely want to be in the room on Monday, and then we'll just have to see at that point. I was gonna try Wednesday, and it'll just depend on schedules and stuff like that, and I'll connect with Henry on that. And you guys have a great trading day tomorrow. And after that, have a great weekend, and we'll see you at the next one.